Good morning, everyone. Welcome to day 2 of our September Metals Investor Forum. Thanks so much for getting up out of bed and joining us today, although perhaps you're on the other side of the world and it's afternoon and you're joining us with a Friday afternoon beverage in hand. Whatever the case, we're glad you're here. I'm going to start today with my presentation. And even though there are no companies in my group today that are focused on uranium, I'm going to spend a few minutes today talking about uranium because it is a pretty dynamic space right now. There's a lot going on. I think there's a fair bit of reason for excitement. So that's what I'm going to talk about today. And then we will move into learning about the latest and greatest from the 4 companies that are waiting in the wings. They're all great companies, so I'm excited to do that. So first, uranium. I don't know how many of you have been watching the uranium space, but it has been just a touch exciting in the last 3 weeks. To explain what's going on in the last 3 weeks, what I'm going to do is step back 5 years. And so back in 2016, the uranium market was an absolute mess. There was way too much supply. It was all sloshing around in the spot market. And not only was the spot market sort of just full, producers were producing too much. They were producing more than demand. So it was adding to the problem every single day. And what I think is pretty cool, the uranium producers of the world sort of got together and decided to collectively address the oversupply situation in their market. And so, and they needed to do that. The spot price was way below the cost of production. It was sort of working for producers because they had these long-term, long-dated contracts, these contracts that they'd signed back in the last bull market, actually, when prices were high. And so they were able to sell into contract price, so they were still just scraping by, but the actual spot price was way lower, and so that was a problem for anybody without contracts and just a systemic problem. And so what did they do? Well, they collectively closed mines, they reduced output, and they supported sequestering in various ways. So the chart below shows millions of pounds that were taken out of the market, and that black line relates to the axis on the right side, which shows the percent of the market that was sequestered relative to what had been taken out back, in 2016 when this effort began. And so you can see that they really cut into production. And what happened? Well, it worked. Over a 4-year period, a 5-year period, annual production from the global uranium space dropped to 129 million pounds per year from 190. So that's a very dramatic change, right? This collective effort really worked. And the price responded, but it didn't respond in a dramatic fashion. So this is a price chart from, from before that effort began. You can see the price just tanking as the market was flooded and the structure didn't work. And then in 2016, it did, after about halfway through the year, it sort of bottomed, production cuts and sequestering. By sequestering, what I mean is funds, basically, various vehicles got set up to buy physical uranium and just hold it. So they basically just took it out of the market and sat on it. And so that took it away from the overfilled spot market. So there was this slow improvement from, the middle of 2016 through 2018, through 2019 and into 2020. And then COVID hit, which had an interesting impact on the uranium sector. I mean, what really happened was that Cigar Lake, which is a dramatically important mine in the uranium space, it produces almost 20% of the world's uranium. It was suspended for quite a long period of time. And the Kazakhs also reduced their output just by not building new wells. Theirs is all ISR, so they leach the uranium in situ, and that's a well field situation. So they stopped pumping from some wells, they stopped developing new wells. That's a sort of a slow to recover production curtailment there. And the uranium price shot up, which was interesting. And then guess what? Cigar restarted because that was never going to be a long-term cut. And the utilities were still not contracting. So what do I mean by utilities contracting? Well, by utilities, I mean the operators of nuclear reactors. They're the ones who consume uranium. And historically, they have secured the majority of their uranium through long-term contracts. So they sign a deal with Cameco or with the Kazakhs, whoever it might be, to supply uranium, a certain number of million pounds of uranium annually at a set price. And those are the long-term contracts. And the utilities we're very uncovered with those long-term contracts, which means that for where we sit right now, when we look ahead, and I have a chart coming up of it, they have a lot of millions of pounds. That wasn't the most elegant way of saying that, but anyways, they have a lot of uranium requirement that is uncontracted. So they have been picking up uranium to fill the gap in the spot market, but that spot market is getting emptied out. So that sort of, in a very condensed manner, brings us up till what happened in the middle of August. And what happened in the middle of August is something that had been setting up over the previous 6 months, which is when SCOT, which is a group that has established quite a few physical commodity trusts. So they have a physical gold trust and a silver trust. So they like creating vehicles that give investors of all natures, from passive funds through to retail investors, the ability to invest directly in a commodity by holding that commodity and letting the investor buy. So what they did was they took over what's called uranium participation, which was a fund that was sort of that nature. It was a physical uranium vehicle, but it was very limited in what it could do. It was not particularly large. Its internal rules very much limited how much it could buy, sell. It was not a dynamic force. It was very passive, and it was quite small. So SCOT took it over and turned it into a giant, is sort of the easiest way of saying it. They took it over with, they wouldn't say this in their prospectus, but they took it over with an intent to turn it into a bull force in a market that they thought just was smoldering embers that needed a spark, right? It takes time for all of these things to happen. So they took it over in April. All kinds of deals had to close. Then they had to get the green light to start their at the market financing, right? Which is the kind of financing where you can just raise money up to the max that the ATM facility allows by letting investors buy shares on a daily basis, the amount that the customer wants to issue. So on August 17th, they got the green light and they launched their at the market financing, and that was for $300 million US. So, a reasonable size financing for sure, especially in the uranium space, which is not a very large space, let's remember. And they did it. In 3.5 weeks, they raised $245 million. And the structure of that SPUT, that's, the acronym there, the structure of SPUT is that they plow almost the vast majority of the money that they raise, they plow straight into buying physical uranium. And so that had some significant impact on the price. I'll show you some charts, I think, in the next slide that show what that did to the price. And then on September 10th, far sooner than I actually thought was going to be possible, I knew they would want to upsize their ATM. I didn't think that the regulators were going to move that quickly, but apparently they did. And on September 10th, they upsized their at-the-market financing to $1.3 billion. So not a small increase. They added $1 billion of capacity in their financing. And so since August 17th, as of yesterday, I think, they had purchased 8 million pounds of uranium and sequestered it. And that adds to the amount that uranium participation already had. So they now have a pretty significant stockpile, but they're going to keep buying. That's why they added $1 billion to their financing capacity. And I mentioned sequestering before. So SPUT is not the first, by any means, vehicle to stockpile uranium as a bet on, and to be blunt, as a way to help create higher uranium prices. But it is by far the largest. And it is large, and it is coming at a time when it appears that the market is really ready for it. So I have these two. The only chart I could find that showed SPUT's financing, like how much money they had taken in their ATM, only goes up till the beginning of September. So that's why the financing chart is much shorter than the uranium price chart. But you can see how they're moving so in tandem, right? As soon as SPUT started pushing money into the uranium market, guess what? The uranium price started moving. So when they started at the beginning of August, uranium was at just about $30 a pound. It's at just about $50 a pound now. So that's a very dramatic move and not very long. And they haven't even deployed half their money yet, right? They still have $750 million left to deploy. So the timing's good because of all of that work that uranium producers had already put into cleaning up the market. It's also good timing because there's a fundamental shortage. There is persistently a shortage. That shortage is usually made up by secondary supplies, which has largely been this spot market with all the excess that's floating around. And then these things called shadow inventories, which are, as the name implies, quite difficult to count, like whether Japanese utilities have a whole bunch on hand that they are slowly selling back into the market. It's sometimes hard to know what those numbers are. So that's the secondary supply that has been filling the gap here that you can see that's between production in yellow and demand in green. But because production has been pulled back so much, it's rising a little bit, but I mean, there's a 62 million pound gap in production this year alone. And if you add together the gaps for each year going forward, by 2025, we're short 200 million pounds. By 2028, we're short 334 million pounds. There's a lot of gap here. And remember, the uranium price was way too weak in recent years to incentivize much in the way of project development. Certainly, companies who were expecting the uranium market to turn around kept moving ahead, just as proactive management teams do in any commodity, right? During the bear market is the time to position yourself for the bull market. If you wait until the bull market, you're probably going to be too late to actually have a product to feed into the demand. So absolutely, there are companies out there, especially US in situ leach operators who are ready to feed into the market. But the amounts that they're each feeding are not 205 million pounds in the next few years. So there's definitely a gap. And here's one way of representing. I mean, uranium is a reasonably opaque market, so I always have to steal slides from the various the UXC, which is the one data provider for the market. They do a good job, and then different uranium issuers, graphically represent that information in different ways. So I will admit that I borrow all of these slides from them. And this is a representation of those utilities and how many contracts they need to sign, how many pounds they need to ink contracts for, so that they don't run out of uranium. And so the chart on the left shows total requirements, and you can see that requirement rising from right now. It's 160 maybe million pounds a year, and it rises to 220 million pounds a year by 2035. And that's because there are lots of reactors being built, and they're bigger than the old reactors, and so their needs are significant. The yellow bars show you how many of those pounds are uncommitted at this point, as in they are not being provided for through contracts. And so it would be a very, very strange market if all of a sudden utilities decided to buy all of those millions and millions of pounds in the market. And one of the reasons that would be very weird is because utilities don't have the option of running out of uranium, right? For one, they have to secure their supply several years in advance, because then they have to take the yellow cake and turn it into the very specific fuel that their reactors take. Not surprisingly, uranium reactors are quite particular. So whether it's pellets or rods and the exact engineering of those pellets and rods, they need to start that process well ahead of time. They need to turn the uranium into exactly the right quality, and then they need to turn it into exactly the right shape. So they need to get their uranium ahead of time, and they don't have the option to turn their reactors off. So they don't have a choice of running out of uranium. It's not like just turning off a natural gas power plant or a coal power plant. Those can just be turned off. You can't do that with uranium. So that's why we call uranium demand inelastic. If the demand is there, it has to be filled. And that's why, to be honest, uranium utilities have historically acted like lemmings. Once one starts contracting, they have generally piled into contracting because they don't want to be the one left without the contract for their hungry reactor. The chart on the right shows long-term contracting, and you can see that there was a whack of contracting right during the last uranium bull market. So in terms of how much utilities are paying for the uranium that they need for their reactors, not a smart move, but it is a very classic move in the uranium space, which is they go along, there's enough supply, we don't have to worry about it. Oh my gosh, okay, there's a bit of a gap looming. We'll deal with that when it happens. We'll deal with it. Hey, Joe's dealing with it. Hey, Susan's dealing with it. I better deal with it too. And then they all pile in and sign contracts. And that's why there were so many contracts at very high prices that persisted all the way through the bear market. And that's a very likely scenario right now. And the reason that those prices were so high when they all signed during the bear market, chicken, egg, I don't know exactly which way to describe it, but when uranium goes, it puts a gold bull market to shame. Like I said, utilities have to secure uranium, so they all pile in. Speculators have seen this playbook before, so they add to the pressure. And it's just a small market, so that means big price moves, right? There's hardly anywhere for all the pressure to go, so it goes up. And so this is, there was a uranium price spike in the 80s. There was this incredible uranium price spike in the 2000s. And we are just at the beginning, I think, of the next iteration of that. I do want to emphasize that the uranium price absolutely goes up. That previous chart showed, 14, 12-fold increases in the uranium price. Equities do that and then some. And the reason is primarily, it's not really about leverage. When we get a gold bull market, gold producers, or a copper bull market, the leverage that we talk about is because assuming producer prices, like the amount that it costs them to produce an ounce of gold or a pound of copper, assuming those costs stay reasonably stable, that every dollar that the price rises goes straight to profit, right? And that's what leverage is about. It's about increasing profit for producers in a bull market. That's not really what leverage is about in a uranium bull market. In the uranium bull market, what leverage is about is the fact that there's hardly any stocks. The uranium market is tiny, especially after there's been so many hard years in this space. There are literally only a few dozen uranium stocks out there. Like, they're very, very few. So every investor who decides he or she wants exposure to uranium has to go into those few stocks. And of course, they can also choose the spots, the exposure to physical, which are now available, which is great. But that limited option, the limited number of options in terms of stocks is why you can get some absolutely ridiculous returns. On this chart, I'll note that Cameco, during the bull market that's here, this was just the last one in the 2000s, Cameco was the world's largest uranium producer. It gained only 330%. But, it was put to shame by some of the other ones that happened to attract a little bit more of that investor excitement. And I will add that I think there's a factor that adds to the pressure that could add to the pressure this time around. In previous bull markets, passive funds didn't have any way really to play uranium. That uranium participation, the physical uranium trust vehicle thing that existed before, it was not a good proxy for the price. It lacked liquidity. It was not really an option for big money. And miners had a bunch of issues. They were political. They carried a lot of debt. But now this new Sprott physical uranium trust provides a platform for passive funds that it has all the liquidity that you can want. And as we all know, passive funds exceed the capital managed by active funds by a lot these days. That's also changed since the last bull market. So I think we're looking at a situation where the algorithms and computers that manage passive money can now play the uranium bull market as well. So I have no idea what impact that's going to have. I don't know if we'll even be able to quantify it when it's all said and done, but I think it's an interesting factor to consider. To end, yes, uranium has moved a lot. It's gone from $30 to $50 in the last month. A bunch of stocks have already gained hundreds of percent, or maybe not hundreds, but yeah, they're up a lot. I added to my positions this week. I do believe that the gains are just getting started. Past performance is no guarantee of what's going to happen next, but I do think that there's a lot of room yet for uranium equities, for the uranium price to go, because remember, SPUT still has $750 million that it will put into buying physical uranium. And we know what less than half of that has done already to the price of uranium. So if you like this opportunity, how are you supposed to play? Well, buy any uranium stock that's still alive. I mean, I joke, but I also don't. I mean, if a uranium company actually survived this bear market and has a real business plan, right? Real people, a real business plan, whether that's exploration, development, production, as long as it sort of passes the the basic tests of having a real business plan, then the bear market kind of did your due diligence for you, and you just need to buy a uranium stock. For what it's worth, the ones that I own are listed here. I have Uranium Energy, Denison Mines, NextGen, Vision, ISO, and Valor. I'm happy to answer questions either here or by email later about the details of those stocks. I don't even plan on covering the details of those stocks in a lot of detail in my letter. I plan on covering the uranium market as a whole and assuming that all of them are along for the ride. So that's what I have to say about that. That was a lot of backdrop and current information in a short period of time. Hopefully, some of you at least were interested in uranium and found that helpful in understanding the craziness that is underway right now. But now let's do something completely different. So I apologize actually to the companies in the session today. I don't like to talk about uranium and then introduce a bunch of companies focused on gold, but that's what I'm going to do. It just seemed that I had to use the opportunity to talk through the uranium situation. But I do also like gold. I certainly talked about my outlook for gold in my presentation yesterday. And so let's move on to focus on that. And the first company up is a royalty company. And I would love to ask Alexandra Sharon to step up and run us through the latest. Empress Royalty has certainly been busy in the last little while, and I would love to hear Alex's take on everything that's going on.
Excellent. Thanks so much, Gwen, and thanks everyone for listening today. Empress Royalty, we apply a strategic approach to investing in gold and silver. Forward-looking statements also available on our website. Just take a look at them in more detail. So why Empress? We are a revenue-generating royalty and streaming creation company with a unique investment strategy. We create new royalties and streams to get projects into production or to help companies expand their production. We currently have a diversified portfolio of 17 investments exclusive to gold and silver. We're focused on quality over quantity. In that investment portfolio, we roughly have 13 exploration projects, 3 development projects, and we've just recently announced a producing project, and I'll talk more in detail in a few minutes about all those different investments. We're looking to build out a strong, diversified portfolio, currently evaluating over $75 million US of potential investments. We have a pretty strong, robust pipeline of investment opportunities. Management and board, we have over 250 years of experience, completed over $6 billion in mining transactions. So a very strong mining finance team behind Empress. We have unique relationships or strategic relationships with Endeavour Financial out of the UK, Ascendo Banco out of Mexico, and Terra Capital out of Australia. This really gives us access to unique investment opportunities. We're projecting significant revenue, which I'll touch base on in a few minutes. So what are royalties and streams? A royalty agreement is where a company like ourselves invests into a mining company and we receive a percentage of revenue from production. A stream is where we would invest in a company, but we would be able to buy either gold or silver at a discounted price. And we do a combination of both, and it's very much bespoke to each investment we do of what works for the company and what works for their growth, making sure we're getting the right returns for our shareholders. There's different types of royalty and streaming companies. Investors will have opportunity to figure out what kind of royalty and stream they want to invest in. There's the exploration generators, typically early stage and expensive to acquire, but there's the exploration risk, and there's if successful, there's a long lead time to revenue generation. There's also the royalty trading acquisition companies where they're buying third-party royalties. So it's pretty simple acquisition. It's a crowded space, typically paying a premium and part of a competing bid process. And there's no direct relationship with the management company. We're in the creation side, so we work with mining companies, again, to create new royalties or streams. We're able to create flexible structures. We have a direct relationship with the company, very close with them and able to know what's happening with the project. And we're focused on bringing assets, producing assets, which brings revenue, again, into Empress and for our shareholders. Royalty company growth. Here we're looking at 2 different charts. The first is the royalty companies outperform gold, looking at the royalty index, gold, and the gold miners ETF. And then looking at the life cycle of a new royalty company. In stage 1, when you're establishing market, we just started trading on the TSX-V in December and the OTC in February. We believe we're going to be able to quickly accelerate to stage 2 rapid growth through our investment strategy and the partners and unique investment opportunities that we have. We're truly a global, Empress. I'm based in Vancouver. We've got a corporate governance team there. We've got Endeavour in London, Ascendo in Australia, and we've recently made some investments into Mexico, Peru, and Mozambique, combined with our early stage exploration portfolio in Canada. Moving into our portfolio, the Cerro Antipite stream is it's a producing mine in Peru. We just recently announced that we've executed on the $10 million gold stream, which is in total of 4.5% stream for 11,000 ounces and then drops down to 1% for life of mine. We have funded the first portion of this tranche, which is bringing immediate revenue into Empress now, and we'll be closing the second tranche of that shortly. This project was started by Buenaventura in 2002. It was purchased by the Serra Sun Group in 2016, over 1 million ounces to date. We're helping them with the $10 million get from 750 tons per day to 1,000 tons per day. Annual cash flow for us is $2.2 million US a year when they're fully ramped up, which should be the middle of next year, and then 17% IRR. We also have the Talahueto silver stream. This one is a great example of us working with our partners to provide a full financing solution. So for $5 million, we have 100% of the silver stream up to 1.25 million ounces. This project owned by Adelaide is in Durango, Mexico. The company ran into some challenges. We came alongside of our partners, who I'll discuss more in a minute. Ascendo Bank, who provided $12 million in debt. $12 million in debt. We provided the $5 million silver stream, and then Endeavour and Ascendo helped arrange $8 million equity. So with that $25 million, the company is now back, the project's back in construction. They're expecting to be in production Q4 this year, fully ramped up in Q1. This gives Empress $3 million US cash flow. That's based upon $21 silver, IRR 84%. We also completed the Manica Gold Royalty in Mozambique, owned by MMP. This one's under construction right now, and we'll be bringing revenue into Empress for about $1 million a year, starting in Q4 this year. We have a 2.25% royalty on the entire project. There's currently a 3-year mine life plan, but there's additional upside from the satellite deposits. The IRR on this one is 41%. This is a great example of some of the transactions that Endeavour is able to bring to us and be able to help us arrange and structure. We also have the Pinos royalty for $1.5 million investment, which we made in November last year. We have a 1% royalty across the entire project in Zacatecas, Mexico. This one has a 7-year mine life plan, but expect to get a lot more interesting as that's one vein on 7. So some nice revenue coming in for us in this, but we expect this one to get a lot more interesting as Candelaria develops and further expands this project. When we look at our projected revenue, our forecasted revenue, using $1,750 gold and $21 silver. These charts are based upon the Cerro Antipite project, the Talahueto project, Manica, and then Pinos. We're projecting $6.7 million US next year, $9.2 million the following year, going up to 2024, just over $12 million. That's if we did nothing else. And again, as I mentioned, we've got a pretty robust pipeline. We're in discussions right now with 12 different management groups, looking at over $75 million of potential investment. So hoping to add on to that in the upcoming period of time. We trade a significant discount on all key metrics when you look at the industry. Just taking, for example, our PNAV ratio, base case scenario, we're at 6.9 times. The average is 1.41 times. Our capital structure, our current shares outstanding right now, about 100 million. Market cap today is probably about 36 million Canadian. We've got some research coverage, which is great, $6 million in cash. Strategic management, our strategic partners, management and board. So again, Terra, Ascendo, and Endeavour own 38% of the company. Institutional investors about 32%, and then 30% in the public float. So to recap, we are newly listed. We've been trading for 8 months on the TSX-V, 6 months on the OTC. We are a precious metals royalty and streaming creation company with a current portfolio of 17 investments, and we're focused on creating solutions for mining company partners, making a win-win for both situations, and choosing high-quality projects over quantity to really build out a good diversified portfolio. And again, we're projecting some pretty strong revenue next year. I encourage everyone to go to our website to learn more information at empressroyalty.com. And thank you so much, Gwen, and everyone for listening.
Thank you, Alex. It's always a challenge with royalty companies and project generators to try and run through all the assets, because there's, the business model is to have lots of assets. So that was a very good quick look at those assets, and certainly that slide at the end that showed revenue stood out to me. I will have some questions about that in the Q&A.
Sure.
If anybody else in the audience has questions, please enter them, and so I can forward those questions along to the presenters in our Q&A once we've gone through these presentations. So let's move on to the next presentation, and for that, I would like to ask John Mirko to give us an update on what's going on with Rokmaster with their Revel Ridge project in the Southeast BC.
Yeah, thank you very much, Gwen. I'm glad to be here at the September 17th Metal Investors Forum. Let me just jump right in, and I'm going to make this an update. If you want to get a lot of detail on what we've done in the past, please visit our website, including reading the cautionary statement in detail. I'm John Mirko, the president and CEO, and we've got a great team. Mike Cowan, our chairman, Adam, director, Dennis, our CFO. We've got a geological team that's fantastic. Craig Perry, Mark Rebliati, Ted Marrero, and Jim Oliver. Harvey Trombley is an advisor and a friend of mine, and he's also the owner and operator of High Tech Diamond Drilling, which very many of you are going to be familiar with. Stacy takes care of managing some of the metallurgical work that we're doing for the property. Here we go. We've got 104 million shares out approximately with the option and warrant package. Share ownership is broken up into about 50% public and the rest with some nice groups, including Crescat and Delphi, and myself and family and close friends and associates taking about 30%. We do trade on TSX Venture and OTC QB. Anything you need to know about contact information or anything you want to do, just go to our website and all of that detail is available. So on this talk, I'm going to focus on bringing you up to date on a few things. So the current mineral resource estimate on the project. I'll summarize what we're doing for surface diamond drilling and our underground diamond drilling we did over the winter and the spring. Some developments include discovery of free gold down dip on the main zone on the property. Yellow Jacket, main zone and new zone surface diamond drilling, of course, is actually ongoing right now. We do have a rig on the property doing that from the surface, and it's a helicopter supported job. And I'll outline the objectives that we're trying to get to here for the rest of 2021. It is a large project claim-wise. We do have a land package that's sufficient for all of the work we want to do, including some properties that are off the map here to the north, which we've done some prospecting on this year, and we've made some discoveries on. Of course, we don't know what the exact assay values are at this point, but we're hoping to get that before the end of this quarter. Great project we got. It came with underground workings. It came with a resource. Came with a lot of equipment that's in place that we've utilized to access both the property on the surface and underground in order to facilitate our drilling and metallurgical work and permitting and all of that. So we do have a 2-year underground permit, good till 22. We have a 5-year surface diamond drilling permit. The underground permit is a full permit that includes diamond drilling and any rehabilitation work we need to do to keep that operational. We're in the middle of a metallurgical program, which we should have. We're finished the actual test work. We're actually waiting on assay results, which is a common theme this year. The property itself is a cash option from a private company, and we're able to earn 100% with no royalties or back-end clauses or any other work commitment type of features. Geology and mineralization of this project is fantastic. It's the main zone itself is a remarkably continuous tabular plate of sulfides. It's situated in an orogenic structure. Predominant mineralization that we're going after in the main zone is gold. There is silver, there is base metals, lead, zinc in that zone. The average grade over a 2.5 meter mining width would be approximately 8 grams of gold equivalent, with about 2/3 of that being gold. Adjacent to that and somewhat in the hanging wall is a very interesting yellow jacket zone. We call it a really interesting stacked carbonate hosted silver zinc zone that's got really high silver grades for your standard carbonate hosted Kootenai type lead zinc, Mississippian type carbonated hosted, or Irish type carbonate hosted deposit. Average of 60 grams silver and about 12% zinc lead, of which only probably 1 to 2% of that 12% is lead. The rest is zinc. Great metallurgy on that. Great mining thicknesses that are available if we want to focus on that going forward also. The current measured and indicated resource estimate is approximately 1.1 million ounces gold equivalent, with an inferred of 960,000. The separate yellow jacket zone shown here is about 760,000 of the 12% lead zinc with the 60 grams of silver. Those numbers are available in the current, the detail of that's available in the current NI 43-101 resource report that's available on our website. Recently, that was incorporated in a preliminary economic assessment report that came out in the spring of this year, and that's also available on our website. So what are we looking at doing with that resource estimate? We put it in the PEA, and here's what we came up with: a fairly high-grade underground mine with mill feed averaging $300 a ton. Now remember, this is only based on the drilling done in 2012, or up to 2012, sorry. A higher grade first 4 years could be $400 a ton. That's a net smelter return number only, and that's a diluted number. You can take a look at all the details of this and some of the operating projections that we anticipate we would have. We do have a lot of good information because there is underground work already done on the property. Many great metallurgical reports done, geological reports, and about 40,000 meters of diamond drilling went into that resource that we're using. So we've got a pretty good handle on operating a plant and a mine in that area of north of Revelstoke. This is a good shot looking at that planar tabular body I was talking about. You can see it's named the main zone. We call it the Revel Ridge main zone, RRMZ. Sitting in the hanging wall of that is the yellow jacket zone. The green is a hanging wall zone similar to the main zone, and underneath it, behind, down below, you'll see a little bit of blue creeping out there. That's a footwall zone that also parallels the main zone in the footwall. Those all add up to the resource numbers that you've been looking at. You'll see it covers approximately looks like 1.2 kilometers of the orogenic vein system that we have. So that's about a 1.2 kilometer by 1 kilometer block there that's being used as in the resource calculation. Historic. Looking at what we were doing in the last couple of years. So in summary, in 2020, we worked underground. We utilized that 830 meter level, which is a track level. That was our main workstation where we worked off of crosscuts to drill deeper down plunge on that main zone. In some cases, we penetrated the hanging wall and were able to tag the yellow jacket zone at the same time, or sorry, in the same hole. We reached out quite a ways down dip. We've got extended that measured and inferred tonnage there to over 500 meters below the previous known or previous calculated resource. All of the results from those holes will be included in the updated resource that's coming out this fall. So we tested 1,100 meters of the strike length of that zone and about 500 meters on the dip plane. So that was 16,400 meters of drilling that we completed underground. About 75 to 80% of all the drill holes made PEA cutoff. That's for a gold deposit or a gold system, that's a very high ratio. That's great. We're really happy about that. This is quite a predictable situation we have here, so we're happy on that. So here's a busy slide for you, busy figure. We stepped out onto the surface away from the blue area, and we've got a lot of targets to the southeast and to the northwest that we're going to focus, I have been focusing on this year on the surface. We started off drilling down in the valley bottom and worked our way up to the northwest. We now have holes that are as far as 1.8 kilometers to the northwest of the 830 portal, and we're still intersecting the main zone mineralization that far out. Approximately, just to give you a heads up, one of the more exciting holes is about halfway, about 900 meters to the northwest. We intersected multiple zones over quite a thickness of visible mineralization. We don't have the assay results yet, but we're quite hopeful. That's a really nice, big, thick intersection that we hit there. That's going to be something we can follow down dip. We're only drilling shallow as we prospect with the drill. The only holes we've drilled down dip on are ones we come back to recently while we await assay results. We did get some good assay results down in the valley bottom, and we're deepening some of those holes now while we await assay results from the rest of them. This hole that you see marked in red, RR20-11 underground, is just a feature of some newer zones that we got. And I think, yeah, so I've got that one here. So this shows multiple zones that we hit, which is the main zone. But there's a lot of lead zinc in these, and it's truly polymetallic and a lot broader intersections than we've seen in the past of high grade mineralization. We call this the 28 zone. That's something new, and we're gonna in the future we'll go down dip on that also with some deeper holes. So zonation. Interestingly enough, the original historic metallurgical samples are all came from the 830 meter level. They were all extracted from the underground workings, 10 to 50 ton bulk samples, and those were used for many metallurgical tests. Gold in those is quite fine. So we cored a 4 meter intercept while we were drilling 460 meters below that level, and came up with a high gold number and a low arsenic number over a 3 meter interval. And that was, we went back and took a look at that, and there's visible gold in that. So we've discovered a number of holes now with visible gold that we didn't know were there. And we've done a lot of tests, work on those holes to determine the true content of those assays of any coarse gold. And of course, we're excited about, so what's happening with this zonation at depth? Are we going to have something that we can turn into another Fosterville type of a situation? Can we go after zones that are predominantly free gold in this deposit? That's super exciting. So that's what you've got for, by deeper, we mean it's fairly deep. We're 500 meters down below that 800 foot level, 800 meter level. Very free gold grains. Quite good size too. We're talking up to 106 microns. So visible gold grains are in those holes there that we've seen now. We've tested more holes where we haven't seen free gold. We've come up with free gold, but not visible. So characterized by 50 to 250 micron grains in these quartz veinlets. Sheeted quartz veinlets, and quite often adjacent to the sulfide-rich main zone, so it's all by itself and can be extracted all by itself when we chose to do that. So this really got our guys excited, and also 2 of our geologists got a visible gold bonus check for that too. So we're all in a happy place there. So moving forward here, we've got the main zone drilling done underground. That's in white. And the blue drill holes, as you see, are that go down dip. Those are the ones we drilled in the winter of 2020-21. All the white holes are the old holes. So moving up to the northwest, the ones in green are the ones that we've completed to date, and that is 8,500 meters and 35 holes. So we've expanded both the Yellow Jacket zone to the northwest and the main zone. And as you know, we've on that complicated graphic you looked at there, we're modeling that so we can continue doing step-out drilling at depth. So our objectives here, we've completed our first pass underground program over 16,000 meters with a good portion of those hits able to go into PEA type of value. We've investigated the free gold distribution, and we're coming out with some plans on how to extend drill holes down dip on that this winter. Over 10,000 feet of, 10,000 meters of diamond drilling is what we're going to do on the surface, and we'll have that wrapped up in the next month or so. Stepping out 2,000 meters, as you know, this was our original plan to step out 2 kilometers along strike to the northwest, and we'll have that finished. We've done geochem and prospecting on large step outs over 4 kilometers to the northwest and southeast. We'll get those results back very soon, I hope. So we've started the revision of our resource calculations, and that's looking to be due. We'll have a resource report out updated in approximately 30 days. And that includes new assay results. So we finished all our objectives with about a $9 million budget calculated. Well, we've still got 3.2 million left in the bank in cash. So we're in good shape, and we are moving forward. Also, one thing, so we're moving forward on permitting for mining or commercial mining. We're also in the middle of POX tests on metallurgy, and as I mentioned earlier, we're just waiting for assay results on that. And, that's about it for the project. I'd like to wrap up here, Gwen, if I could, and just thank everybody for listening to the presentation. And that's it for Rokmaster's Rebel Ridge project.
Thank you so much, John. Yeah, great. I love the consistency of the mineralization at Rokmaster. Again, I wrote down some questions as John went that I will harass him with in the Q&A. But anybody in the audience, please do send through your questions if you have them, so I can add them to the list. Moving right along, let's shift focus and visit Northstar Gold. And Brian Fowler can give us the latest with what's going on with Northstar. Brian, please go ahead.
Thanks, Gwen. It's a pleasure once again to present Northstar to the Vancouver Metals Investor Forum. Before I get going, I'd like to the obligatory cautionary statement. I will be making some forward-looking statements. If you've been following Northstar for very early or late this spring, we announced some pretty stellar gold results associated with one hole out of 8 holes that we drilled just under 2,000 meters on our Miller Gold property situated 18 kilometers southeast of Kirkland Lake. Our second hole, MG 2156, was collared 40 meters to the northwest of a previous hole that returned 1.2 grams per ton over 107 meters on the west flank of the Allied Cyanite. And we encountered 3 very high-grade zones near surface. 175 grams per ton over 0.6 meters at 14 meters of depth, 24.9 gram per ton intercept over 1.5 meters at 43 meters, and a 1.17 kilograms per gold over per ton over 0.5 meters at 69.5 meters. Collectively, these results average 6.6 grams per ton over 117 meters. So it was a great start. Unfortunately, these are the only assays that we have so far received from this drill program. Our assay lab has experienced some incredible delays and complications, and actually, they've promised results on a number of occasions and failed to deliver. This had adverse effect on the share price, and I apologize to investors for that. But we've had subsequent conversations, and we've provided the assay lab a deadline now, so that we fully expect to be able to report all numbers by the end of the month. And if not, then we will be taking other measures to obtain them. So with that introduction, Northstar, prior to go public by way of IPO in early 2020, Northstar functioned on a private basis, exploring primarily for gold in northeastern Ontario, and more recently in the Kirkland Lake district. The flagship property is the Miller Gold property, situated 18 kilometers southeast of Kirkland Lake and Kirkland Lake Gold's Macassa SMC gold mine. Northstar has 3 other 100% owned properties in the region, which unfortunately I'm not really going to be able to have time to talk about, but I encourage investors to go to the website to learn more about them. Prior to, also in concert with going public, the company augmented its board management group and special and advisory group with a complement of highly skilled and experienced professionals with global experience on exploration, mining, development, financing, capital markets. So we've got a very well-rounded and highly skilled group. On the share structure side of things, subsequent to closing a $1.7 million financing that we announced earlier this week, Northstar's got 54.5 million shares outstanding, nearly 70 million shares issued on a fully diluted basis. 8% of our shares are held by management and directors. Last I looked, our market cap's around 12 million, and our current cash position is $2 million. So Northstar's primary projects are, as I mentioned, the Miller Gold property, situated 18 kilometers southeast of Kirkland Lake. It shares a number of very important geological similarities with other deposits in the district. 26 million ounces of gold have been produced from 7 mines over the past 100 years. These similarities include similar geology, similar rock types, same age of rock types, and age of gold mineralization, as well as similar and interconnected number one or first order structures that have channeled or had an effect in channeling gold forming gold fluids, magmatic fluids towards the surface. So we feel we're tapping the same gold source as Kirkland Lake. The Miller property is 1,100 hectares, and it was acquired by staking by the company in 2012. And the Rosegrove property is 1,400 hectares, and that was acquired more recently. So the property geologically is situated over a 3 kilometer by 2 kilometer area of intense alteration, deformation, and metasomatic alteration and mineralization associated with the emplacement of at least 3 syenite intrusive stocks: the Allied syenite, the Planet syenite, and the Mueller. Central to this is the first order Catherine fault structure, which is, you may remember, joins up with the Cadillac larder. Mineralization is Kirkland style in that it's gold telluride style mineralization. It occurs in quartz veins in pretty much all rock types, occurring as shallow dipping quartz veins, as well as in breccias and flatline vein structures and marginal stockworks. The property in 1987, there was a group that drilled a number of holes and calculated a historic estimate of 270,000 ounces of gold at 11.5 grams per ton gold. that straddled our main Miller property as well, and the Searles property, which we have since acquired. There's 11 shallow shafts on the property. There was about 1,000 meters of development on two levels on the D vein and the number 1 vein, and there's excellent exploration potential for much more. In 2020, Northstar completed 28 holes. We drilled just over 5,000 meters. We conducted a property-wide $350,000 3D IP gravity and magnetic survey, which provided the basis for targeting a lot of the holes, over half the holes that we're currently waiting for. This all led to discoveries of the number 2, number 3, number 4 vein structures, and which are components of the allied cyanide gold zone. As I mentioned earlier, we just completed earlier this spring, we completed a 1,990 meter 8-hole drill program on the property, and we're still waiting on results for that work. This map illustrates it's a minus 100 meter chargeability drape of a property-wide IP survey that we did over the property, and it very eloquently illustrates the size and the tenor, or the size and the magnitude of the mineralizing system, central or outboard of the central cyanites, the allied cyanide here, the planet cyanide a kilometer to the north, and the Mueller cyanide to the northeast, which doesn't share the same chargeability component, but that's probably because the host rocks are intermediate volcanics, whereas this is all mafic volcanics. This chargeability, subsequent trenching and drilling and everything indicates that it's related to hydrothermal alteration, disseminated sulfide mineralization related to these cyanide stocks. The holes that we drilled earlier this spring, the 8 holes are in black. A couple holes on the allied cyanide, a couple holes on the number 1 vein on our side of the line, and then there's 4 holes that stepped out testing Goldspot. Goldspot assisted us with their modeling and of our and interpretation of our magnetic and our gravity data. So again, we're still waiting on results from that. This map, this busy map, kind of illustrates the allied cyanide area and the results to date. The blue area represents the 1987 historic resource that was calculated, again, 270,000 ounces of gold, 11.5 grams per ton, and that is all on the down dip extent of this number 1 vein, which is a shallow dipping quartz vein that varies in width from half a meter to 15 meters in width down plunge, where it bisects the allied cyanide. So you can see the tenor of some of the past results in the number 1 vein and recent results, and we've got this next phase of drilling. We plan on drilling about 6 holes to kind of confirm historic holes and get a better handle on this updating this resource estimate and bringing it into 43-101 terms. So this map illustrates the additional the same area, and highlighting 6 areas that have undergone trenching, surface stripping, hydraulic washing, channel sampling, mapping program in the area. This work started in July 27th and is ongoing. Most of this work is completed up in this area, and we're currently trenching on area D to the south. So this map illustrates mineralized samples obtained in area A and area C2. C2 is a new discovery mineralization. You can see lots of oxide and silica and sulfide stringers. And we've got these views here are drone views of area A and B and C, sheared feldspar porphyry. This is a really busted up rock, hydrothermally altered, lots of oxidation, carbonate alteration, and silicification. We've channel sampled a number of these showings, and expect to have assays here by the end of anytime soon, and know we've not used the same lab that we had for our drilling previous drill program. This shows area E from the drone view, and this is a new discovery as well. It's a 40-meter wide shear zone with stockwork, quartz carbonate veining, and it's totally like 400 meters away, which really opens up the area and illustrates the potential for more discoveries. This image just illustrates a 3D model of the allied syenite, and the high grade or the low grade core. This whole system is bisected by the number one vein. You can see what number one vein looks like on surface, and what some of the surface mineralization looks like on the allied. This structure, as mentioned, is open to depth. All structures are open. The mineralization is open along strike on both margins of the syenite, as well as the depth. Mineralization in the allied is controlled primarily by four flatline mineralized horizons, quartz-rich horizons, and there are stockworks and marginal mineralization to the stock. So in summary, we completed our 2,000-meter appraised 2A drill program, and we're still waiting on results. We've drilled 2 holes in the number one vein, 2 holes in the allied, which one were exceptional grades. 4 other are outboard targets that we're waiting on. We had results for, we're anticipating receiving channel sample results from our channel sampling program in the very near term. And we're fully funded to kick off a 2,400 meter 15-hole drill program following up these results later this month. We issued a news release, so we commissioned Bort Longyear, and we're anxious to get going again. Hope that this leaves you with the impression that Northstar's got a very quality exploration bet in the Miller property. We've got exploration is continually being rewarded by new discoveries and very positive results. We're waiting on more results. We have exceptional news flow, and we're accomplished highly skilled board of directors, special advisor, and management. And we're looking forward to a very successful drill campaign this fall. MSG is the ticker. Please visit the website, and thank you so much.
Thanks very much, Brian. All right. Last but not least, I would love to ask Bradley Rourke of Scottie Resources to give us an update on what Scottie has been doing, taking advantage of your tight, busy exploration season up in the Golden Triangle. Brad, take it away.
Thanks, Gwen. Nice to see everybody, and thank you for everybody's time. And it is. This is my 6th night home since the early June. I've been up on site, so it's been pretty challenging season, but we've gotten a lot of stuff done. I'll start with some forward-looking statements, of course, and I'm going to breeze through a lot of this stuff. I assume everyone heard our story. Anybody watching these things these days are interested in this industry. But what I'd like to point out is we're an exploration company in Northwest BC, the Golden Triangle. And I've been running around there for an awful long time. And even though in this 12 months of challenge, let's say, or 5 years of challenge, or even longer, the amount of activity that happened in this last 12 months up there is actually extraordinary. And lots of things have happened, kind of, whether they went under the radar because it's just nobody cares at the moment. There's been some big things that have happened in the area. And again, we won't spend a lot of time, but we've seen bigger players come in. Yamana bought a piece of SCOT. The Lundins are in the area now. We've seen $100 million cash deals between companies, some big royalties bought. And this is all in 12 months. And so, I think we're in the right jurisdiction, and there's a lot more going on than I think people are realizing. So we're happy to be in the middle of it. Scottie Resources is, we're into our 6th season now. We started with 400 hectares, and we've accumulated a land package now of about 52,000 hectares. Part of our strategy is we thought consolidation is very difficult to do, and maybe if we threw our hands at that it might be interesting to somebody. Although the focus of what we do right now is at Scottie Gold, but as you can see, we've got a very attractive land package in and around a couple really interesting stories. So we're happy to be there. We think that we've accumulated all the land that we can, and we're really ready to work it. Infrastructure we possess is also equally impressive. Got an all-season road up to the Scottie Gold Mine. There's a brand new power line that went up to Bruce Jack, goes right alongside our property. In the town of Stewart, we have shipping infrastructure with a deep water port right there. And then the Scottie Gold Mine is, to remind people, is a permanent gold mine. It has 7 kilometers of underground workings and rail systems and an old mill and such. You can still move the trains up and down the tracks just with your hands. So we've got a good area. We've got fantastic infrastructure. And again, we're just moving along quick here so I don't get out of my time. But that's the picture of the original 400 hectares of the Scottie Gold Mine. This is where 80%, 85% of the work is being done. If you look over to the right, you can see the blueberry zone. We'll talk about that in a moment. That's the Scottie Gold Mine. We're looking right at the 4 black dots, kind of follows a profile where that mine goes into the mountain. And then we've got a project on the other side of that mountain called the Domino. This is a different view of kind of what we just looked at, but just to kind of put in perspective where these things are in relation to each other. These are the 3 zones, or the 3 projects that we're working within the Scottie Gold Mine, and we've been leaning into these pretty hard. This is our 3rd year drilling. I've highlighted some of the highlighted drill holes from the last couple of seasons. We're very happy on the blueberry. It's a new discovery for us, and we're working on something totally different than our initial thoughts were, and it's starting to play out really well. But as you can see, we hit a hole last 2 years ago at 7 grams over 34 meters. Surprised us. We've been following up with that and did a tight drill program last year. And even though the market was so bad, these are some of the grades that we came up with. And we've been expanding on that an awful lot this year. And we'll speak about that in a moment. Scottie Gold Mine is what attracted us. This is how it all kind of started. These are from our exploration area holes that we've done. And again, we've done very little drilling at Scottie. This year we've done a lot more. But if you look at some of those results, we couldn't be happier. And then the Domino zone's never been drill tested. We did that last year. We found high grade on surface, and more importantly on strike from Scottie, and did a lot more work last season to help us with this year's program that we'll speak about in a moment. So Scottie's done a total, we will have completed over 14,000 meters in the next couple weeks of a 3 diamond drill program going consistently for most of the season. And so we're an awful lot of stuff coming down the pike. And if you know that we're following up on some pretty interesting successes over the last 2 seasons, it's not hard to get interested. If you get excited, you do. But I mean, to not be interested would be a shame. So if you look at, we've highlighted some of the past results that we've had in and around the Scottie gold mine, and really want to show that they're true exploration holes. We've been doing big step outs from day one and really trying to get a sense, is there something worthy of really leaning into it? And we're quite happy with what we have seen, and we're very happy with what we are seeing. Again, we've highlighted some of these drill results from our last couple seasons, 11 grams over 11 meters. When you know that's a 50-meter step out from the actual mine that produced a half ounce per ton, that gets interesting. Last year we had a 109 gram over 2.5 meter on the ozone, which is largely unexplored. And again, if you know that that's a 30-meter step out from any drill hole ever done, that can get us excited. Rest assured, this year's program has followed up on the success that we've seen at Scottie as well. And we've done an awful lot of drilling, all exploratory drilling coming up for this season. We'll talk about the Blueberry. I'll look at my time. Okay, great. So in 2019, we had a theory, and we were trying to drill a certain east-west type vein. And well in advance of hitting our target, we came across something that was interesting and totally surprised us. And this is that 7.5 gram over 34 meter hole. And that was at the end of our last hole of 2019. Knowing that's a very shallow hole, and most of these holes, or all these holes, are very, very shallow and on a road. So we explored that last season, and we did a tight drill program. And we highlight that tight drill program you can see on the right. And so we've been following up on this year. We believe we have found some north-south structure that potentially could be feeding all the east-west structures that we've been seeing at Scottie. So we've been working on that theory quite hard this year. We were extremely happy with last year's results. And we're going to have about 6,000 meters completed on Blueberry for this season, testing big step outs to the north and big step outs to the south, 200 to 300 meters. We're, in a perfect world, we're going to come out with 700 meters of strike length at the end of this season. And so I think people should stay tuned. News for that should be coming soon. We started the program at Blueberry this year. And yes, the labs have been slow, like everybody's been saying. But, we anticipate our holes are going to be coming in the near future for sure, because we've been very in close contact. So it's coming soon. As you can see, we stepped out to the up top there where we had some big holes, and then down to the south. So that news is coming soon, and we're excited to do it. I'm going to go by this one really quickly. This is our first drill program on the Domino on the other side of the Scottie gold mine along strike. We were pleased with our results. We hit high grade, more importantly on strike. We did a bunch of geophysics and gave us some good targeting for this season. And we've done about 2,000 meters just in Domino this season, and we've actually completed it. So all that rock's been on the table and in the lab as it's already in the lab. One of the transactions that we did at the beginning of this year is we took over another company called AUX Resources, and mostly because it fit our land package very well. They're very complementary. AUX had a drill season last year and had some really interesting success. There's 270,000 non-compliant ounces on this property. It was a past-producing mine as well. And so we took that over, and we did 2,000 meters following up on some of the successes from last year's program. And as you can see, there's a couple really interesting intercepts, 2 ounces over 4 meters, or 69 grams over 4.14 and 62 grams over 2.24. So we've took this southwest vein and we stepped out way to the north, south, and we've gone under that with about 2,000 meters. And that program is completed about 3 weeks ago. All that rock's been looked at, and again, we're waiting for labs. So that's another exciting thing here. And we'll summarize kind of what people can expect to see starting in the near future. We won't speak about the Cambria project, but it's 5 past producing mines. When we put AUX and Scottie together, this is what we come up with. We think it's an attractive exploration opportunity gives us optionality, for down the road and getting some interest on that sort of stuff. Not going to speak about Red Cliff so much, but what I'd like to speak about is what have we completed this year? Okay, it's our third really drill season. We'll have 14,500 meters and perhaps more, but we're going to come across the line with that for sure. It's really a weather thing as we speak, and it snows in the top of the mountains right now. So we're going to continue drilling Blueberry until we can't. We did 4 geological surveys this season with some 3D IP and some 2D IP, as you can see, kind of spread it all around. And then we did some downhole EM right in and around the Scottie gold mine. It's our first time doing that, but we're excited to see how these things play out. If you look at the distribution of the meters, we did about 2,000 meters at Georgia River, 6,000 in and around Domino, yet to be determined, 4,000 in and around Scottie, and then another 2,000 at Domino. And all really, really nice looking rocks. I probably touched almost every box that was came off the mountain. So we've spoken that I think we're in the right jurisdiction. We're in the right place to be trying to do business. The geology speaks for itself. We've got lots and lots of 100-gram meter holes following up on models that continues to seem to hold in. So it just gets better for us. And then we have the right people. If you look at my board, and I truly run the company via the board, a lot of experience there in different factions, but they know this industry well, and they keep me on point without a doubt. So this is something easy to go and look at in the future if you want to go on the website and with a lot more technical work. I mean, the highlights again, we're in the Golden Triangle. We think we're in the right jurisdiction. Accumulated a land package that's a commanding land package. It's over a dozen transactions. We have 7 past producing mines on our tenures. We do have a very, very strong management team that's been with me pretty much from the beginning, and so they know the project well. As a company, we're doing fine, even though we've done all these meters, and you have to prepay for all this work. We're sitting with a cash position right now of $5 million. There's some bills will come out of that before the end of this season, of course, but we're sitting in a nice position financially. I think 3 years ago we didn't have an institution, and I think this pie chart might even be a little light. We have a financing we did about 3-4 months ago. Brought another 9.9% partner, some mining industry partner, and so that we're excited to see that. Again, Eric's brought 13-14%. So we've got, between myself and 3 partners within this, we're over 50% of the company, and so we're in a strong position that way. We're riding out a crazy market, but we're happy with the work. The company's never been stronger, and we just keep soldiering on. So there is my almost perfect time. I've never done it that well. Thank you.
Thanks, Brad. Look at that. He had 15 seconds to spare. That it couldn't be more perfect on the timing front.
And I practiced that much.
I'm sure. I can expect.
Yeah.
Brad works very hard. I just don't imagine that practicing presentation slides into that work schedule, which is fine. When you know your story, right?
I do. And it's there's so much. I would love to actually talk more technical. I would love to pull out longer conversations, but we're happy to be here.
Brad, I'm going to start with you with questions because fresh in our memories. I'm torn between diving into things more technically and asking a few more bigger picture things. I'll start with the bigger picture. You did this merger with AUX or takeover. I guess it was a merger. And you talk about that mostly being sort of a land position argument, and that the properties fit together well, and I can understand that. I guess I wanted to ask you to talk about big land positions versus number of targets that you can actually advance, and sort of like your perspective on that. You do have this incredibly huge land position, but then you got this tight seasonal window in which you can actually do work. So yeah, what's your approach to that?
Well, you know, and going into it, it was not like we didn't see that, oh my gosh, you can only do so much work. But what I heard, you know, Gwen and I talked to a lot of people, is all these bigger entities weren't investing in the Golden Triangle because of these smaller pieces. And they're going, God help you if you find something, if someone just would do this. And so we just thought size matters. Now with this land, theoretically, we own the geological settings, where before there's these series, but there's 4 companies that might own this system or something. And so we think that's going to matter to bigger players. Well, the proof's in the pudding, because when I made that, we made that news release that we were putting together, it wasn't 24 hours and we're in negotiations, and now I have a new 9.9% partner from that. And there was no discussions beforehand. In fact, it was a very surprising moment. So I think that our theory played out, gives us optionality, because I mean, we can only focus on so much. And then someone could even say, well, you got 3 different zones, you know, Brad, and like most companies are, and I hear that all the time. But my answer is the same, you know, every one of those zones needed more work. And so we've stepped out to do these things so we can have the confidence to really lean into one. And because we just couldn't pick, you know, we figured we could just go drill all around Scottie gold mine, no problem. But we don't think people were going to ever, you know, they wanted to see something new or something. And so we've gone for it. I mean, you know, if you look at, we stepped out, we have, you know, gone out after all 3 of those zones because they were all promising, but not one could we sell to just go all the way into. That could change, I think, you know, because now we've got 3 years of drilling. Again, at the end, now we have 24,000 meters of drilling on these 3 zones. And, you know, we'll let the smart people decide if they're holding in or not. And again, we have a whole bunch of news coming, and you know, we're a numbers company now. It's no matter how good of a salesperson I am, it's really just going to be on what those rocks look like. And so all I can say is the model's holding in, and the story's been very consistent for 3 years, and we couldn't be happier. Market's really bad, but my job is to keep everybody focused and happy and go, look, we've never been in better shape, even though it seems uncomfortable at this moment.
Fair enough. Speaking of those 3 targets that you're going after, Scottie, Domino, and Blueberry, is there one that you are more excited about than the others at this moment?
Well, the answer is Blueberry for sure. Okay, that's because it's so near surface, it's so accessible, it's my easiest drilling. My soft spot's still for Domino. I think the glory, that's my own personal.
That's always been my soft spot too.
Yeah, right. So I just go, you know, when we were releasing last year, it didn't matter. It was a liquidity event every time we put out a news release. So in my heart, because that's going to open up that whole other side. But I can tell you what, we've got a lot of intelligent, smart people working on this, as you know, and you know, Blueberry's it's a new discovery for us, and it's holding in, Gwen. It's easy drilling, and you know, we'll see how big of a strike zone we have here. But we stepped out. We're hitting structure where we wanted to see it. Let's hope it runs.
I know when you started consolidating land up in that area for Scottie years ago, you know, it's a relationships deal, right? And there's a lot of people who've been working in the area for a long time. And I mean, there's some groups who like to work together and some groups who don't like to work together. And now it's such a busy space. And as you say, there's been majors moving in and there's been some consolidation. There's still lots of players. Can you just describe, the Golden Triangle is a huge area, but the area that you work in, how has it changed over the years? Like, do companies work together more or less? Like, you do have this really intense short field season, so you'd think cooperation would be in everyone's best interest. But I'm just sort of curious, as someone who lives in the heart of it, to shine a little light on that.
It's that's a good question because it's an ever evolving thing, Gwen. Let me tell you how life can teach you things. I've stepped on a lot of toes, and there's some people that were frustrated with me because I've gone around and I've literally started with 400 hectares, and again, there's just, it takes a strong personality to do something like that, and for the most part, it's great. I mean, the town of Stewart's very, very small, and I basically lived there this whole summer, and they know me. I mean, that was first time at Scottie in 1989, so I know the area well. Here's what I can say is, whether it was perceived or not, I used to have difficulty with a few groups, and there was a few road bumps. But everyone seems to like me now, so it's great. And we're doing favors for it. It's never been more harmonious than it is right now, which is quite funny because it would seem like such a tough chess game. But now it's, down there, again, there's getting very, very few. There's Peridium, which is kind of, we don't even hear about him anymore. They got Jack Chiron just doing what, sticking to his knitting, and Derek just building that mill. Well, we're doing, most of the exploration work in the area. But the other companies are there. We're all supporting each other. We're taking pictures with each other. We're like, hey, man, if you need something, just ask me. I have it. I got a warehouse full of stuff. Like, we want to support everybody, but it's never been more harmonious than it is right now in the worst market yet. But so it's interesting because people who didn't look at me are now, we're all getting along really nice. So
Sometimes the bad weather, right? You all have to shelter together in the storm or something like that.
That's right.
Cool. Well, thanks, Brad. I'm going to move back to Brian now and talk a little bit more about his asset there. Brian, I know the geology is complicated, right? Miller has a lot going on in terms of geology, and you have a lot of targets and a lot of different rock types. Can you try, and here's my challenge to you, to a geologist, can you try and distill down in like a minute or two the different rock types and the different kinds of gold that you're looking for, right? Because there's cyanites and there's veins, but there's there's also sedimentary contacts. Can you explain? I mean, you went through a lot of targets that look very promising, but I think to try and to help people understand the setting for it, can you try and explain the setting? What are the rocks, and where does the gold like to go in those rocks? Or is that still, you would say, not yet known?
Well, it's a very good question. And yeah, it's still a work in progress, but on a big picture scale, the property is situated over it's an intrusive trend with at least 3 stock-like cyanites over an area 3 kilometers by 2 kilometers, and these intrusions they came in during a period of intense alteration, mineralization, and deformation. It was all kind of happening at the same time, so it kind of got squeezed during the latter parts of the mineralization, and then but it's looking like there's even a later, more brittle episode of mineralization as well. So we're still getting our minds around all of that. But suffice to say that all rock types are mineralized, which is really, really important. The biggest systems I've ever seen, generally you can say that. Generally, the preference for mineralization though is the cyanites in the silicified areas of the cyanites. But also you get good mineralization in the ductile settings as well, both on the margins of the cyanites and embayments. Like there's not since this has been squeezed, there's a very irregular contact for the walls of the intrusion, and you get embayments and complications and ductility contrasts and all the things that fluids and mineralization likes to. It's a great trapping mechanism. So the high grade that we've intercepted, I believe is kind of occurring around zones like that. Like this last hole that we drilled, this high grade hole, 3 high grade veins in a short, within 100 meters of surface. It's pretty stellar, and it just shows that you got a small core diameter, and you're getting a kilo plus type gold. So it, to me, it just shows that there's a lot more gold there. There's a lot of gold, and the geophysics, the IP clearly illustrates that there's a much larger, there's a large system associated with these cyanides. Prior to this trenching program, I would have been a little more reluctant to say that, well, that's all related to hydrothermal alteration and mineralization. But you've seen from the slides from the trenching that we've done, we've stepped out, there's just broad gosens there. These things are huge. We could be trenching forever there. So, so it shows that the systems are large, that there's a lot of mineralization. That the key still is to figure out where the best locale for the mineralization is, because it's not all going to carry, but and that's just going to come with now I can't wait to get a structural geologist on the property to really tear apart things and really try to get our mind around it. It's been it's a very rewarding project. I'm really enjoying it, and every time we hit it, we come up with new promising results. So I hope that answers your question in a roundabout way, Gwen.
For sure. And I would say, that sort of sets the stage for the next question, which is, there's such a variety of hosts and pathways, settings, I guess, for mineralization. Partly perhaps because of that, you've actually used a wide range of exploration techniques as well. I mean, from what you were showing a bunch of pictures of right now, which is, call it basic, clear the dirt off of the rocks, look at the rocks and trench them. That's very foundational. I mean, all the way through to obviously geophysics, but then gold spot as well. So using AI also to try and come up with targets. How's that, been for you? Like, is it changing your approach, or is this always been your approach to use every method possible? I guess I ask because geologists have a range of opinions about, how they like to do exploration. You are using every tool, as far as I can tell.
No, and that's a very good question. And I guess, when you've been around as long as I have, there's been incredible advancements in geophysics techniques and interpretations. And I'm really impressed with, the gamut. We've got state-of-the-art 3D IP. And it's just it's amazing how accurate it is, and how such a powerful exploration tool. We did mag, we did gravity as well, and yes, we had Gold Spot involved, and they applied their AI routines and algorithms to. And they identified a number of targets, and 4 of the holes that we drilled in this phase 2A program are targeting are specifically gold spot targets, where we stepped out. We've seen similar characteristics as the allied cyanide and the planet cyanide. So they were kind of shots in the dark, and we've hit mineralization. I can't say anything else other than the proof is going to be in the pudding. And if we'll see what comes out of it. But I've always tried to employ the vast array of exploration techniques as that's available, and so we've been doing that. Having to be able to trench like we did over almost a hectare of trenching on the property. So the overburden is not very thick. It's very, very effective, and so this really gives us a leg up on things. So that's not a component of exploration that you always have on a property, but it's pretty sweet.
Yeah, for sure. Seeing those, it was the contrast there, I think, of seeing your drill map that had clear gold spot defined drill targets, and then seeing your blast away the dirt and look at the rocks. That range, that definitely caught my attention. In that huge, I mean, you cleared a hectare, you got to see a hectare of bedrock. Was there one of those in particular that jumps out at you, either for being different, interesting, or just that you particularly like for its promise?
Well, Area E is, I've yet to see it. I haven't been on the property since that's been exposed, but the guy's done an amazing job. It's a whole new discovery, 400 meters away. There's no drilling done at all. So we're certainly, even with before we get assays, we're going to punch a couple holes in that and see what it shows for us. The chalcopyrite, like there's massive sulfide in these zones as well. So we don't know really how this stuff's going to run, but again, this is kind of the attraction I have for the property, is that mineralization comes in so many different forms, and it's so prevalent. But in terms of, we got two new discoveries, Area A and Area B, and we're trenching D now, chasing the number one vein to the south, and I fully expect more surprises there as well. So hang in there, and but it's very positive. It's good.
I personally want to go and like poke the assay lab, because Brian sounds pretty excited. But anyways, thanks, Brian, for the update. John, let's move back to British Columbia. Okay, I got a couple different questions to try and run through here. This free gold, obviously an exciting development. Can you talk about how you plan to chase that? I mean, I guess in the context of, you have this huge distance along strike that you're also chasing, and that's a major like exploration requirement. The holes for the free gold theory would suggest that it's deeper. So how do you plan to chase the ideas about whether there's this free gold potential at depth? And does it relate to winter drilling? Like, is that when you spend more time underground?
Yeah, there is a few factors. We've noticed that the free gold is in a separate zone. It's more of a quartz stringer rich zone. There's less sulfides, of course, and that could occur at shallower depths. So we're going back to look for that also in parallel areas where it might not have been recognized or certainly assayed because there was nil sulfides. Including some of the areas we're drilling now on the surface that are fairly shallow, especially down closer to the valley bottom where we are at essentially the 830 level or a little bit lower. So double checking to make sure we're not missing some shallower occurrences of free gold in that different style of mineralization. For going straight back to expanding the known areas with free gold that we have, we'll be doing that from underground. And we'll drill down dipping on both sides of any of those intersections. And then we'll also be getting some metallurgical samples while we're there, Gwen, because as you know, all the metallurgical work was done from sort of the middle of the ore zone, and we need to do some more from a different depth, and also in that anywhere where there's coarse gold known to be. So that'll be some larger diameter drilling, and also wedge holes that we'll do from underground.
Okay.
This winter.
This winter, when the snow blankets the outside, you go underground where
That's
there's
right, yeah,
snow.
for sure.
Absolutely. I did have a question sent in about arsenic, mostly because you identified the arsenic grade in the main zone, or of a particular hit in and around the main zone, and talked about it being an order of magnitude or two different from the deposit average. Just talk a bit about arsenic and where it is, where it isn't, what it means.
Yeah, sure. So first of all, in the main zone itself, what we call the main zone, in the massive sulfide portions of that, there's higher grade arsenic along with higher grade of other minerals, including lead, zinc, and copper, and silver, and gold. That is what most of the gold was escapulated in the arsenopyrite, the gold mineralization up to this point. So all of that caused a lot of difficulties that the previous operators have spent a lot of good money doing metallurgical work and some fantastic work on that. Never did anybody really push the resource calculation on the main zone high enough that it would justify building a pre-treatment plant on the property to take care of liberating the gold from that arsenopyrite. We're now at that point where you can go down that path, and certainly there's enough room to justify doing that as far as the cash flow or net cash flow potential on the property would be on the main zone. In the Yellow Jacket zone and that environment, there is no arsenopyrite at all. And there's no real metallurgical challenges at all there to extract two concentrates, a zinc concentrate and a lead concentrate, with higher grade silver reporting to that lead concentrate. And of course, that's my weak spot. I love that type of thing because I've done that type of mining and processing before, and I just know that I can get a smelter check pretty quick. But and then of course then we find these stringer zones with quartz snuggled up next to the main zone, which has no arsenic, but 0.0. It's like almost nothing, and then we have arsenopyrite in there, maybe a little bit of lead zinc, but just curiosity's sake, most of the value is in free gold, and it's not small size free gold, so it's fairly coarse. That's something we can of course build a zone there, and we could go after that pretty quick, even if it's deeper. You just go after it and make some fast money. But of course, permitting a big important mine in British Columbia is a job in itself. That would be the next step. But so that's why Rokmaster, right? You're looking at cash flow scenarios in the future from an important mine, and then of course there's all this blue sky for many kilometers.
Can I get you to wave your arms around the resource estimate? I mean, just wave them, because
well, you
guys stepped way down. Like
just
you doubled.
Grab a ruler and put it on that long section I showed you and do the math. But it's going to come fast. I mean, as you know, we've got Jim Oliver. He's making sure that the geological sections and everything are helping. He's helping a lot with the mining engineering team who's putting together the new resource. The mining engineering team is a mining engineering team, and they're also very capable of deciding what they think are real ounces and how solid all that is. And they did the previous couple of resources, so they've got all of our data now, ranging from drill hole surveys to whatever. They've all got it in their lap. They did take back 21. They quartered a bunch of drill core, 21 samples. They hadn't been on the property for a while, so they came back and did all that and took that back to Toronto. They've got an 8-day turnaround on rush sampling for the 21 samples. So we're expecting to have an updated resource, at least something I can news release within a month, and then the report would be filed, of course, slightly after that.
Gotcha. Okay, set your clocks within a month. That's exciting.
Yeah.
All right. I'm going to keep moving along in the interest of time. Alexandra, a bunch of questions came in for you as well. I'm going to start with my own because I'm greedy like that. I had a bunch of conversations at Beaver Creek when I was there about sort of the evolution of the royalty space, and it's gone through such an evolution, right? Yay, there's a new funding mechanism for mining. We all hate royalties. They burden projects and they would never work. And then now it's this super competitive space where, because it's so competitive, royalties do work, right? So now it's a real mechanism and it's a real role in the sector. But the creation side, I mean, the buying of royalties side has been really busy for quite some time. The creation side seems to be getting busier as well. Do you want to just talk about how the landscape has changed for you? I mean, you've been both privately and now for 8 months publicly in this field for quite a while. So do you want to talk about how it's evolved and sort of what changes you've seen or approaches, how the conversations are different?
No, it's definitely been a lot of evolution over the last year. There's been a lot of new entrants to the market. A lot of new junior royalty companies and streaming companies have entered the space. We've chosen the creation side of the model. So again, it's working with companies to get them into production or expand the production. For us, it's working to bring revenue into Empress. And that's where we can see the real value comes in for the shareholders. But yeah, it's definitely a competitive space. Buying third-party royalties, it's simple trading of paper, there's this reassigning the agreement. And I think, that's a decent business model for that as well. But for us, if you want to see the real lift for shareholders and the real value added, it's creating new royalties and streams. So there's a combination of both, and you can really structure those deals to work with the company to allow them to grow. And I think that's all that we've demonstrated with what we've brought in, and that's the kind of groups we're working with, where it's not just a royalty stream on the project now, it's about the company growing and then the project getting bigger and maybe some other projects coming online, and it's part of a bigger story. But yeah, it's been a really interesting space in the last little while.
That leads pretty directly into another question that came in. And I love the simplicity of the question because it's getting at something very complicated. Please describe briefly how you go about valuing a royalty or stream and what you're willing to pay. So give it, go.
So we look at each company and each project. We get to know the company and the management. If we don't already know them, well, we do know them, but we look at the project. We look at their cash flow models. We look at what they're doing. We look at what other constraints are on the project. Some are already overcome with royalties, so that's where maybe a stream makes sense. We work through, and I'm able to have, I've got Endeavor Financial as the investment manager. I've got access to all their cash flow modelers, financial analysts, geologists, engineers, so a really strong team behind putting these deals and structuring together. I think that kind of makes us unique in the space. We're able to take a group that does much larger size deals and apply it to the smaller side of the market. And that was what was kind of overlooked. And that's originally where the concept of Empress was hatched and brought out was, a lot of the larger streaming companies are looking at deals that are 100 million, 200 million, and no one was servicing the smaller side of the market. And we have the skill set to be able to do that, and working with the smaller producers and smaller development companies. And I think that's where we're really going to excel. We've got a big pipeline of opportunities like that. We've delivered on 3 development ones and 1 producing one, and then you continue to build our portfolio.
All right. I noted when you finished your presentation that the chart that you provide of revenue, expected revenue over the next few years is pretty, is exciting. I mean, that has changed a lot since you weren't able to really have a chart like that 8 months ago when you debuted. So that's exciting. Then of course you moved into valuation, and that your valuation on whichever metric you want to choose is still low. How do you have an explanation for that? I mean, is this just part of how the market learns about and comes to grips with the value of a new royalty company? What do you say to that disconnect?
Yeah, I think, we are a new company. We've only been trading for 8 months. We're getting the story out there, communicating with shareholders. It's still very early days for us. We had a plan, we've delivered on it, and I think it's taken a bit of time for the market to catch up. But you look at the overall sector, all the junior royalty and streaming companies are pretty much down at the moment now. So I think, we're continuing to deliver on our business strategy. We're continuing to work forward and looking at new opportunities, and hopefully the market will catch up to us soon.
Last question is a simple one, but maybe we can use it to broaden up the financial side of things a bit. The question is whether Empress has debt, and if so, what's it structured? What does it look like? And I guess I would take that further. If you have $75 million of deals that you're discussing, obviously not that you're planning on closing on tomorrow, but talk about how, debt versus other would your approach to funding those potential new deals.
Yeah, so we, Endeavor Financial is our investment manager. We recently expanded their mandate to include debt and M&A. We went out to look at what debt opportunities we had. We're just recently announced, and we're in the process of closing a $5.2 million US debt facility with Ascendo Banco. This is going to give us the funds to complete the rest of the Sierra Antipite project, which will bring us the significant revenue into next year for us, or immediately, and then further on next year. This is just a short-term loan. This is not a long-term one. This is one that's allowing us to bridge that gap that we have at the moment and move it forward. We're able to, when we say our portfolio of 75 million of assets, potential investments, we go through rigorous due diligence on these. These take time. We have someone at site, third-party engineering groups looking at it, structuring of them. So, and we're always keeping in mind our overall portfolio of what to bring in at the right time. So we have that flexibility. We can react when we need to. If the market gets better, we can, react. If it doesn't, we're still bringing in 6.7 million in revenue US next year. So we're starting to accumulate. We're starting to build. And, I think it's just, we'll see what happens, how the market is, and continue to deliver.
Fantastic. Well, everyone, I want to say thanks. We're a few minutes early, but I think we'll wrap it up. There's a lot of presentations yet to come today. So if people have a bit of extra time to go stretch their legs, Not that anyone would want to do that in Vancouver today. You might drown if you step out your door, but I think a little leg stretch before the next session would be good. First of all, thanks very much to the audience, anybody who tuned in. We all very much appreciate your interest and your engagement. If you have any other questions for the presenters here or for me, we're all very happy to answer them. You can reach out through the Metals Investor Forum, or you can find any of us on our websites. And of course, thank you to the presenters. Thanks for joining me here today and taking everyone through your stories. And we look forward to doing it again at another Metals Investor Forum in the future, when you've all hit all the marks that you laid out ahead, and we can catch up on those. So thanks, everyone. And audience, stay tuned for another session. It'll start up in about half an hour.
Thank you so much.
Welcome to Metals Investment Forum. I'm Chen Lin. Today I'm going to discuss the tapering of the Fed and the China situation. There's many questions about China, the slowdown. Are they heading? Where are they heading? Is there any trouble? So I'm trying to answer those two major questions here. Again, this is my disclaimer. I hope you read that carefully. Okay, so a lot of people ask me about gold, and then this is a chart of long-term gold chart, okay, in the past 20 years. You can see we have a big spike here along the 2008, and then spike all the way to 2011, and then came down, okay. And then we came up another spike of last year and then have little corrections. So, you know, the question really is this corrections more like this, like 2010, or more like this, like 2013? So let's try to see some comparison. Okay, again, this is the S&P, and you can see it's just going parabolic. It's very hard to pick the top of the market. Again, I warn people, I know some people want to short the market. I'm not, I don't short. I think, again, it can go whatever the way it is. The market is just manipulated. It's very low interest rate. People have nowhere to put the money. And if you compare right now, the big tech, the versus GDP is even higher than 2000. So it's concerning, but it may go higher. So I don't want to pick the top of the market here. Okay, this is actually a better diagram. Okay, this is 20 years of gold versus the debt over GDP of United States. Okay, and then it's very long-term chart. Very long-term chart, you can see that it's very strong correlation of gold versus the debt over GDP of United States. It tracked it very well. In 2000, this is around the 08 financial crisis, okay, and then gold shoot up. You can see that it can go really extended on the expectation that the debt to GDP will continue to go up. But as the gold reached the peak around 2011, it came down all the way to the debt to GDP level, which is consistent in the past 20 years. Okay, this is our current chart. You see that, again, on the expectation of more money printing, people think gold actually overshoot that debt to GDP, but not by much, not as much as 2011. And we just overshoot a little bit. So people ask me about what do you see the correction of this gold? How low can they drop? You can see that, you know, it's possible. I mean, right now seems to be that if you think everything is constant, the fair value for gold is about 1800, which is about where gold it is right now. On a very hard correction, you can see that over here, we dip below, and then this is a great bear market of gold. We dip below, we can dip below that. Okay, so I would say 1600, 1500, it's a really big correction. It's possible. But right now, it seems like gold is happy where it is, okay? And it could go higher. Let's see the 2013 tapering. 2013, as people know, was a terrible year for gold. Gold started the year was 1700, which is just below where we are, and it ended the year at 1200. Okay, I put together all these major incidents happening. That's before the Fed announced the tapering, and then after the Fed announced tapering. You can see when gold dropped the most was when the Fed starts thinking about tapering. Okay, when they continued the SCOT tapering, gold already almost dropped to the bottom. Okay, the gold almost hit 1200, and then on the tapering announcement of 2013, gold hit the bottom. It's not the bottom. It was a bottom. Okay, but because gold drop even lower in a few years, but that's for different reasons. But I'm just trying to review what happened in the last tapering in 2013. And then we try to reflect what we have now. So this is very similar. I see very similar timeline. Okay, and I see the tapering announcement probably will come in November or December. So actually very consistent with that, but gold didn't drop as much, okay? That's historically Fed. This is from UBS research, right? So the 2019 type, we have a stimulus, 2019 stimulus, and then start to drop, right? Stimulus start to drop. And as you notice, 2013, which we just discussed, right, is last when the tapering really coming off, actually the market coming back to normal, that was the bottom of gold. So, oops, let's go back. And then look at this coincidence, right? So we have a big stimulus last year for COVID. And the stimulus start taking away. It's not just US and Europe still in stimulus mode, but the rest of the world already taking off stimulus, right? So next year is going to be forecast to be the year of much less stimulus. The government around the world will take off the stimulus. It's kind of similar to the setup of 2010, 2011, okay? So this is basic comparison, my trade. I'm a trader, I love gold, but when I see, other opportunities, I don't hesitate to sell gold. And then in the hope of I can get back to gold at lower price in the future. So 2013, actually, I sold gold before 2013. I sold most of the gold and gold mine in 2012 because I don't see a very good value there. Remember, I went to a conference, people call me the Moses because I was supposed to lead the gold miner out of gold, out of Egypt. Anyway, people were not happy with me, but turned out to be a good call to get out of gold in 2012. 2012, the debt of GDP United States is about 2013, about 100%. Okay, stock market rally, and then they will hope, as the economy recover, that deficit will be reduced, the debt will be reduced, and inflation was low. And at that time, I'm more investing in energy and other commodities. I was waiting gold, hoping to catch a bottom of gold in the later time. 2011, actually, there's some similarities. I would discuss that in the last Metal Investment Forum in November. We were talking about potentially vaccine, right? So when the vaccine news came out, remember Pfizer vaccine news came out over the weekend, 90%. I said, oh, Monday it came out newsletter, I said, sell gold. We need to sell some gold. We need to buy those cruise liner, hotels, movie theaters, and energy whatsoever. So it's a trade. Okay, I already out of it. I completed out of it, and we generate a lot of gains, profit, and now I'm looking for different sector to deploy, including gold juniors. So the next question I have is really the China slowdown. China is really, they have this social justice change, okay? I was talking this people like, this is Bernie Sanders, Elizabeth Warren on stereo. And they want to transfer, they actually do want to transfer the money from millionaire to little guy, okay, in the name of social justice. They even consider the wealth tax that Elizabeth Warren was talking about in her campaign. There's a real estate tax that's almost certain going to happen, and they also, they want to hit hard against speculation. So, that's where the China case, and then that results in a slowdown in real estate, and I'll show you later on how hard it is. there are still many empty apartments in China. Even people were talking about that 5-10 years ago. It seems to gone away. It's still there. Okay, and during the COVID outbreak, the government sent police to knock on the door one by one. They found actually there's a lot of empty apartment in the big cities, and apartment price started to come down. So this is the bottom line. Okay, the COVID lockdown in China. Right now, there's another outbreak in the southern province of Fujian. And they try to lock down any outbreak, they will try to lock down. So the cost is very high. And Chinese economy has been boom for 20 years without recession. Okay, so the slowdown risk is pretty high. Recently, it's a big Chinese company, Evergrande, blow up, right? And they have a $500 billion RMB of debt, and they cannot pay more than $500 billion. So, and as I discussed in the Kitco interview, historically, dramatic reform in the wealth of distribution can lead to civil unrest. Even sometimes empire got toppled. Okay, and then also another trend in China is lower birth rate. Now China completely reversed the one-child policy, try to encourage births, but it's getting late, too late, and the population getting age. But in the short term, yeah, historically, this is a positive side. Chinese government always try to answer the slowdown with more infrastructure spending. So if there's a slowdown, there will be more infrastructure spending. And then Xi going to start his third term. I think he will get his third term next year, probably his last term. And he probably wished stability to start his third term next year. So that's a positive side. So the bottom line is we need to watch China very carefully, because China is number one steel manufacturer, number one aluminum, zinc, in terms of huge consumer of commodities, and they have a profound impact in the commodity market. So this is a China Evergrande. This screenshot is a little bit late. A couple of days ago, now even dropped even lower. You can see that it's $20 Hong Kong dollar stock last year and dropped to a little over 1/10. Okay, the market cap is 40 billion Hong Kong dollar, but it's much lower now. It's dropping every day, and you can see it's the huge volume recently because the company running out of trouble. They cannot pay the debt. They have more than $500 billion in RMB. That is the one of the largest real estate developer in China. It's called like China's GE, for example. Okay, it's a big company. So that's running into a huge trouble, as you see. So I mean, just another example I'm trying to make is that China's impact on different commodities. China started to use the sodium to replace lithium in their lithium battery. Okay, there's abundance of the sodium on Earth. Okay, so they generally have a long recycle ratio. They have a very good low temperature, which means they run better in Alberta. Okay, and then they have very stable, but the energy density is low. It's about half of lithium, but the technology can improve. They can increase that. So it seems like a good replacement low-end lead acid battery may use in the low-end electrical cars. So, but it may take some time to challenge lithium. But that's something you need to watch it very carefully. If that really takes off, what impact to lithium, right? If that take off, what impact to lead, which actually is a key component for the lead acid battery, right? So that's another thing. But they also will increase the demand of copper, nickel, and all the other battery material, because all the other material demand will increase because the popularity of battery will increase. Right? So you have to look at the different ways. That's another thing you want to watch. Okay, so let's briefly talk about the big picture. Federal Reserve balance sheet just going through. I mean, they start tapering. They may slow down a little bit, just like before, and then may come up again. I just don't think they can successfully reduce that. Now, gold has been in consolidation in the past year. As I discussed, it's more like early consolidation instead of the top of the gold. silver, copper. Okay, copper is stable. This is the oil. It's quite stable. Silver actually is pretty low for the year. Okay, so every bull market of gold, usually a spike of silver. We haven't seen a spike of silver. That's another evidence. It seems to be we have more to go. This is only a consolidation. Platinum was hit very hard by the chip shortage of automobile. Okay, so you look at the rhodium. Rhodium, actually, this is a few days old. Rhodium, this is the ETF, so 1 to 10. So this means 10,000 rhodium. Actually, right now it dropped below 10,000 rhodium. You can see that it was hit very hard by the chip shortage. A lot of automobile manufacturers, they closed their plant. So it will hit, so rhodium price as well as palladium and platinum will drop very, very hard in the past few months. Okay, you look at US dollar, still range bound. So this is different investment ideas and amount of gold and silver. Okay, and so I also reduced the big company gold and silver producers. I'm waiting for the tapering announcement. Okay? So if for 2013 the tapering is the bottom this year, if it happened in November, December, that's a perfect because it's a tax loss selling season as well. Okay, so I think for juniors, it's still very, very exciting time. We have $1,800 gold is very high price for gold producer. Major discovery, if you can have a cost below 1,000, it will pay off. So I'm very actively looking for investment idea for juniors. I don't see this as the big whoosh at 2013, and there actually could be an interesting consolidation process. And then, as I said, tax loss selling this year will be very severe and could be a very good opportunity, frankly. Okay, so this is just to talk about a little bit my philosophy of investment. There's just too many pump and dump in the junior market. So people say there's the smart money versus dumb money. So I'm the smart money, you're the dumb money. But I don't feel it this way. I feel I'm looking for value. I'm trying to avoid the zero-sum trade. Okay, it's like I win, I have to take a pocket from you. I don't like that. I like to see value got created. Okay, the old-fashioned way. You create value, everybody wins. Okay, so so basically, this is again, this is also my vision. Okay, so the key is you want to take a calculated risk. Okay, not only calculate risk, I also have a better vision for the future. Okay, so I want to be the house, not the gambler. So if you want to gamble, you can go to Vegas. You don't need to come to the Metals Investment Forum. Okay, the key is really you have more wins than losses. Nobody can win 100%. Okay, so and then over the long run, you can make good money. Okay, so this is what just a quick review what I have. The rally very hard. The COVID showed a new high 2020. So when silver was $12 and gold 15 was March of last year. I really pounded the table. I tell people to buy. I have a record to show that it's over one weekend. I remember that was a very, very low price. I take some profit, 1900, and cautious ahead of tapering, and also the picking the gold direction very important. Okay, so. In the long run, generally, gold miner will outperform gold. Okay, but you need to remember, gold miner are the core options of gold. Okay, so gold can go very violent, as you know, in the past few months. So since last November, I talked about the vaccine, and when the vaccine news came, I immediately sell gold and then buy the cyclical stock, cruise liner, hotel. Unfortunately, I didn't buy AMC, but I bought the Cinemax. So, so on and so forth. And I already sold them for good profit. That trade already done. I'm more focused on gold now. Okay, so, and then finally, we have juniors. Juniors is exciting part. It's really stock pickers market. It even works in the bear market. Remember, there are a lot of winners in the last bear market. I happen to be part of it. And then you want to buy and hold and trade. Okay, you need to be active involved. finally, this is if you want additional information, you go to chenpix.com. And I also partner with my good friend, Jay Taylor. I appear on his radio show very often. So that's my presentation. And then we come to the company I recommend here. I personally own all of them. Okay, great. We have some exciting companies presenting here, and I own all of them. Let's start with, before I start, I want to remind everybody, you can ask questions for any question on those companies by press the big blue box on the bottom of your screen. You can ask any questions, and later on in the Q&A, I'll organize all these questions and present to the company management. Okay, let's start with American Pacific. They are the old friend of MIF. I presented the company about 2 years ago, and then they go through all the last downturn, and then become a superstar of this year. And most of my subscribers are in the company. We were fortunate to prescribe their placement when they acquired the Madison project at 12.5 cents. Today is, even this week, it still continue to go up. It's make us happy, but this is just only the beginning of the story. Let's welcome Warwick Smith, the brain behind American Pacific.
Thanks very much, Chen. That's a very kind intro. I appreciate it. So yes, my name is Warwick Smith. I'm CEO of American Pacific Mining Corp. We focus on assets, high-grade assets in the Western US that we can believe will be the targets of majors down the road. We have the Madison mine down in Montana that is under partnership with Rio Tinto. They may spend up to $30 million US to earn 70% of the project. We announced this week the consolidation of the Tuscarora district in Elko, Nevada. I'm going to start with that. We're very excited about that conversation. And then Gooseberry, which is a high-grade asset just outside of Reno. We're going to drill that in September. And then we've got just picked up the Red Hill mine as well, which is on the Cortez Trend. Here is the corporate structure. So 96 million shares out. There is $6 million in cash and then $3 million of warrants that are well in the money. Michael Gentile is a 19.9% shareholder. He's been an incredibly helpful shareholder to us. And you'll note the burn rate. The burn rate's around $100,000 a month. So we're certainly well capitalized. Don't let the low burn rate fool you. Rio Tinto is drilling as we speak, and they've been covering the costs for us. This burn rate also is about to go up because this year we're going to drill both Gooseberry and Tuscarora ourselves. Near-term catalysts. Drill results coming out of Madison. Drilling at Gooseberry, late September, so last week of September, first week of October, we'll start drilling at Gooseberry. Then we're going to move that drill from Gooseberry over to Tuscarora. We'll drill Tuscarora. So all three of those assets will be drilled in 2021. We're looking for a partnership at Red Hill. And then we're going to have results of a drone survey that's been done at Madison that we're quite excited about for future targeting as well. So on to the news of the week, which is Tuscarora. This is a look at what the Tuscarora mining district looks like. This is an asset that we actually started the company with back in 2018. We had some claims down to the south, and we have now this week been able to negotiate and pick up the claims to the north above us. High-grade epithermal system, numerous veins that run through our project, and the portion that we had owned up until this week is under gravel cover, 0 to 200 feet of gravel. There's been some excellent drill results there previously, both that we had drilled and that were drilled by Novo Resources and Newcrest. I'll show you those in a moment. The veins, the same veins that run in the south, run to the north. A group did a very good job consolidating all of those, and we have purchased those from them. Those veins up to the north, the new claim package, express themselves at surface. They are not under gravel cover. And this is what the sampling looks like. There has been some incredible grades, and incredible grades that are spread out between numerous veins. I've got 6 of them listed here. Here are a few of the highlights, starting with a sample of 21,032 grams per ton gold and 38,820 grams per ton silver. That's $1.2 million rock. All through these veins, if you look at Argenta, there's an 882 gram sample of gold with plus 10,000 grams per ton silver. If you look at Modoc, 2,800 grams gold plus 1,400 grams silver. Young American, 116 grams gold, 740 grams per ton silver. These are incredibly high-grade samples. It's created a lot of excitement for us, and we're incredibly looking forward to going and drilling this year. This is now about a 3,000-acre project. Past production from those veins that we just discussed that are up above was around 500,000 ounces of gold and 7.5 million ounces of silver, keeping in mind that was done in the late 1800s, so those numbers are a bit of a hand wave. It's also the oldest epithermal system in the state of Nevada. It's the same age as Carlin. So why is that interesting? That's probably why we're seeing these higher grades, because that was a time where there was a tremendous amount of gold that was deposited within throughout Nevada on Cortez and on Carlin. You don't see this in epithermal veins. As I mentioned, this is the oldest one. Here is the claims. You can see in the blue, that's the previous claims that we owned. The yellow is the new claims that we have picked up. So what does it look like when you drill it? So the drilling that we have done on the southern portion that we owned previously has returned some very high grades. 4.5 meters of 127 grams gold, 1.5 meters of 368 grams per ton gold. On one of the other veins, 1.5 meters of 52 grams gold. They're very, very good, exciting grades. We're thrilled to have done this acquisition. We're very excited to get out and drill this. So the cost of it cost us $800,000 Canadian and 3.7 million shares. Those 3.7 million shares are escrowed over 18 months. The Madison mine. So Madison is under partnership with Rio Tinto. I'm giving you 30 seconds of a drone flyover here of a 4.5-minute video that if you're interested in, you can see on our website. Just kind of gives you a feel for what it looks like. The project's under partnership with Rio. They may spend up to $30 million US to earn 70% of the project. They are drilling as we speak. They started here in 2019, and between the 2019-2020 program, they spent $3.88 million US. Here's the drill program that is underway now. 4,000 meters of diamond drilling. A mag survey, which we're actually very interested in seeing in. It's one of these new, it stays 25 meters above the topography. It's going to give some really good data for targeting going forward. We're excited about that. They've done some trenching, etc. as well. These are some of the historical grades and what this system can carry. So 30 meters of 25 grams gold, 11 meters of 41 grams gold. Great copper numbers, 61 meters, almost 7% copper. 8.5 meters of 40% copper onwards. The best hole they had last year was a 1.5 meters of 69 grams per ton gold. It's an interesting system. So I've put this up here, and I'll just run through this very quickly. But one of the things that really seems to capture people's attention is the fact that all the rock runs, whereas jasperoids are all across Nevada. They're a great indicator, but typically don't run. It runs up to 0.5 ounce here. The native copper, you would expect that to run. The ones that you see here ran at about 11% copper. And then the massive sulfide. So if you take something like Fortitude, the Fortitude deposit, which is a big skarn in Nevada, where my partner, Eric, was chief geologist, there's lots of this massive sulfide, but it doesn't run at all. It looks great and is incredibly heavy, but it doesn't run. Whereas here, it runs incredibly well. This is 0.6 ounce per ton gold at 11% copper. That drill hole from last year, the 1.5 meters of 69 grams per ton gold, was in this massive sulfide. That's interesting to us. It shows that there's a big system underneath. They drilled into the porphyry in 2017. So the feeling is that there's a big system pushing those fluids upwards that's mineralizing all the rock. That gives us excitement, gives Rio excitement. We're excited to see results out of here in short order as well. This is Gooseberry. So 45 minutes outside of Reno. Its analogy is the Comstock lode. Comstock was the largest mine in the United States previous to the big Carlin deposits. What I'm going to show you just very briefly here is a 3D model. We are going to go and drill this asset. This has not been touched since 1994. Last in hard rock production in 1991. This is an asset that Eric has been kicking me for 2 years to drill. So I know he is very, very excited to get out here at the end of September and get drilling. What you're looking at now is the original stope maps that we've converted into a 3D model. You'll see the different levels come in here, and then you'll see it spin through. And then I'll take you through and I'll show you one of the long sections and give you an idea as to where we're going to be drilling. But great grades here. When we picked this up, we actually staked it. It cost us $20,000 to pick up. And since then, we've been able to track down a lot of the original data. We've tracked down 12 old bankers boxes of data, literally covered with dust at the University of Nevada, Reno, and got a feeling for what kind of grades that this holds. So some of the production grades, 0.9 meters of 65 grams gold, 4,500 grams silver, 0.9 meters of 113 grams gold, 3,700 grams silver. Again, focusing on high grade assets in the Western US that we believe can get big. This has only gone down 1,150 feet. Comstock load went down 2,900 feet before it flooded out. But when it got flooded out at 2,900 feet, they were in 20 ounce per ton gold. This is in the same rocks. It's 15 miles away. We're excited to drill it and see how deep it does go. What you're looking at is a historic long section. The dark pink is the stuff that has been mined out. The light pink is what Asamara at the time referred to as reserves. We obviously do not refer to them as reserves today, but boy, they make good targets because we know they're there from what they had blocked in. So we will drill off to the flanks here and we will drill off down deeper as well. As mentioned, that program starts at the end of this month. The Red Hill project is an asset that we've just picked up on the Cortez trend. This is a internal to New Legacy's claim block. It's a 80 claims in the middle. It's previously drilled by Barrick, so 25 meters of 5 grams, 13 meters of 8 grams. We were able to pick this up for the cost of $25,000. So we felt that it was good deal making on our end. It's not one that we're going to drill ourselves. It's quite deep drilling, but it's a very real target and one that we're very excited about. And we have a partner in mind that we'd like to bring in to drill this. Right along that Cortez trend where there's roughly 100 million ounces of gold. This is one that we're excited to go after as well. Here's the team. You know a bit about myself. Eric is my partner and has been since 2008. Eric was the head of exploration in the Western US for Newmont. Newmont was looking for deposits that were 3 million ounces plus. You got to see a lot of stuff that was 500,000 to 1 million ounces that can grow. And that's really where our sweet spot is. Al Nesh is our CFO, does an excellent job for us. Ken Cunningham, former CEO of Miranda Gold, geologist based out of Reno. He was a gentleman who put us on to Gooseberry. Has been a mentor for me for a long time and somebody that I have a lot of time and respect for. And then Jonas Lang, who I like to refer to as the sort of young blood on our board, has been an excellent director, was the gentleman who introduced me to Michael Gentili and helped us bring him in. He works over at Maple Gold Mines. He's a VP over there. I know he was instrumental in helping bring in Agnico Eagle for them. So what's ahead? Drill results coming from Madison, drilling at Gooseberry, drilling at Tuscarora, all taking part this year. Red Hill Partnership, we're looking for a group to bring in there and get that drilling. And then results of the drone survey coming out of Madison as well. If there's one thing I'd like you to take out of this presentation, it's this. We have 3 assets that we believe can be world-class assets that are all going to see drilling attention this year. So there is going to be significant news flow from here going forward. I think I got in under time, so fantastic. Thank you very much. Chen, we thank you for the support. You've been there from day one, so thank you for everything. And if you have any questions, please feel free to reach out to us.
Thank you, Warwer. Again, you can ask any question by pressing the big blue box at the bottom. You can ask about, American Pacific or any other companies. And later in the Q&A section, I can put all the questions together and ask for you. Again, it's a very exciting year of American Pacific. And as a shareholder, as most of my subscribers are shareholder, we really appreciate what you have done in the past year and I hope to see more success coming in the coming months.
Thank you, Chen.
So next, if you like early stage story, you say, okay, I would like to get in American Pacific 2 years ago. FireFox is a very interesting story. You may have heard that Rupert had a huge discovery in Finland, right? They have a resource of about 4 million ounces, the grade about 2.5 grams per ton. Okay. And then that's the first one, right? First reserve report, and they probably have more to come. Mostly it's open pit, they're a little bit underground. They are drilling, usually it's about 4 grams over 100 meters. And there's a tiny company called FireFox, also have a huge land position in Finland, just next to Rupert. they recently just had a discovery of 8 grams per ton over 16 meters. That was way better than anything they've seen before. So here, and then most importantly, for FireFox, their market cap is only 25 million versus Rupert 1 billion. So there's a huge gap. And then let's welcome Patrick Highsmith to talk about his story.
Well, thank you.
Oh, really? Kodiak Copper is also an old friend of Metals Mason Forum. I first presented the story about 2 years ago, and last year they made a very nice and big discovery. Immediately after the discovery, Tech invested money and then they hold 9.9%. The price they invest is 1.95 Canadian. Since then, the stock has been drip with all these major markets. Today, actually trading much significantly lower than what Tech has put in, but they're actively drilling. They have a lot of exciting results coming. Let's welcome Claudia Thornquist from Kodiak Copper. Claudia, that's yours.
Thank you, Chen. It's a pleasure to be here. Thank you, everybody, for tuning in. Kodiak is an exploration company focused on copper, gold, porphyry exploration in North America. And as Chen mentioned, 2020 was a fantastic year for our company. We made a discovery at our MPD copper project that was a real game changer for the company. That means we are now fully funded for the largest ever drill program at MPD. We are in the midst of it. We have already some good results, and we have more results coming very soon, and lots more all throughout the autumn and winter. Keep in mind that I'll be making forward-looking statements and consult the relevant guidance before making investment decisions. I'd like to start by saying a couple of words about the people behind the company first. Chris Taylor is a very important part of our success. Many of you will know Chris from our sister company, Great Bear, which he also founded. Chris is the founder and chairman of Kodiak. He also very much leads the technical work. He is an expert in porphyry exploration, which is our business, and a very creative, smart, out-of-the-box thinking geologist, and certainly a big part of our success. Myself, my background is more on the business side. I worked for many years with Rio Tinto, also on some of their largest copper projects and mines. And then last but not least, John Robbins, important part of our team. John Robbins is a well-known mining entrepreneur with many successes to his name. I'm sure many of you know John. And John has put together the Discovery Group, of which we are part. You see here the companies that are part of Discovery. It's a fantastic group, Great Bear, Bluestone Resources, Fireweed Zinc. It's a really good group of companies and gives Kodiak a really good network whether it's for technical expertise, contacts, deal flow. I feel very fortunate to be part of a strong group and really believe it makes Kodiak a much stronger company. Now, that's the corporate background, and I'd like to speak now about our MPD project, where we made the discovery. And to start with, I have a short video that gives an overview over what this project is about.
Kodiak Copper is located in British Columbia's prolific copper belt known as the Quesnel Trough, which runs through the south of the province. Kodiak has caught the market's attention with a new copper-gold discovery at its MPD project.
MPD is very accessible. It's a 3-hour drive from Vancouver near the towns of Madre and Preston. Infrastructure and accessibility is obviously very important for economic potential and future development. What's great about the MPD project is its location. We are here in southern BC, where you can work year-round, and in a very established mining area. There are a number of large mines nearby, for example Copper Mountain, or also Highland Valley, New Afton. So it's a very established mining area, and everything you need for an exploration project is right at our fingertips, which makes our work very cost-effective.
One of the things I noticed when we were reviewing the MPD project initially was the presence of copper oxides over many kilometers on surface. So what it indicated was that we were sitting on top of a major porphyry system, and certainly the right type of rocks that indicated that there could be a major discovery to be made. This project has the potential to host a major copper porphyry discovery. And of course, with the drilling that we've done recently, we've shown that that's the case. Now, on initial review of this project, what was really impressive is that we had over 100 drill holes over 10 kilometers, and all of these holes have copper in them. And when we're looking at the rock, we saw the right types of rocks and the right types of features that indicated we could be sitting on top of a major copper system.
The MPD project was drilled historically since the 60s, so for over 50 years. And most of this historic drilling was very shallow, almost all only down to between 100 and 200 meters. And that is where we saw the opportunity. So we drilled deeper, we drilled down to over 800 meters, and that's where we got our first discovery hole right here at this location. It was a hole that was mineralized top to bottom and had in the middle a very nice high-grade zone. That was the first time that we saw that in this large porphyry system there are higher grade zones present.
This is some of the best looking drill core that has been drilled in this part of British Columbia. Now we're located here, we're in Merritt, and that means that in all the areas around us we have copper mines in both directions. What you typically see in this region is about 1/3 of the grade. The grade that we've drilled here on the copper and the gold side is 3 or 4 times higher than many of the mines in this area. The types of alteration that we see, the potassic feldspar alteration, the silicification, the presence of chalcopyrite, the presence of bornite, these are all indicative features of a strongly mineralized copper center.
We've made a great start and had some fantastic high-grade results early on in our drill program. We have now gained Teck Resources as a major shareholder. So now we have our work cut out. We have a large 10 square kilometer area of historic drilling and have only poked deeper holes into one small corner of it. That means lots more drilling to come and lots more potential for our shareholders to be unlocked. It'll be an exciting time for Kodiak going forward.
About the MPD project where we made our discovery. You see here the map where the project is located. And I can't emphasize enough how fortunate we are to be where we are. It's a fantastic location to work at. We are in between 2 large copper mines in a very established mining district with local workforce, local everything. We just turn off the highway. You can work year round. We couldn't be in a better place. And that's, of course, important now to make our exploration dollars go further, but also looking into the future, it will be a big difference maker for the eventual economics of a mine. So last year, we received our first drill results and had a nice discovery hole right in our maiden drill program. And then just about a year ago, September last year, we were able to announce drill results where we drilled into a high-grade porphyry center. And those drill results really were a transformative event for the company. We saw a big rally in our share price. Tech Resources invested $8 million. We were able to raise $12.7 million to set us up for this big drill program this year. So what did we drill? This cross-section gives a summary or shows some of the holes from last year's drilling. The hole MPD 2004 in the middle there, that's the initial hole that generated all the excitement in our share price. And what you can see here in this cross-section is that we intersected this high-grade zone, which is the sort of dark green, dark red shaded areas. We intersected those quite consistently with all those drill holes over a width of 350 meters and down to 800 meters. That's already quite nice size, good start, but obviously lots more work to do. And that's what we're busy doing this year. So we are drilling up to 30,000 meters, fully funded for it. We started with one rig in March, added a second in June, and are now busy drilling with 2 rigs until late in the year, November, December. At the moment, around about halfway through, we've drilled 25 holes, and this map shows you where we got to so far. On the left is where we started, on the right is where we now. So if you look on the left side, at the beginning of this drill program, we had approximately a strike length of 125 meters with a couple of holes we drilled last year. And most of the anomaly that defines our target area, this pink shaded area, which is over 1 kilometer long, most of this area was untested. So that's what was on the cards this year. We drilled along this anomaly. We had 6 holes so far, the results back, and we're very pleased with the results. We did a big step out to the south, and that step out was successful. We intersected high-grade mineralization. So with the drilling so far, we have extended the strike of the mineralization to over 950 meters. That's, of course, already quite some nice size. We're starting to see some real size, which is fantastic. And as I said, we have only results from 6 holes so far. We'll have 6, 7 more holes coming, hopefully very soon. I'm hoping before the end of September. And then lots more results throughout the autumn and winter. In total, we'll be drilling approximately 50 holes, so vast majority still to come. And so far, we have focused our drilling only onto the gate zone, which is where we made the discovery. What's important to recognize is that the gate zone is only one target area, one porphyry center of several on the property that have been historically drilled. And the next step for us will be to also test these other porphyry centers. You see here on the map where we are. The gate zone where we made the discovery is at the top left. We have next on our list the Dillard zone, which is approximately 2 kilometers from where we drill now, and is very much an analogous situation. Same geophysical footprint, signature, very similar copper on surface anomaly. So very much analogous. And Dillard, we will be drilling this year. We'll be moving one drill there very soon. And then we have other interpreted porphyry centers, Man, Prime, down at the newly acquired ground at X, the 1516 zone. So lots more drill targets. We're certainly not short of drill targets anytime soon. And we have a similarly sized large program planned for next year. It will be very similar in terms of what we will be doing to what we've been doing this year. So lots more drilling to come, lots more discovery potential to be unlocked. Last but not least, here's our capital structure. Couple of points to highlight. We are a tightly held company. We have only 49.1 million shares outstanding. Our largest shareholder is Tech Resources with 8.5 million, and board and management own just under 10% approximately. We are fully funded with a cash kitty of 12 million for all the work that we have planned this year and well into next year. And you might notice if you followed Kodiak that our cash balance now is just about what it was a year ago. And the reason for that is that through the year, we have eaten through 6 million warrants in total. All our warrants were in the money after our discovery. So that got us additional cash, but obviously weighed on our share price. But the good news is we have now more or less eaten through most of the warrants. At the bottom, you see our share price. It held up so, obviously disappointing to see. We had good exploration news, but they were clearly not recognized in the market. If you look at our insider filings, you will see that lots of insiders, including myself, have bought heavily over the last couple of weeks and over the summer. We obviously think at these levels, Kodiak is a buying opportunity. And yeah, we have lots of news coming, some very soon, hopefully by the end of September, and then many more exploration results for the rest of the year and into next year. So I'm confident with all the news flow and with our warrants out of the way, our share price will have room to run, and hopefully this will be an exciting second half of the year for our shareholders and investors. Thank you very much.
Thank you, Claudia. I remember last year, before your stock had the big run, you and your management team were also buying the stock, right? That was before the 10 bagger. So maybe history will repeat. We could see another big run of your stock in the coming months. Again, if you have any questions, you can ask by click on the big blue box for any companies we have. We have 2 excellent presentations. We have American Pacific, Kodiak. Okay, next, we're going to from exploration to production. So if you like producer, you like especially silver producer in Mexico, we have a brand new silver company first introduced here. It's called Guanajuato Silver, or we just call it G Silver. They just consolidated a huge district in Mexico. Okay, they acquired the mill that Endeavor spent $200 million to build for $15 million. Okay, and then their current market cap is less than half of that. So, and they're going to start pouring silver in a few months. Let's welcome James Anderson.
And thank you very, very much. Thanks for the introduction, and thanks very much for inviting me to the Metal Investment Forum. I would also like to just extend a thank you to all of your other guests, excellent companies all, and I'm very proud to be able to present Guanajuato Silver alongside them. It is Guanajuato Silver. Matthew, if you've got a tough time with that, just G Silver works for us too, and that's our website, gsilver.com. Chen, what I'd like to be able to do is to describe Guanajuato Silver and our assets and what we're doing in Mexico in conjunction with a couple of the things that you said earlier at the top of this presentation. Your description of what the Fed's challenges are and what the rest of the central bankers of the world's challenges are. We at Guanajuato Silver share your opinion. I think it's going to be very, very difficult for any kind of significant tapering of stimulus, fiscal and monetary. Therefore, I want to be in the silver and gold mining business, and that's what we are doing in central Mexico. Just as an addendum to that, you mentioned, Chen, creating value for shareholders. And I can tell you that at Guanajuato Silver, that's very much, our intention with everything that we do. The purchase of the El Cubo asset, as you mentioned, that changed hands for $200 million in 2012. We end up paying $15 million for it. And I think that that's a really good start to be able to add value to shareholders is to purchase an asset with a lot of value early on. So let me go forward from here. I will be making some forward-looking statements. Let's talk about what I'm going to be talking about. So we believe that we're on track to be Mexico's next precious metals producer. Why do we think that? Because we've already started mining. We started mining about 5 weeks ago. We are currently taking that material from the El Cubo mine and putting it into our laydown yard in front of the mill, which I'll show you some pictures of here in a moment. We are on track, on time, and on budget to start putting material, mineralized material through that mill in the first week of October. Concentrate sales, we anticipate sometime towards the middle or end of October. Projected annual average production. So a lot of people ask me that. The 1.8 million ounces of silver equivalent comes right from our PEA. That's an average over the envisioned 7 years, the first 7 years of production. I can say that we will ramp up to that number next year and go higher than that number. That is what is anticipated in our own internal modeling in 2023. And we get the chance to do that because we are really using the El Cubo mill and 2 mines, El Cubo itself and Pinguico, which is a historical past producer. That was the asset that we had prior to purchasing El Cubo. I'll show you some pictures of that and some of the exploration that we're doing there as well. If anyone doesn't know where Guanajuato is, it's right in central Mexico. It's about 400 kilometers north of Mexico City. This is one of the oldest, most established precious metal camps in North America. The Spanish started mining here within about 60 years of Columbus sailing across the Atlantic. So people have been mining silver and gold here for 480 years. Fresnillo, the world's largest silver mining company, has a very large position in the camp. Endeavor Silver, Great Panther, a number of different mining companies still quite active in this area. So this is El Cubo. This is the asset that we purchased from Endeavor Silver earlier in the year. You can see that it's a very large operation. And indeed, the assets that we purchase for the $15 million are not only the mill and the mine and the resource, but it extends for kilometers out from this main cluster of production assets to warehouses and core shacks, literally kilometers away from what you see here. The pictures that are on this image and some of the pictures in the next couple of slides, these are all pictures that I took with my iPhone about a month ago when I was in Guanajuato. So what you see over on the left-hand side of the screen, one Tuesday morning about a month ago, we had this big giant-sized crane on the back of a big flatbed truck. And what we're doing is we're lifting 2 new cone crushers into our crusher building, which you see here on the right of that image. There's also a primary crusher, which is just outside of the scope of this picture to the left. So we fired that up about 2 weeks ago and ran the primary crusher at about 160 tons per hour. So that's all pre-commissioned, ready to go. We did exactly the same thing with our cone crushers about 2 days ago. So that looks very good. Over in the top right in the mill building, and I'll just take a moment to say, I'm very, very proud of the way that all of the production facilities look right now. They are clean, dry, organized, and ready for production within the next couple of weeks. We have a 700-ton ball mill, a 400-ton ball mill, and a 300-ton ball mill. We will start only running the 700-ton ball mill in the next couple of weeks and add in the other ball mills in November. And from the mining perspective, maybe the most important shot is the one on the right. We started hauling material, mineralized material, vein material, silver and gold bearing material out of the mine about a month ago. The picture that I took here on the right was one of the first haulage trucks that came out of the mine. And we've been, as I mentioned, we've been putting that material in the laydown yard at El Cubo. So that material is all ready to go and it's pretty good grade. And that we're probably up to about 8,000 or 10,000 tons of material in the laydown yard. So that is ready for us to go as soon as we flip the switch on the mill in the next two weeks or so. One of the things that I do like to emphasize here, we paid $15 million for this asset, and we get so much value for it. The access that you can see on the bottom right image, that's 4 meter by 4 meter access. I took that picture from the front of a pickup truck. You can drive the pickup truck for about 25 minutes into the mine. And if you look at the Vulcan model just above that in purple with all of the purple, and all of that is access. Most of it's 4 meter by 4 meter access. That's probably $100 million worth of development work in the mine. Over on the left-hand side of your screen, you see some of the vein material itself. Because Guanajuato is not only a 480-year-old mining camp, but the city of Guanajuato is a beautiful old city. It is a UNESCO World Heritage Site. When you're walking in the Old Town area, it's kind of like walking through an old town in Italy or in Spain. And because of that, and several other reasons, but principally because of that, we get to attract all kinds of really, really good Mexican mining talent to our company. We have, as per a news release from a couple of weeks ago, over the last 4 months, we've hired 168 personnel. 167 of them are Mexican nationals. And I think that's a big statement about how we want to run the company and our ability to attract excellent mining talent within Mexico. A great example of that is Pedro Delgado, who's pictured in front of this vein system. Pedro is our mine manager. Pedro worked for Fresnillo for about 25 years in the Guanajuato area. And Pedro worked primarily at their mine called Peregrina, which is really an extension of Cubo. If you follow the main Villalpando vein system to the north, it ends up trending off of our claims and onto Fresnillo claims. And that's where Pedro worked for many, many years. So for him to come and start operating our mine, it's really like him coming home and operating a mine that he worked at and operated for many years for Fresnillo. What you see on this image is a long section of the Villalpando vein structure. There's two principal veins, northwest trending veins at El Cubo. One is Villalpando and one is Dolores. They're separated by about 700 meters or so. We're concentrating for the next 24 months our mining at Villalpando at the 3 stopes that you see here right now. They are all drilled off. All of the red dots that you see are drill holes that Endeavor drilled while they were operating the mine. And all the yellow holes are drill holes that we are currently drilling, primarily infill drilling right now, and primarily for grade control so that we'll have better grade control as we continue to mine these areas. Blasting and active mining is going on at the 1850 stope here. 2175 will come next. We need to do a little bit of development work, driving an adit about 150 meters underneath the Ceballetas stope, and that activity will begin soon as well. One thing that I do want to mention, a lot of people ask, so why would Endeavor give up this asset? When Endeavor purchased this, they wanted to make it into a much larger operation than maybe El Cubo can properly support, which was their notion about why they were happy to spend the amount of money that they spent on it. They then spent about $30 million building the mill that we are currently refurbishing. So they needed, in their minds, that they needed about 45,000 tons a month to make this operation make sense. And what they wanted to do was to mine these relatively narrow but good grade veins in a mechanized and very wide way. So in their computer modeling, what they decided to do was to take about a 2.6 meter minimum vein width through this area. When they do that, they see about 30,000 tons. Now, what we want to do is to mine it more narrowly. And the interesting counterintuitive thing that happens, as soon as we look at this with a minimum vein width of 1.4 meters, all of a sudden a whole bunch of the material goes up above cutoff grade, and the tons light up like Rudolph's red nose in a computer model. So what we see in these areas is about 240,000 tons of material that is drilled off, that's very good grade, and that's readily available. And just before we move on, I will highlight drill hole CAS50 as kind of the poster child from what I'm talking about. You can mine it over 4 meters and get 194 grams of silver equivalent. And in today's pricing environment, even with the recent declines in gold and silver, that might almost make sense. What we would rather do is to mine 1.4 meters at 470 grams. We take less tons at higher grade. Our costs per ton will go up slightly, but our costs per ounce will be driven down considerably. And we will make very good money mining it in that fashion. Here's Pedro again in front of one of the extensions of the Villalpando vein, which I just love this shot. You can see the brecciation here and a lot of the mineralization. This is an asset that's been mined on and off, but mostly on for 200 years. So long as we don't mine it too quickly, there will be years and what we think internally decades of mining at this asset. So our PEA discusses a 7-year mine life and about 7 million ounces of silver equivalent in indicated resources, 20 million ounces in inferred. I do want to talk about our management team. Hopefully I've got enough time to do that. 1 month to production, and really it's only a matter of weeks. Our major shareholders, if you're thinking about investing in our company, often nice to see who's investing alongside you, other than Chen, of course. Endeavour Silver is our largest shareholder by virtue of the fact that they took some shares back in partial payment of us purchasing Kubo. Mermacan Capital is a Connecticut-based precious metals fund. Dan Oliver is the fund manager and is also on our board of directors. G Silver directors and advisors, including myself, also own a great deal of the company, as does Eric Sprott, who came in on the last placement. We've got about $9 million Canadian in cash as of the last day of the last month. We had a pretty good run. We pulled back with the rest of the market. I suspect that as we start putting material through the mill and getting some revenue, that will change fairly dramatically. You can see some of the numbers from our PEA. We are very happy about what they suggest can be operating costs per silver equivalent ounce, an IRR derived from the PEA as well. So not only, again, did we buy the mine, the mill, the resource, we've also purchased 7,000 hectares of prospective mining claims in one of North America's oldest mining camps. I'm going to talk just briefly about Penguico. It has a storied history all of itself. This is our other project, only 8 kilometers away from Kubo. So material that we have already and material that we are exploring at Penguico can very quickly be sent through the mill at Kubo. It was once upon a time an asset that was listed on the New York Stock Exchange about 110 years ago. It was the highest grade mine in the Guanajuato area at that time. So, we think that exploration in this area can benefit us tremendously. And that exploration is ongoing. We're currently drilling drill hole 19 of the season. We purchased our own drill rig. All of the red drill holes are ones that we've drilled already. It's a little hit and miss right now because there has not been a historic drill program, but some of the grades here that approach 900 grams of silver equivalent are very exciting. I think once we get a better handle on where those high-grade shoots exist and how they exist geologically in this epithermal system, we'll be able to target that better. All of the blue holes will be drilled, we think, prior to January next year. And then we can decide about whether we put together a resource here, sooner or later. There's a bigger, more blue sky target at depth where the major system that controls mineralization through this whole area is called Madre. mining has taken out about 2 billion ounces of silver over the centuries. From there, it extends onto the Penguico property at depth. What we need to do in the months ahead is to drill and test what happens where the Penguico system and Veta Madre come into contact with one another, which we believe is a very exciting drill target. I could talk about all of the people who, the team that we put together in a short period of time is outstanding, but we are running out of time. I'm simply going to talk about Hernan Dorado, who's our Chief Operating Officer. He's worked all over the world, in Canada, in Australia, but he's gone home to Guanajuato. Hernan is a graduate of the University of Guanajuato, mining engineer, and he is really the life and soul of our company in Guanajuato currently. And Ramon Davila. Ramon, in my estimation, has one of the best CVs in Mexican mining. He was the Chief Operating Officer and on the board of directors of First Majestic from when they had 4 employees to when they had 4,000 employees, from 0 production to 12 million ounces of silver production per year. Ramon, and then he went on to a political career where he was the economy minister for the state of Durango for 4 years. Ramon is a giant in our industry in Mexico. We are very, very happy to have him on our board of directors. And more, Ramon is getting involved in the day-to-day activities of the company. When I was there a month ago, Ramon was in Guanajuato for 4 days. He went underground, looked at everything that we were doing from a mining perspective, from a processing perspective. Having that kind of experience on our company is invaluable. So at that, Chen, I'm going to turn it over to you, sir, and the next company on your docket.
Thank you, James. Hopefully you will build a second Majestic for the shareholders, including myself.
Very good.
So next is Lakewood. Lakewood Resources, a recent IPO. If you want to invest in American Pacific, say, oh, before 2 years ago, I want to get a 10-bagger. Lakewood is just recent IPO, very similar to American Pacific about 2 years ago. And fortunately, both me and my subscriber participate in your IPO round. They have 2 potentially world-class projects. One is a Coeur d'Alene, and one is in the silver state of Nevada, used to be the biggest silver mine in Nevada. So both projects have huge potential. So I don't want to steal too much thunder. Let's welcome Morgan Lackstrom. Morgan, the floor is yours.
Thanks, Chen, and thanks to the Metals Investment Forum for having us. Like Chen said, we're a recently formed silver company. I'm going to make some forward-looking statements here. Please take a look at that and understand it. We have a portfolio of 3 past-producing silver mines. One in Coeur d'Alene District in Idaho, the Silver Strand mine, only ever produced down to 90 meters in the same rock formation as multiple 100 million ounce producers. 2, we have Eliza. It's in the historic Hamilton District. It's next to Treasure Hill off the south side of the Eberhard Fault. Grades on the property have come up to 18,700 grams per ton. And we're looking to explore and put that together. 3, we have our Silverton asset, which is in the Silverton District of Nevada as well. Past producing mine, 933 grams a ton out of it. No modern exploration on either Eliza or Silverton has been completed. We have a strong team in the background here and we'll touch on all 3 of these and the team going forward. I do want to mention that we use something called the triple-pronged approach, not only in our assets, but in the way we look at our company. Potential large exploration payoff, near-term production potential, and meaningful acquisitions. Just wanted to pop up the Lassonde curve to show you the potential valuation and where we sit on there. We'll zoom it in. We have 3 assets that sit on the very bottom of this curve. So like Chen was saying, a potential American Pacific or any of these other very successful companies, we have that potential ability with 3 potential top tier assets. Want to go over our capital structure very quick. 37.4 million shares outstanding, 2.7 million options, and 7.8 million warrants. This gives us a very tightly held structure. Lots of room to grow, just like our assets. Well, let's touch on our first asset, the Silver Strand and Burnt Cabin mine. Silver Strand, like I said, 90 meters past producing. That's the depth of the mine. There's a land package that we're able to consolidate, 5.5 kilometers, that has not been completed before. So it gives us access to the entire strike length all the way up to Burnt Cabin. We've seen a lot of mineralization on surface, very positive for subparalleling veins, and we're exploring that every day with the surface geo program and drilling soon. We just want to say that we're in the Revit formation. So that's the same formation of Sunshine Mine, Lucky Friday, which is still producing, and the Galena mine. All have produced more than 100 million ounces of silver in their mine lives. Our phase 1 exploration program, that's kicking off here this month. We decided to go back into the underground. We rehabilitated it, became 2 weeks ahead of schedule on the rehabilitation. We're looking at mobilizing a drill into the underground and doing some surface drilling as well. So that's kicking off right away. We've had some very strong grades from the underground, 2,744 grams per ton silver, 9 grams a ton gold. So we do have something that's called a gold credit. So as we transition into production over near term, we would look at using that gold credit to boost up our silver production. It's pretty exciting from that standpoint. We've had surface samples, 255 grams a ton silver, just under 12 grams a ton gold. So that gold credit carries on all the way up to the Burnt Cabin mine. Cue the video. We're going to play a nice video on our lives in Hamilton area.
The Hamilton silver discovery in the late 1800s is the most prolific silver discovery ever in the United States of America. It sparked one of the greatest silver rushes of its time, with over 10,000 people making their way to Hamilton, Nevada. It is the reason Nevada is called the Silver State. The silver grades were spectacular. Production grades ranged over 2,500 grams per ton silver. Up to 40 million ounces of silver ore was mined from an area less than 1 mile long and a half-mile wide. Once mining ceased, the people left, and no true modern-day exploration has been done since. But what if half of Hamilton's high-grade silver ore remains?
So we're looking at the Hamilton Silver District, up on that mountain there, just down to the right of the tall peak, is where the majority of that $70 million of silver came from in the late 1800s. So that's the North Block. That's where all the production came from. You can see that it's a lot higher. It's got limestone sticking out, so that's the Devonian Nevada limestone. And you can see here, this is where I'm staking. This block to the south is notably lower. And you can see right about here, this is the Eberhard Fault. So there's a large east-west fault, and on the south side, this is dropped down. The north side, it's up there. So we've got Devonian limestone on top. We got a little bit of Mississippian shale that's just on top of this. Over here is mapped as almost entirely Mississippian shale, which means that those Devonian rocks that are up there that produced all the silver are just a little deeper down here. In fact, it looks like they're actually peeking through this Mississippian stuff right over here in a few places. So this is the Eberhard Fault. They stopped mining basically at the Eberhard Fault, although there are a couple of sizable mines that we'll see in a little bit here that are just on the south side and seem to suggest that the mineralization continues south of the Eberhard, which would mean that this block could be the missing piece of the Hamilton Silver District. We're at what I would consider to be the centerpiece of the argument for there being mineralization on the south side of the Eberhard Fault. In fact, it's almost indisputable from the records from this place, which is the California mine. Now, the Eberhard Fault is just over this hill. You can see Treasure Hill in the background there. So we're on the south side of the Eberhard Fault, south side of that big fault, just on the south side, so at the north end of the south block. Now, this mine, the California mine, it dates back to at least 1870, because in that time, a government official wrote a report and said the California mine is the most noted mine south of the Eberhard Fault. That's a quote, south of the Eberhard Fault. So there is mineralization here. The mine was sold in the late 1800s for $1 million. So $1 million in the late 1800s was a lot of money. You can see this is the old shaft, the extensive workings. The old record said the mineralization here was quite uniform in grade and thickness. There's another working here. This is the main one though. Now, a couple of important points about this main shaft. One, the grade was reportedly ranged from 5,600 grams per ton silver up to 18,700 grams per ton silver.
Thank you for that. So that outlines our Eliza Silver project with the past producing California mine. 5,600 grams to 18,700 grams per ton. Most mines nowadays are built on 150 to 200 grams per ton. So high grade, large potential exploration payoff there. We transition over into the location. Eliza is easily accessible outside of Eureka. I've been there myself last week, walked the ground, easy access, great jurisdiction to work in, historic mining jurisdiction, and really looking forward to getting some geochem work going and exploration work going there. So we transition down to our Silverton silver mine, past producing silver mine, up to 30 ounces or 933 grams a ton silver, untested ore grade across surface. This is down near Tonopah, and it has active mine, it used to have active mine work. As you can see in this picture, this is one of the old mine shafts. I took this picture myself. It goes down fairly deep. Nothing has been done there since 1930s. Nothing. There's a lot of geochem work around the area. A key thing to keep in mind about Silverton is one half of Silverton is hosted in the unwelded tuff, similar formation or the exact same formation as Round Mountain. So we think there's a large gold deposit as well on this property in the same rock formation as Round Mountain. So as we see with this slide, the rock formation, Round Mountain, unwelded tuffs. So I want to go towards what we're looking at as a company. 3 high-grade silver assets. East Nevada asset, Idaho two assets in Nevada, 1 in Idaho. All prolific silver jurisdictions, all past producing mines with possible near-term production potential. So the blue sky on those mines is quite extensive for us. I want to give a bit of background on myself. I might come from the mine building background. I've spent time with Freeport-McMoRan in Indonesia. I spent time in the Oyu Tolgoi complex in Mongolia. Spent time rehabbing and bringing a mine pact into production in Ghana and West Africa, and recently with Sabina Gold and Silver up at their marine laydown facility. We have Lawrence Ralston, chairman of Metallo Royalties, started West Bay Capital Advisors. He had Resource Opportunities, one of the most prolific news writers on the planet in that side of it, and an excellent geologist. We're very happy to have him on board. Phil Mulholland is our chief geologist. He has a background with people like Kinross, Barrick, Western US Focus, really knows this rock formation in this area well. a definite asset to our team. We have Alnesh Mohan, our CFO, does an excellent job for us. We have Jonas Lang on our boards, been a part of raising raised over $50 million in capital. He's the executive VP for Maple Gold Mines and provides a tremendous asset in the background on our capital markets side. This is our Lacey project. We are in very early stages of that and should have some results coming out in short order. I want to remind viewers that having this triple-pronged approach of having 3 past producing mines, having the large exploration payoff potential, and having the ability to turn them into producing mines in the near term will really give you that payoff if you look at the Lassonde curve and where we are sitting. So I want to hand it back to our amazing host, Chen, and thank you very much for the spot on silver as well. We at Lakewood fully agree with the potential for silver breaking out as well.
Thank you, Morgan. Hopefully you can rebring the silver state back to Nevada.
Yeah, dropping the silver hammer in Nevada, yep.
Okay, next is another early stage company. If you want to get in early, this one it's in Finland. It's called FireFox. They have a huge land package in Finland right next to Rupert, who just made a major discovery. Rupert just announced this week they have 4 million ounce, grade 2.5 gram per ton, mostly open pit. Okay, well, Rupert's typical drilling result is 4 gram over 100 meter. But look at FireFox. Not far from Rupert, they just recently have a discovery of 8 gram over 16 meter. And they were just actively chasing this discovery. Let's welcome Patrick Highsmith.
Thank you, Chen. It's great to be here and great to talk about FireFox, a pure play gold explorer in Finland. And I'm here on behalf of our CEO, Carl Lothberg, who can't be here, but I'm looking forward to telling you the story. And I certainly am going to make some forward-looking statements today. So please apprise yourself of the advisory here. And I'll also be talking about a lot of technical information. So please consider this language here and on our website. Look, there is a major new gold rush in Lapland. It's great to be part of it. And as Chen says, tiny little FireFox is an important player here. We hold over 800 square kilometer of tenements. We have 4 drill-ready projects. We have an amazing team with a mixture of youth and energy and based in Finland. Our CEO is based in Finland and most of our technical team based there as well. So let's take you through a little bit of FireFox's history and activity. We founded the company in 2017, IPOing in 2018. And even then we had some core of institutional shareholders who sort of saw the long game of gold discovery in Finland. But about 16 months ago, we had some transformational investments from groups like Crescat Capital, SSI Asset Management, Mike Gentile, and others who've given us a nice mix of institutional shareholders, a significant shareholding at the board level among me and Carl and his private company, Magnus Minerals. And so today we have about 100 million shares outstanding, a little under $3 million in the bank, and several $1 million of in-the-money warrants. But what's maybe most interesting about where we're working is in Lapland, in the Greenstone Belt there are 4 juniors and 2 majors that control this belt of gold. And I just want to show you the enterprise value here, where you can see Rupert has raced ahead, obviously, with the success at their Ikari discovery that Chen mentioned, significant occurrence of almost 4 million ounces of gold and nearly 50 million tons of ore, quite near surface. So it's a great discovery. And then we see certainly FireFox Gold at a pre-discovery valuation here, S2 Resources, a junior out of Australia, and Orion Resources, all major players in the Lapland Greenstone Belt. That, Agnico Eagle, and B2, and that's it. Many greenstone belts around the world like this, you'd see a dozen or 2 dozen players. So it's a different world. So let me just show you a little bit about the Lapland Greenstone Belt. This map is really the gold prospective area portion of the belt. And you can see here a scale bar, 30-kilometer scale bar there. And a few important landmarks, the town of Kittila here with its international airport, paved highway sort of crisscrossing the belt here, even though we're 150 kilometers north of the Arctic Circle. That's Finland for you. Here is Sodonkula in the lower right, where our office is located. And you can see a number of our peer companies highlighted in colors here. Of course, here's Rupert in green and the important Ikari discovery here. Orion Resources in blue with their Risty Boulder discovery that made so much news back in 2017 and 2018. Shown in pink is S2 Resources Holdings, and then in the big bold gold color are FireFox's tenements. Now, the major companies I mentioned, of course, we have the Kittila mine here operated by Agnico Eagle. That's the largest mine in Europe, about 9 million ounces of historic production and resources remaining, and their land position is close there. The light brown is B2 Gold, one of our neighbors, a large land position here. Now, as we look a little deeper at this greenstone belt, you'll notice this major black sawtooth pattern here. That is the Serka line, one of these through-going transcrustal faults that we get familiar with in these greenstone belts. Some historical mines along it that you can see here, these red stars, and over here at Patavara, and then other more recent discoveries such as Risti and, of course, Ikari, and one we're going to talk more about now, FireFox is drilling at Mustajärvi. But I want to point out there are 4 drill-ready projects on this conveyor belt of opportunities that we have in Finland, and we're going to touch briefly on each of those. But first, we'll talk about Mustajärvi. First, here's the paved highway passing through the property that you can see there. I'm showing you a magnetics map over about 3.5 kilometers of strike length of this structure that we've outlined in black here. This is, again, one of these transcrustal faults, and the magnetics image helps us see the geology a bit. This is a mafic volcanic and ultramafic unit on the south side of it, metasedimentary rocks on the north side of it, and the project straddles really that structure. Now, in the 1990s, Outokumpu made a discovery here. They drilled 12 really shallow holes, about 50 meters or so deep, but in those, they had several intercepts between 10 and 22 grams per ton near surface over fairly narrow widths. And a small miner came in and even produced a little bit of gold from this area we call the Central Zone. We acquired the project in 2018, conducted this detailed magnetics work you see, base of till sampling, which gives us these orange anomalies in gold sampling across the property, and we began drilling in 2018. Those weren't great years in the gold business, but nevertheless, 2 meters of 45 grams per ton, quite near surface, some pretty exciting work. We returned there in 2019 and 2020, hitting some more narrow high grade. And then we realized that this pattern continued another half a kilometer step out here. We began to drill some more gold in a new area where we intercepted 2 meters of 33 grams we reported early this year. That's when things began to change. And we put a structural model on this, working with our team here. And we realized that along this structure, there are these several bends in that structure. And at each place that we had those flexures, we had these dilatant zones that we've shown with this little cartoon. So we began focusing more in the northeast target. We stepped out another 150 meters from that hole in April, and throughout this summer, we've announced 2 drill holes now with 150 gram meters thickness of gold along this fence. And we've also gone even further out, another 650 meters out, and intersected more gold over 3 grams per ton locally here, giving us now 2.1 kilometers of strike along this structure with significant gold, higher than 5 grams per ton in multiple pods there. It's a great easy access property, and our geology work has really come along in the last year with our new structural geologist, who's our general manager of exploration here. You can see our neighbor is B2 Gold to the north, and so we continue to advance the project. And let me show you what these discovery holes showed us. Here we see that first hole of the 2021 program drilled to the north along a fence that you can see here, and we cross over a shear zone into this wide pattern of alteration, which is albite alteration. It actually stretches for kilometers in a northeast orientation along this shear zone. And we encountered a number of veins in that hole, some of which are quite good grade, like the 27 grams here over narrow width. But of course, we drilled 94 grams over 1.35 meters, including visible gold, and that got our attention in June. Then we came back and we went about 50 meters north and drilled a steeper hole to undercut it to see if this mineralization continued down dip. And that's the hole 10 that we just announced last week that you mentioned, Chen. almost 8 grams per ton over 16.45 meters, again made up of more high-grade intervals within that. So importantly, hole 10 is the deepest hole. It touches about 300 meters below surface. It contains 20 veins that are containing gold there. And really we see an intensity of alteration with depth going down dip to the south and a thickening of the noted high-grade zone there. I'll just show you some photos and some tables of these results. Here's the first hole that got us into the northeast target that I mentioned, hole 1 with the bonanza grade. A little bit of visible gold here in this photo. And what you notice is a lot of white colors in here. These are quartz veins, often with calcite. The black mineral is tourmaline and pyrite. That association always leads to gold at Mustiarvi. So in this core box, there were both narrow intervals and thicker, higher grade intervals that you can see here. But when we undercut that hole, things changed quite a bit. If you notice in this core box from hole 10, we see consistent quartz and silica-rich rock. It's sometimes shattered. You see some iron oxide staining there, but this is intensely veined. Maybe these are coalescing veins, or perhaps it's a breccia that has formed from grinding up several of these veins. But within that, we see massive sulfide at the bottom of this interval, one of the highest grade portions of the zone. And we also see a lot of open space. That open space is probably indicative of what we call epizonal mineralization in orogenic gold deposits, meaning the shallow portions of the system. And of course, here at Mustiarvi, things have been getting better with depth. So we're quite keen to have this high-grade intercept of 16.5 meters from less than 200 meters below surface that runs an average of almost 8 grams. And notice again, it's not just one high-grade zone, several narrower intercepts in the range from 6 to 42 grams per ton over those 16 meters. So great results at Mustiarvi. And guess the best news is we'll be back here in early October with a drill rig for a fully funded drill program in which we will step out quite close to this high grade to really get an understanding of the geography, where it goes, and where we can go to hit more of it. So we're quite excited to move forward at Mustiarvi. Now, you might ask yourself why a small company like this has such a huge portfolio of projects and why we're drilling 4 projects in one drill season. Well, the answer we think is here. The central Lapland greenstone belt is quite comparable to the number of those around the world, like the Abitibi in Canada or in Western Australia. You'll note plotted here to scale, they're a similar size, similar age to those rocks in West Africa that have produced so much gold. But look at the other belts around the world. Around 40 deposits in the Abitibi for 85 million ounces of resources and growing. In Western Australia, maybe 45 deposits and 75 million ounces and growing. And yet, even when we've added in Rupert's discovery, there are only 14 deposits so far in Lapland that total about 13 million ounces of resources. Statistically, it's pretty much a certainty there are going to be more large deposits that you see in these other belts. So we've taken the approach of a major company, we've grabbed a lot of land, and we have an active conveyor belt of projects. And I'm going to show you 3 more that we'll be drilling before this program finishes in the spring of next year. Yesio, a large project about 20 kilometers east from where we just were. You can see the outline here, scale bar for your reference. And here we have Orion as our neighbor. They produced that great boulder discovery up at Risti back in 2017, about the time we were launching FireFox. And then they've also drilled into some gold here in the Launi zone. This is that major Serca fault that I was telling you about before. It passes through the Utsamo prospect on this large Yesio project. And this area happens to be quite swampy where this fault comes through, much like Rupert's discovery area at Ikari. So we've just actually still going with a large base of till sampling program here at Utsamo. And in the next month, we'll be announcing the targets that have come from that as we drill through the glacial sediments to sample below those to target the drilling that we expect to conduct at the Utsamo target, fully permitted, ready to drill. At the south end of the property, though 9 kilometers away, at the Kodiak belt, this permit application here, we've just drilled the first time ever here and noted significant gold within 200 meters of the highway in a brand new area of the Yesio project. So just looking in at that Kodiak belt here that we've outlined for you with magnetics in the background, this was really boot leather prospecting in a greenstone belt, the kind of thing we don't see that much of anymore. 6.5 grams per ton was turned up in a rock chip sample in this area in 2019, right before the snow flew. We got back in there in 2020, collected a lot more samples, and we have a range of samples now from 2.5 to 10.5 grams per ton gold many of those outcrops, some of those boulders. And we got into this area earlier this summer, and we drilled 3 holes at the southern tip of the property near the highway here with landowner permission before we even had our permits here. And in those holes, we intersected some significant gold, 2 meters of over 3 grams within 20 meters of surface. And we're just really at the tip of the iceberg here. If you follow these major faults up through these magnetic terrains, you can see cross-cutting structures here, probably indicating mafic volcanics with sedimentary rocks cut by these big structures, a couple of kilometers away from Orion's drilling. And we expect the permit here to be granted before year end. And this part of the Kodiak belt will see a drill again before the end of the drill program we're about to launch. Just shifting a little bit north back to the area that's gotten so much attention with Rupert's discovery at Ickery. Here you can see the numbers at Ickery's resource, almost 50 million tons of 2.5 grams per ton. There's the Ickery prospect, less than 4.5 kilometers from the boundary with our properties to the north. You can see FireFox holds a huge area to the north of the Ickery discovery, including our Sarvi and Leto freshly granted permits that enable us to launch mechanized exploration immediately to the north of the Rupert discovery. And if we zoom in on that Sarvi project here, adjacent to Ickery here, you can see again, we've done detailed magnetics here. The permit being only granted a month ago, we've commenced trenching on the west side and base of till sampling in this swampy area here that adjoins Rupert, where again, we have glacial sediments over the top of the bedrock. So we're relying on the magnetics here to help us look at the setting for these rocks. We knew we had gold and arsenic anomalies from till sampling in this area. We had some favorable rock samples in this area. But if you look at the setting at Ickery, again, we use a lot of structural geology here. East-west structures are very important with cross-cutting northwest faults and northeasterly faults, which we see propagating onto the Sarvi project, where we have this major east-west break, some important structures, both northwest and northeast trending structures, some of which already have some anomalies associated with them. So it's this area here where we'll prospect the swamp area very heavily, follow up on the base of till sampling and additional work that's going on there. And just to show you scale, these are pretty large properties in Finland. This is a footprint of Agnico Eagle's operations up at the Kittilä mine. You can see these properties can easily host a major mine, just as we've seen at the discovery at Ickery. So we'll be active. The drill will arrive at Sarvi, long awaited, I can tell you that. The drill will arrive here in early October. So it's been a great year for FireFox, and for once things sort of worked out well on timing in this business. We completed the drilling at Mustajärvi in May. We announced the results throughout the summer, 2 150 gram meter grade thickness holes in the same drill program, and a fully funded drill program with a drill arriving here in early October to follow up. Important permits just granted at Sarvi, right next to Rupert's great discovery, where base of till sampling and trenching are already underway. Again, the drill will arrive there before the end of the year. And Yesio, a huge project that's been with us for a while now, has finally gotten some reconnaissance drilling that ripped into some new gold in a new area there, and we'll announce in the next month the results of a large base of till sampling program there, which will no doubt lead to more drilling at Yesio as well, starting in Q4. So, stay tuned to FireFox Gold. We're doing gold exploration in Finland, and we're finding some. So thanks very much for having us, Chen. Good to be here.
Thank you, Patrick. Looking forward to your more success. And we're going to Q&A next. If you have any question, you can still ask by clicking on the big blue box on the bottom. Okay, so we go straight to Q&A. We're running a little bit short of time. So let's start with American Pacific. So, the question from the audience is, what is your lead asset? Which asset do you like the best? Forward.
Great question. I think I'll answer it this way and just say, look, we've got sort of the real three opportunities at high-grade assets in the Western U.S. that we think can all be the desire of a major at some point. We all think they all have multi-million ounce potential. So we'll be focusing on all three simultaneously, and all three are going to be drilled this year. And then the fourth, with Red Hill, if we can get a partnership in there, we feel the same way about Red Hill. We just think the smart money there is to be spent by bringing in a partner, which we're going to be able to do and drive that forward. So that gives people 4 shots at goal at significant discovery.
Great. Do you plan to add more asset as we going, as you see, fit for the portfolio?
Yeah, that's a great question. I mean, I don't want to sit here a year from now with 10 assets. I love what we have. They're all getting to the point where they're, Madison and Tuscarora in particular, district scale. There's enough for us to do here. At $100 million or about $115 million market cap, fully diluted, we're still relatively small with a large ability to grow. But I think we've got a lot to focus on ahead of us, and we've got the assets to do it.
Okay, great. What's your plan for your asset? Do you plan to monetize it one by one to shareholder, or you want to potentially sell it to eventually to the highest bidder?
Yeah, great question, Chen. The question that we've in the same vein that we've received a lot recently is, are we interested in spinning out some of these assets to create other companies with? We are not interested in doing that. We're looking to retain all of this value within American Pacific. That's how we see this grow. It's great having Rio as a partner. They're driving ahead at Madison. Now that we're fully capitalized and getting a good, strong position on the stock currency side, now we can go in and we can focus. We can spend money drilling at Gooseberry, then take that drill and start drilling at Tuscarora. We'll add significant value by drilling those projects, and with success, we'll go back for more significant campaigns to make those assets bigger. That's how shareholders do well going forward from Impact from here, is by us going and drilling and creating significant value, and we intend to do that.
Okay, great. Thank you for the great presentation. If you have any question, you can ask directly to the company. You can find it on the American Pacific website. And we next with Kodiak Copper. We have quite a few questions here. So why did Teck invest in you, Claudia? And how much is Teck involved in the company?
Well, Teck liked our initial drill results. That's when they became involved. And I think what they see in MPD is what we see as well, is the scale potential, the potential for real size. They are a major company. They're not interested in small projects. And they invested because they think MPD has the potential to become a big project and mine. And the second part of your question, how are they involved? They've been a fantastic partner for us, have been very supportive. Their exploration guys liaise with our team. Actually, their lead geologist only lives an hour's drive away, has been to site several times. They've helped us with exploration, and obviously having them on site and getting their comments and insights is very valuable. They know the area like the back of their hand. They are in Highland Valley, just a couple of kilometers north of us.
Okay, yeah, there's a other set of questions. If we comment on the ESG for Kodiak, and have any impact by the recent forest fire?
Well, ESG, that's a topic very close to my heart, and I think it's really crucially important for a junior miner to really do that well. That mitigates a lot of risks going forward. So what we are doing is we certainly have very strong environmental programs in place early on already. We are consulting with 21 First Nations in total in the area, and have so far had a lot of support from all of them, from all the ones we've dealt with. They've helped us with our permitting, and it's a very good working relationship. And I strongly believe there are mines that did not get built in history because they didn't have the support of local stakeholders. And conversely, there are other mines that did get built specifically because they had so much support. And we're certainly working hard to be in the latter camp and putting all the right pieces in place early.
Okay, great. How about the forest fire? Can you comment?
Forest fires, oh yes, they were certainly all over North America, really problematic and a terrible fire situation. There were lots of fires in BC as well. We were impacted a little bit in that we decided to, as a precautionary measure to shut down the drilling for, it turned out to be only a week, a relatively short period, because in the area highways were being blocked because of the fires, and so escape routes were blocked. Fortunately, after a week, the weather became better and the fire situation less severe, and we were able to restart, and we're now drilling with 2 drills, and it didn't have a major impact, but certainly it was a difficult season for the firefighters and, well, for the communities, and I'm very grateful for all those who helped fight those fires.
Okay, great. And the final question that there's audience, I don't know whether it's appropriate, they're wondering when the next set of results will come out from Kodiak. If you
They'll come soon. This year, I think we'll run into a similar situation as last year, that all the juniors will be waiting long for results because all the labs are quite booked up. We are expecting the next set of results within a couple of weeks. I hope they'll come before the end of September or otherwise early October. So that should be exciting. And then the rest, that will be then in total some 12, 13 of the around 50 holes we'll drill this year. So the vast majority is still outstanding and will come over the rest of the autumn and throughout the winter. It'll be a very news-rich and catalyst-rich second half of the year and winter for Kodiak.
Okay, great. Hopefully they will have another round, just like you were buying before the big discovery. We'll have another round this year. Thank you, Claudia. If you have any further questions, feel free to contact the company directly. And then next, we have our G Silver. And so the audience, some audience just wondering, you know, we have the Endeavor failed with this mill and then this project, and they couldn't make money. What I think you explained in your presentation what you plan to do. Can you just put it more clear that why you can make money and then you can do better than Endeavor has done? Thank you, James.
Sure. Thanks, Chen. So I think there's 2 elements about that. I think it's unfair and incorrect to say that Endeavor didn't make any money on it. Through 2017 and through 2018, they did make a little bit of money on it. But with one of my very first conversations with Brad Cook, when we were negotiating the purchase of El Cubo, he said, James, listen, we're going on to bigger and better things. And they feel that Terranera, which is their very large development project in Western Mexico, is a bigger project for them. So they wanted to move on. They were dealing primarily between the period 2013 and 2019. They were dealing primarily with $17, $16, $15, $14 silver. We obviously have a significantly better silver environment, but the biggest single reason why we think we can do better than our predecessors is this idea, Chen, of mining more narrowly, higher grade, and using a 45,000 ton per month plant at about 25,000 tons a month. They built a really big mill. They built a mill that's bigger than the mine. Now we have ambitions. We call the company Guanajuato Silver for a reason. We've got ambitions and ideas about using other deposits in the area, including Pinguico, that's only 8 kilometers away, that we have material there already that's ready for delivery to the mill. But from El Cubo itself, we can mine more slowly, more narrowly, higher grade, and that will drive profitability for us.
Okay, great. Thank you, James. And the next question from audience is, what's the status getting the permit to drill the Lavina Madre area?
Right. So yeah, and that's a fair question. You know, I've been talking about drilling that target for a while now. When we began discussions with Endeavor to purchase El Cubo and the 7,000 hectare land package, there was a tiny little claim that came along with that was right next to Pinguico. And it looked to me, and it looked like to our geological staff, that would be the perfect place for us to drill for Veta Madre adjacent to our property. And so therefore, what I told everybody, well, let's just forget about that for a few months. Let's close the El Cubo transaction. And then let's look at drilling that target from our new claims right adjacent to the old Penguico claims. When I was there a month ago, Lauro Barahan, who's our exploration geologist in charge of exploration at Penguico, we went out into the field and had a look, and he convinced me that that was not a particularly good idea, that there's a better way to drill for the Veta Madre Penguico contact on our original claims and on the very southern part of our claims. So with that in mind, we've changed directions a little bit. We'll be having that permitting done within the next couple of months, I think. I want to drill it. I'm an explorationist at heart. It's a fantastic target. If we have to wait another month or 2 or 3 in order to drill it correctly, because it is a game-changing type of target. So we want to be able to drill it correctly. The new information that we have, has changed our minds about where and when and how we will drill it. But it's a target it's a question that can be answered in months, no longer than that.
Okay, thank you, James. Again, we're pressed by time, so if you have further questions, feel free to ask James and ask company directly. Next is a Lakewood resource. There's a question from audience. What's your background, Morgan, and how can you gather all these amazing silver assets that people haven't heard of?
Yeah, so I joined the company in June this year. My background is originally in electrical and automation. I started my career out long time ago, about 14 years ago in the mining industry. And at the age of 25, I transitioned over to work for Freeport in Indonesia to help as their technical expert for their underground power systems. And then transitioned my career more and more into running projects, into running mining projects, into building mines. So really my background leans towards that. How we got these silver projects. Well, we have a really strong group of capital markets folks in the background. And when we acquired Silver Hammer and the Silver Strand asset, I think that really put us on the radar of some folks. And one of the folks was the gentleman we procured these, we have ended in these assets in Nevada from. He has a strong link to our capital markets folks in the background. I sat with him quite a bit. I actually spent a week with him here on site last week in Nevada. So it all kind of comes together when you have a strong management team, you have a strong vision of creating large exploration payoff and near-term production potential for shareholders.
Okay, great. Thank you, Morgan. So just very quickly, can you tell us the timeline? I know you plan to drill, and when do we expect any results in the next few months?
Yeah, so we're currently looking at drilling Silver Strand here this month, starting this month. Permitting in the Forest Service and in Idaho can be notoriously long and a bit of an arduous process, but we've worked very closely with the Forest Service, with drilling companies, with our folks on the ground, our geologists, and we've had a real hands-on approach, and it's allowed us to get permits for our underground and our surface drilling in about 15 days, which is pretty unheard of in the Forest Service. So it's going to allow us to drill. You got to remember, we only brought these properties into the company, or Silver Strand into the company 3 months ago, 3-4 months ago.
Oh, thank you. Thank you. We were really running out of time, so we go to the FireFox, Patrick. And then can you explain how can you obtain such a big land package in Finland is based FFOX or the other majors?
Well, for one thing, Chen, we've been there a long time. Carl's predecessor company's been managing exploration in Lapland for 15 years. And actually, we were an early mover. And frankly, you can navigate the website for that map staking, Chen, in English, but it probably works a little better to do it in Finnish. Frankly, with the team there, they have a standing mandate. If a great property comes open, grab it. And that really has to happen when you're in the middle of a gold rush. We've all been there. If you don't get the land, you won't make the discovery. So it's a core part of our operations team and a core focus for us, Chen. And the team's been there a long time, and it's their home turf.
Okay, great. And we're so pleased to have you a tiny company side by side next to Rupert and Eagle. Do you have sufficient capital to finish the current drilling program? And then when do the result will start coming out?
Yeah, we do, Chen. We had a lot of success on the back of the visible gold we hit in the first hole. We had a nice successful financing, which has actually put several $1 million of in-the-money warrants out there in addition to the current treasury. Drilling costs in Finland, north of the Arctic Circle, no helicopters needed, by the way, are very reasonable. And so therefore, several thousand meters of drilling, we're certainly fully funded for, say, 6,000 or 7,000 meters of drilling here. That doesn't need any additional warrant exercises or cash. And we move fast and efficiently. And it sure is nice to be able to drive up to all these projects and get drilling without having to sling the rig in with a helicopter or something like that. So yeah, fully funded for this program. And let's all vote for fast turnaround at the laboratories and hope they can hire the teams they need. We're subject to that like everyone else, Chen, but we start drilling October 1, and we expect on average something like 4 to 6 weeks for assays from each batch.
Okay, great. Thank you, Patrick. Again, welcome to the Metals Investment Forum session. And unfortunately, time's up. You feel free to contact each company individually for any further questions. Thank you.
Hello, everyone, and welcome to the Metals Investor Forum. I'm Peter Krauth, and I'll be hosting today's third session. I'd like to thank Metals Investor Forum for hosting this event and everyone who's taken the time to attend today. We certainly have a tremendous lineup of exciting silver companies presenting. I've been researching and writing about silver, precious metals, and mining for 15 years. I now edit the Silver Stock Investor newsletter that's focused exclusively on silver investing. My presentation today will be on how to profit from the coming silver shock. So silver is both a monetary and industrial metal. So let's look at what's affecting silver on the monetary side. Certainly we've seen some very big inflation that has been coming from all economic sectors. If we look at US inflation in particular, the US Consumer Price Index, it's up 5.3% over the last 12 months, which is something like a 13-year high. The last 3 months have been strong. July, June especially was the largest 1 month change since 2008. And these are across the board. Some of the items that are actually excluded from the CPI because they're more volatile are the food index, used cars, energy, gasoline. Food was up 3.7%, used cars an astounding 32%, the energy index 25%, and gasoline 42.7% in the past year alone. We have ideal conditions for both of silver's demand drivers as an inflation hedge and for its industrial demand. We can see with the chart on the left that 5-year forward inflation expectation rate has been soaring since bottoming last year in March. The consumer price index, which we just talked about, has been accelerating in the last several months. And commodities are breaking out. We know, again, looking at the chart here on the left, we know that commodities track very closely with inflation expectations. And they have certainly been rising nearly in lockstep with the rising inflation expectations. Prices from producers have also been breaking out. These are the raw materials that producers require to manufacture things. And as you can see from the chart on the right, and in the last several months, we've seen a clear breakout that is at multi-decade high. Commodities are cheap and they've been also breaking out. We can see here on the far right, the CRB index has broken out and is at about a 6-year high. So what's driving all of this? In part, the global green revolution. 3 or 4 centuries back, we have the first industrial revolution led by the steam engine and mechanization. Then we had the second industrial revolution that was mass production and assembly lines. We had power from fossil fuels. The third revolution was automation and computing, which was in the 1900s, powered by nuclear and fossil. And now we're in the fourth industrial revolution that's all about networks and interconnectivity. We're in a transition to clean energy, and that's been driven by globally coordinated efforts that are driven by economics and social factors. Silver supply has certainly been very much challenged. The silver mine supply actually peaked in 2015. It's been declining every year since then, very much steadily. It certainly got worse last year because of COVID shutdowns. It's been industry and countrywide. It's been falling across the world's 10 largest silver producing countries. We see that in the 3 largest being Mexico, Peru, and China. So really none of the largest silver producers have escaped declining mine supply. We do know as well that less than 30% of silver comes from what we call primary silver mines. So in fact, 73% of all silver produced is actually a byproduct of producing other metals like gold, lead, zinc, and copper. So what that means is the silver supply is actually quite inelastic. If silver prices rise, the miners that produce it, especially as a byproduct, are less driven to try and produce more silver simply because they view the silver that they produce as simply a smaller byproduct and less relevant to their revenue stream. So low supply and growing demand is likely to lead to even higher prices. We look at silver demand last year, which in this case, we exclude ETFs. Industrial demand represents a little over half of silver demand. If you look at physical investment, silverware and jewelry, you're up to nearly the other half of about 40, around 43 to 45%. And 22% of that is from physical investment. What we've seen, however, is that physical investment has been, demand for physical investment has been exploding. Since 2020, global ETF holdings are up massively. We're over 1 billion ounces in physical silver ETFs, which is equal to more than an entire year's supply of silver. The ETF demand last year was up 298% from the prior year, which was at 83 million ounces, and jumped to 331 million ounces in 2020. Physical silver still has extremely high premiums, which are in the order of 40 to 45%, which is about 3 times normal levels. This is a chart that I put together myself. So what I did was I decided to include ETF demand along with physical investment demand. And that changes things actually quite a bit. It pushes industrial demand to 40%, and physical demand to about 43%, so where they're nearly equal. And if we were to include ETF demand in last year's overall total demand, then silver supply would have been in a net deficit position of 250 million ounces, or nearly 25%. An interesting thing to consider is that while the gold-silver ratio is in the 70 to 77% level right now, actually silver is only being mined at about 7 ounces to 1 ounce of gold. And so silver certainly should be a lot higher in terms of price. Silver has many industrial applications. Solar panels actually soak up about 10% of the annual silver supply. That's 100 million ounces a year. Automobiles, we're seeing growth in EVs over industrial combustion engines. And we certainly expect demand to keep rising from there. We're currently around 60 million ounces a year, and that should rise to about 90 million ounces. So close to what solar panels are currently demanding, and this within just the next 4 years. Electronics, we see printed and flexible electronics increasing demand from about 48 million ounces currently to about 74 million ounces by 2030. So all of these parts of the pie are really actually growing and are likely to continue pushing silver demand up and likely to continue an ongoing deficit. Medicine is a big part of silver demand as well. It's got some very interesting characteristics where it's known as a bacteria killer. It limits infections. It's embedded in medical equipment, and silver nanoparticles, for example, are used in things like cornea replacements and contact lenses. So silver is an extremely cheap asset. It's currently at 50% below its all-time high, and that's just in nominal prices. So certainly a long way to go there in terms of equaling its prior high of 1980. If we look at an inflation-adjusted all-time high for silver, that would be somewhere around the $165 price level. And this inflation adjustment is using government inflation numbers, so closer to 2-3% annually. So that's actually quite conservative. If we look at what silver invested in 1970 would be equal to today, we're looking at about $16 given its current price. At $1 invested in gold back in 1970 would be at $50 at its current price. So there's certainly a lot of room for silver to make up on that basis. You look at silver versus stocks. So if we use the S&P 500 ratio, the broader stock market index, back in 1980, silver versus the S&P was at 0.445 at its peak, and it's currently down near 0.007. And that's about 98% below its 1980 peak. So on that basis, silver versus the broader stock market has a long way to go to match its 1980 high. Silver is the only metal that is actually still priced below its 1980 high. We have all sorts of comparisons here of base and precious and platinum group metals. The lowest is actually tin, that is up about 70% above its 1980 high. The bulk of these are easily triple digits above their 1980 high, and so silver still being at least 40 to 50% below its 1980 high, again, suggests lots of room to move higher. And that's certainly what we expect. The 1970s bull market in silver produced a 37 times return, 3,600% return. The 2000s bull produced a nearly 11 times return in the silver price. So we certainly expect a similar kind of bull run this time around. Give you some idea of what silver stocks can do versus the price of silver. In early 2016, silver prices were up over about 6 to 7 month period, January to August, by about 48%. And if we use the SIL silver ETF, which is a basket of larger silver stocks, that was up 240%, and so offered a 5 times leverage over the silver price. Looking back to March of last year, when precious metals prices and silver stocks and gold stocks bottomed, we started to see around the July-August time period an outperformance of silver stocks versus gold stocks. These are currently up about 101% if we look at the SIL ETF, whereas gold stocks are up about 61%. So we've seen silver stocks have started to outperform gold stocks, and as the gold-silver ratio continues to fall, which is certainly what we expect, we also expect this outperformance to continue. So I expect there's going to be a coming silver shock, and my target of the silver price is up at around $300. And I'm going to give you a couple of ways that, there are several, but I'm going to give you a couple of ways that I think silver can get there. I certainly see silver as entering an acceleration phase, which is something that we see later in bull markets. We saw that in the 1970s bull market. We saw it again in 2011 when silver surged versus other assets and gold, and actually exploded in price up to its peak of around $49. So we think we're in a similar phase right now, and that we're going to get a similar kind of price action in the next few years. The 1980 peak, we can still see on a percentage basis that silver easily outperformed gold. In the 2001 peak, again, silver easily outperformed gold. And right now, silver is certainly lagging, has been lagging gold. If we look at its recent run since around 2015, 2016, when it ultimately started rising once again. So again, lots of room to make up here. If we look at the 1980 ratio of gold to silver, it actually bottomed at about 15. My target on gold, my conservative target on gold is $5,000. If we use a similar bottom in the ratio at 15, that translates to a $333 silver dollar price. The peak in silver in 1980 was $50. And if we compound that peak annually at a 5% rate, which I believe again is quite conservative, if we were to use 1980s based CPI calculation, inflation should be much closer to around 10 to 12%. So even at 5% compounding, $50 from 1980 would actually produce a $369 silver dollar price. How do you invest in silver and profit from it? Well, you have multiple investment options. You can start with physical silver, which I certainly recommend. You have coins and bars. However, right now, premiums, as I mentioned, are very high at nearly 3 times the normal level. You have physically backed silver ETFs. My preference here is the Sprott PSLV silver ETF, given how it's constructed and in comparison to some other silver ETFs. It has very low premiums, and that makes it an interesting, perhaps alternative temporarily against physical silver. From there, you have silver miner ETFs, you have royalty and streaming companies, larger producers, growing producers, developers, and junior explorers. So how do I vet my silver investments? I have multiple criteria, but my three sort of main filters are management. I look for naturally some experience, very good experience on the management side, a lot of depth and prior successes. If I'm looking at an exploration company, I need to see that the management has access to great knowledge resources. Grade certainly higher is better. If we're looking at a company that has a resource, I aim for around 50% or higher for silver content on its main project. If we're looking at a silver producer, I look for revenues that are around 50% or higher silver production silver revenues from production. In terms of location, safer is better, once again, naturally, and I favor North America, Canada, the US, and Mexico, some parts of Australia and parts of Europe. South America overall, some is okay, tend to avoid many areas there. I suggest to be early and be right. Some crucial factors in investing in silver are identify the bull market as early as possible. Consider that silver is still 50% below its all-time high. I suggest to hold on through corrections and maximize your profits. Silver is certainly a volatile asset. If you expect it and know that, then you will find it easier to sit through drawdowns and corrections. And consider too that you don't have to pick necessarily all of the biggest winners. The rising tide will lift all boats. So even some of the maybe more mediocre or average silver stocks should certainly turn out very well in this silver bull market. Silver Stock Investor is a silver-focused newsletter. It's all about what I buy and sell with my money. It's unbiased research. We take no compensation from the companies that we write up. It covers the full risk spectrum, everything from the silver ETFs and large producers to royalties, growing producers, developers, and junior silver explorers. It's aimed at everyone from new to experienced investors, and I cover everything from low to higher risk stocks in this newsletter. It's published by Resource Maven. We are independent and supported by subscribers only. We never take money from the companies for coverage. And as a precious metals expert, I regularly contribute to some of the media outlets that you see noted here. So to wrap up, just want to repeat, there is a silver price shock coming. You need to be invested to benefit from it. And on that note, I just want to mention we have a special offer running right now. It's actually 90% off for the first 3 months, which would cost you only $15. To take advantage, go to resourcemaven.ca/subscribe, select the $49 per month membership, and add in promo code SILVER90. So with that, I will wrap up and we will move on to the first presenting company. Okay, so first up we have Sierra Madre Gold and Silver. That will be Alex Langer, President and CEO, as well as Greg Liller, Executive Chairman and Chief Operating Officer. Go ahead, Alex.
Great, thanks so much, Peter. It's always a pleasure to hear you speak about silver. Always gets me quite excited, which is wonderful. So thank you guys, thank you very much. Sierra Madre Gold and Silver is an exploration and future development company that is working towards consolidating the area in and around Nayarit, Mexico. The area of Nayarit is a fair amount of production. There's a number of private mines, there are mills and precious metals processing facilities. However, no one has really consolidated the area to date, but that's our plan. Our 3 to 5 year goal is to have 50 to 100 million ounces of silver in inventory, as well as production from 2 or 3 mines, kind of utilizing a centralized facility, similar to a hub and spoke mining scenario, something that's modular, which has a lower capex to start, but can grow as more projects come online. With that strategy in mind, we recently announced a really exciting new project and the second one in our portfolio. We acquired the La Tigra project from Grupo Mexico. La Tigra has been in and out of production for the past 100 years. The head grade was over 10 grams gold, as well as 350 grams silver, and has never seen a drill hole. Being able to do a deal with Grupo Mexico, multi-billion-dollar international company, is quite a coup for a junior, and just goes to show the ability of our management team and some of our relationships to acquire some really high-valued projects. I believe Grupo has only ever done one other project agreement with the junior in the past 10 years. We have forward-looking statements here. Obviously, I've already said a few, and I'll continue to say some, as well as Greg. On to management. Greg Liller, he's our CEO and executive chairman. Greg's been in Mexico since 1993. He's an exploration geologist by training, but has operated numerous mines. He's had 7 projects actually become mines, which is truly incredible, including a number of successful M&As, one for over $750 million. Some of the names you'll recognize here, Gammon Lake, which became Gammon Gold, Mex Gold, Genco. One thing that has been consistent in any of these takeovers has been the company was already in production, hence why we're looking for production and why we're advancing our projects towards production, and as well with any possible future acquisitions, we are looking for production. I myself, I come from a capital markets background. I started at Canaccord Genuity. Most recently, I've been on the corporate side of things, working with management teams, finding assets and starting new companies. A couple companies I'm a founder of recently. One is Prime Mining, where we started that around 30 cents, and it's trading well above $4 a share today. You'll recognize some similar names associated with Sierra Madre and Prime. And another one that's been in the news quite a bit lately, Millennial Lithium. Millennial has a definitive bankable feasibility stage lithium brine project in Argentina. And about a month ago, we announced a all-cash bid for a group for over $350 million. However, a week ago, we announced a competing unsolicited bid for 27 million more than that. So it's actually quite exciting. But back to the technical team, a couple more people I'll touch on, one being Greg Smith. Greg has spent the majority of his career in Latin America. He was CEO of Caliber Mining, and he was CEO during the acquisition of El Limon and La Libertad in Nicaragua. Most recently, another gentleman we added on, Luis Saenz. Luis came from us from Frisco, where he was subdirector of mines there. Frisco has numerous mines, so he's really comfortable with that strategy of having multiple projects and building out technical teams for each of those projects. There's 2 more people I'll quickly touch on. They're both Mexican nationals. One is Jorge Ramiro. Jorge lives in Hong Kong now, but he's also CEO and founder of a company called Reina Silver. Jorge was instrumental in the acquisition of La Tigra for us. And finally, Alejandro Carabeo. Alejandro is not only a director of the company, he's also our country manager. Because we're a really well-known Mexican mining family, he's worked with numerous large companies, Orico, Pan American, Corp, to name a few. He's based in Chihuahua, and he handles all of our, in-country needs in terms of permitting, working with the local ejidos, environmental, drilling contractors. So it's great to have somebody like that in-house. We're not relying on any, contractors outside of our team. And with that, I'll pass you over to our executive chairman and chief operating officer, Greg Liller, to walk you through Tepic, our main asset, and as well as the acquisition and why he's excited about La Tigra.
Thanks, Alex. As Alex said, our properties are in the state of Nayarit, Mexico. Nayarit's a good jurisdiction. Mexico itself is a very good jurisdiction. You can actually get mines permitted there. The 2 projects are about 148 meters apart. International access, you can come in either through Mazatlan or Puerto Vallarta. The Tepic project is a typical silver gold low sulfidation epithermal system. It has seen over 31,000 meters of historic core drilling. We have access to all that core. It's been kept in a secure warehouse this entire time. There's several historic resource estimations that have been done on the project, and preliminary metallurgical tests indicate that we can get good silver and gold recovery. So it's very important. I figure if you can't get the metal out of the rock, it's just a rock, and you walk from it as fast as you can. And we have a large land package there. As I said, it's located near the city of Topeka, about 22 kilometers away. It's paved road all the way to the project, except for the last 3 kilometers. We've got a good modern highway system developed around us. The one thing that impressed me about this project when I first started looking at it was the amount of alteration. It just did not fit with the 3.5 kilometers worth of structures that had been defined. It was a much bigger system than that. We obtained a new map and immediately launched into a property-wide exploration program. And to date, we've identified over 10 kilometers of new veins, breccias, and stockwork zones. We've completed a RC drilling program. I think we started that about a month after we achieved our listing. The purpose of that program was to confirm the results of the previous core drilling, which it successfully did. We also intersected some broad bulk tonnage type zones that had been overlooked in the previous drilling because they had not analyzed their entire core. So I was very happy with that. The existing resource estimation, it's open along strike, and in this case, it's open up dip. This is the Dos Hornos 1 structure. Our mapping that we're currently engaged in is shown that it's over 1 kilometer long of additional undrilled potential. The eastern portion of the project never received any work at all. Our initial reconnaissance found the Taunus structural set. It's about 1.5 kilometers long now, and it contains historic mines, and we've had assay returns of up to well over 600 grams of equivalent silver. The North Project area, again, received very little work. Our work to date, we've found, again, over 600 grams in outcrop. We've initiated a large trenching program just recently. I found this was very useful when I was with Prime as the COO there. We started that because there had never been any real methodical surface trenching work, just as there hasn't been here. And by the end of that program, we started a new historic resource and or a new resource study. And the new estimation is well over 1 million ounces compared to 600,000 in the previous one. So trenching can be quite valuable. As I said, the last historic resource pegged it at a little over 10 million ounces of silver. Given the fact that we've found a substantially large number of new structures, our ongoing trenching program, I think that's all going to combine to have a significant increase in our resource. The metallurgy, as I said, they've done traditional bottle roll tests. These are pretty typical returns for the Sierra Madres. What I like to look at is the combination flotation cyanide leaching. If we can get 90% silver recovery, that's very significant since this is a silver-rich system. So we're going to be doing a lot of work in this area. La Tigra, so like I said, we acquired this from Grupo Mexico. I've kind of had my eye on this for a number of years. It's a historic mining district. In the late 1800s, it was estimated there were 5,000 gold panners working this area. Our work to date has shown us why there was a lot of gold panning there. We've currently there are some gambusinos working in the area, and they don't mine unless they can see it. So I've got really high hopes for this project. We've initiated our trenching program here, and as soon as we receive our permits, we'll initiate a drilling program. And the plan here is to go back and forth between the projects. That way, we'll be able to do it, say 15 holes, move back to the other project, do 15 there, and while we're getting the results to those 15 holes, we'll be able to then incorporate that into the next program so that we're never ahead of ourselves. I hate drilling holes without benefit of assay. You can waste a lot of money that way. So we'll be initiating that shortly. Alex?
Perfect. Thanks, Greg. Yeah, quickly touch on the capital structure of the company. We still have $12 million on hand. As Greg mentioned, we're going to be heavily drilling kind of both projects this year and well into next year. We've budgeted between $4 and $5 million. We'll have 2 drill rigs kind of in between the projects, both RC and Diamond. Shares outstanding at just under 64 million shares, fully diluted 66 million. Founders, management, that's myself, Greg, and a few others. We're actually well over 40%. We've been actively buying the market. I bought 100,000 shares this week alone. I should update that. Yeah, we're closer to 43%. We have about 10 institutions that are shareholders as well. They came in for relatively small amounts. Usually they come in for quite a bit more. When we did the IPO raise, we ended up raising 15 million. The order book was over 30. These funds kind of came in with the expectation that they'd be able to deploy more capital as our project advance and as new acquisition possibilities arise. So we are well financed now, well capitalized, and if good opportunities or come up, we're able to kind of rely on those relationships to hopefully bring in more capital if needed. So we're going to be busy over the next little while here. As Greg mentioned, we have a pretty thorough trenching campaign that's ongoing. So there'll be quite a bit of news flow coming. And then as soon as we're able to, as soon as we get the results from that, we will start drilling. We're permitted for another 47 holes at Peak. We're working on extending that and also going through permitting right now at La Tigra. So thank you very much. Thanks everyone for your time. If you have any questions, Greg and I will be happy to answer them at the end of these presentations. Thank you, Peter.
Thank you.
Thanks, Alex, and thanks, Greg. I appreciate that. And I just want to remind everyone who's viewing that there is a chat box, and if you have questions for Alex or Greg later on, we'd appreciate if you can enter those, and we'll try and address them. So next up is Southern Silver. We have Rob McDonald, company geologist, and I look forward to hearing about Southern Silver exploration.
Hey, thank you very much, Peter, and thank you again for the invite to present at the Metal Investors Forum. It's always a pleasure. I'm Rob McDonald, VP of Exploration for Southern Silver, and today I'd like to speak to you about the Cerro Las Manitas project that Southern is developing into the next major silver resource in Mexico. I will be making forward-looking statements. I am a geologist. That's kind of what we do. We'll be using words such as believes, anticipates, and estimates, and these are aspirational in nature. We hope to achieve these, but again, they're forward-looking statements, so be cautious. And so with Southern Silver, we're primarily focused on our flagship project, the Cerro Las Manitas silver, lead, zinc skarn system located in Durango, Mexico. The project is currently one of the largest and highest grade undeveloped silver projects in the world, with indicated and inferred resources totaling 272 million silver equivalent ounces at a relatively high grade of 354 grams per ton silver equivalent. The project is located in a well-established silver mining district in Durango, Mexico, and we're surrounded by producing companies. Over the last year, we've completed a number of value-creating transactions. This includes the acquisition of our former joint venture partners' 60% interest in the project for $15 million. This now gives us 100% ownership and control of the project. We recently, in June 2021, completed a $12 million brokered, non-brokered financing with Red Cloud Securities. This has topped up the treasury and left us in a good position moving forward to be able to complete further pre-development work on the Cerro Las Manitas project, as well as other greenfields exploration that we have planned on the CLM property, but as well as a second project that we have in New Mexico. So company catalysts looking forward. We've completed over 22,000 meters of drilling within the last year. This is getting rolled into a resource update that is pending within the coming weeks, and we expect to significantly increase the mineral resources that we have already established on the project. We have metallurgical and engineering work completed, and we have a bit more to do in the fall. And all of this will get rolled into a preliminary economic assessment that is pending Q1 2022. We also have some greenfields exploration on, as I said, both the CLM property as well as our Oro property in New Mexico. Looking at the capital markets profile, so at around 30 cents, we're just under $100 million market cap. We have cash and cash equivalents of $15.5 million sitting in the bank. Electrum Global Holdings still remains a cornerstone shareholder, and we have ever-increasing institutional participation, not precipitation, it's raining outside, but participation in our company as well. Since we made the announcement of the acquisition of Electrum's portion of the joint venture in mid-2020, we have seen a very sharp increase in our share price, very sharp increase in our trading volume. Our share price is maintained pretty stable through much of 2021. It's come off a little bit in the summer, but we think we're heading into a good fall. As a result of that announcement, over the last 2 quarters of 2020, we were one of the top performing silver stocks on the market. And so we always look in terms of companies, of the people behind them. Southern Silver features experienced mine finders with a history of success, particularly in Mexico. You look down through the list of people and the list of projects that they've been involved with, and you see a number of world-class mines and deposits, including the Peñasquito project in Mexico, Hemlo, Eskay Creek in Canada, San Cristobal in Bolivia, the San Nicolas VMS system in Zacatecas, Mexico. So this is a group of people that know what major projects look like. They know how to advance and develop these projects, and they know how to bring them to a production decision, either within the companies that they're working with or through sale of the asset to a producer that puts the project into production for the benefit of the shareholder. And again, just a reminder, Cerro Las Meninas is one of the largest and highest grade undeveloped silver-based assets in the world, sitting quite comfortably within the top 10 in size. And of those top 10, we are the highest grade. And this is in part because the project is being modeled as an underground mining operation, sulfide resource. We use a relatively high cutoff grade to define our resources, and we have a relatively high average grade for the deposits. Again, just looking at the deal that we completed with Electrum, one of the takeaways is that this is very low acquisition cost of $15 million in cash and shares. That translates to only 9 cents an ounce silver equivalent. Again, we have a current cash position of $15 million and the ability to move forward. We now have a simplified ownership in the project, 100% control of the project. Electrum remains a supportive investor. We have an enhanced market profile, increased market capitalization, and we've become a much more attractive takeover target. So we started drilling on the project in September 2020. So we completed that phase of drilling in the beginning of August, late July, beginning of August. We had some fantastic results. You can see here again, some good underground mineable widths, and these are estimated true thicknesses, as well as very high-grade silver equivalency values. And of note, we see a very strong component of the silver equivalency is contained within the silver mineralization. So again, we've been very excited by the results that we've produced since we started drilling again on the project in September, and are looking forward to seeing those results built in to the upcoming mineral resource update. So in terms of Southern Silver, we have two projects. The Oro project is an earlier stage project. It's a laramide, copper, moly, gold porphyry system in southern New Mexico. It's 100% owned, and I will touch on that a little bit later in the presentation. The flagship is the Cerro Las Menitas project. It sits within the Faja de Plata of north central Mexico. We're on the edge of the Altiplano, so we're not in the mountains, and we're surrounded by world-class deposits. The project is 100% owned. We spent over $30 million since initial acquisition in 2011. We recently completed the 22,000 meters of drilling and are building that into a mineral resource update. We have completed engineering and metallurgical test work. There's some additional work to get done this fall, and we'll be working that into a PEA pending Q1 2022. So the Cerro Las Menitas project, it's in an area of active exploration and development with superior infrastructure and community support. Here's the property package. It's located just 70 kilometers northeast of Durango. The highway from Durango to Torreon runs right through the property. We have power lines, rail lines running through the property. We operate out of the town of Guadalupe, Victoria. It's only an 8-minute drive to the project. As I said, we're on the edge of the Altiplano, so we're not in the mountains. As I like to joke, we're out in the middle of the bean fields, not the marijuana fields. So in terms of security, it's a very safe place to be working and a very active area for exploration and development. We're surrounded by producers. Hecla's on our east. Fresnillo is on our northern boundary. Avino is mining at their Avino mine just 6 kilometers away. And Core Mining is around 25 kilometers away at La Preciosa. Our environmental permits are in place. Our exploration access agreements with the local ejido are in place. And to that end, we've been able to complete nearly 80,000 meters of drilling on the project since 2011. And again, at a relatively low cash discovery cost of only 9 cents an ounce silver equivalent. This is Cerro Las Menitas. You can see the highway to Torreon in the foreground, one of the aforementioned bean fields. This is the Cerro here. We've identified 4 mineral deposits on the western side and are now about to bring in the Mina La Bacona and South Skarn targets into the resource categories. Geologically, we have a central intrusion in the center of the Cerro. We have historic artisanal mining around the neck of the intrusion. The known mineral deposits on the western side here, highlighted in yellow. And then drilling that we've completed, this 850 meter strike length on the eastern side of the Cerro. These are large CRD skarn type systems, similar to Grupo Mexico San Martin deposit, First Majestic's La Parilla, and Peñola's Velardena system. We've now completed this phase of drilling on the eastern side. We've actually shifted to greenfields drilling here on the El Sol concession. This was a property or a claim that we reacquired in 2020, identified some targeting on it, and are now in the process of drilling around 3,000 meters on the project. So there will be more exploration assays pending through the fall. Again, a breakdown of the mineral resource. Relatively high cutoff grade. You see 83 million ounces of silver, 2.2 billion pounds of combined lead zinc. It's a fairly large mineral system at 23.9 million tons. The Skarn Front deposit is the largest deposit that we've identified to date. That makes up around 18 million of the 23 million tons. So the highlights of this last phase of exploration, we've identified 2 new deposits. So the Mina La Bacona deposits, the South Skarn deposits. They're on the east side of the central intrusion. This is the mineralization that we've identified on the west side. The South Skarn consists of sort of 2 main horizons. The Mina La Bacona, a little bit more complex, and it also includes a shallow oxide zone in the upper part of the system in this area. Again, just to zoom in a little bit more to the Mina La Bacona, we have our high-grade mineralization sitting down dip of some historical artisanal development in the area. You can see some good high-grade mineralization in here. The Morella Chimney over here, a hanging wall zone with, again, thick zones of high-grade mineralization. broad zones of mineralization extending upwards of 350-meter strike, as well as the oxide zone sitting in the upper part of the Morella chimney. Metallurgical test work, excellent recoveries, 92% recovery of silver, just under 95% recovery of zinc, over 80% recovery of lead, and 60% recovery of copper. We've completed an NSR model of the known deposits, the 2019 deposits, and have built a preliminary mine design of those deposits. We're currently exploring, or we have identified new deposits over in this area, and we'll bring these into the NSR model and mine design, and all of this will get rolled into the PEA. This is the Oro project very quickly. It's located just 50 miles south of Lordsburg, New Mexico. You can access by truck. It's a large zone porphyry system. We previously tested a distal gold target. This is a porphyry and skarn target in here. We recently completed 300 line kilometers of ZTEM survey. That identified some porphyry targets in this area, skarn targets in this area, and we've in the process of permitting 6 holes, 4,000 meters that we are looking to start toward the end of Q4 2021. We're in the process of permitting, should have the permits in hand in November and be ready to go. And so that's it. Thank you again for tuning in. What you have to look forward to with Southern Silver is a new resource update, Q4 2021, so that'll be coming in the coming weeks. We have further greenfields exploration, both on the CLM claim and in the Oro property, pending in the fall and into 2022. And then looking forward to PEA results in the first quarter of 2022. Thank you very much.
Well, Robert, thank you very much for that presentation. Certainly appreciate that. And again, I want to remind everyone that if they have any questions, to use the chat box at the bottom of the screen to leave questions for Rob for afterwards. Next up, we have Dolly Varden Silver. Sean Kuhn will be presenting, and I'll leave it to you, Sean.
Thank you very much, Peter. Grateful for being invited. This is, I'm humbled. This is an excellent group of companies, some great presentations. Peter, that was a great presentation. I didn't think I could become more bullish on silver, but you gave me a few reasons. But I think the big point here, like for all the investors who are in the audience, you know, Alex in his presentation talked about some of the wealth created from companies that he's launched, like Prime. You know, it's really exciting as we go through some of these presentations, Blackrock, Silver VIPR, Sierra Madre, and Southern Silver. This is an excellent class of companies, and I'm really happy as a precious metals investor. All the companies are cashed up. They've got some, you know, great management teams with good track records, and I'm happy to give you some more details on the Dolly Varden Silver story and our quest for 100 million ounces of silver in the Golden Triangle. So I will be making some forward-looking statements throughout my presentation. So we are anchored with a modern resource. This is a project that has been known about and has been producing on and off for the last 100 years. There was 2 major skints of production, one in and around 1920 and the other throughout the 1950s. So about 20 million ounces of silver have been produced from this project. What makes the Dolly Varden Silver Project very unique is it is a pure silver mine. So it's that 30% that Peter talked about in his presentation that is the pure silver plays. And that's what this is. It's in a safe jurisdiction. It's a pure silver mine. There's very little byproduct. And the grades are exceptionally high. So what we've done here is we've published a modern resource estimate, and the bulk of that resource estimate is in the indicated category, and the grades are superb. We've got an average grade of about 300 grams per ton. So roughly 44 million ounces in all categories. Looking at the structure of the company, we roughly have about a $70 million market cap today, with 44 million ounces of high-grade resource in the ground. 53% of the company is held by institutional investors. So these are your Sprott asset managements, your Delbrooks, your US Globals of the world, the renowned precious metals institutional investors. Just under 19% is Mr. Eric Sprott. And then we've got a corporate investor in Hecla. And just a little history in terms of Hecla and Dolly Varden. There was a takeover attempt by Hecla back in 2016, and they've subsequently maintained a share position. And they also do have some rights, an auxiliary rights agreement, and do have a representative on the board and are active with our technical committee. And they did subscribe for financings last year to the tune of about $2.5 million in direct investments. So we've got a very liquid stock. I believe we traded roughly 500,000 shares today, and on a fully diluted basis, under 150 million shares. A very limited amount of warrants at an exercise price of north of $1. And we've got a very, very healthy cash position at around 20 million Canadian dollars. So where are we? We're in a part of the world here, the Golden Triangle. If I drew my cursor around KSM and Brucejack in this 20-kilometer area, we've got one of the richest endowments of metals on the planet. In resource estimates, about 200 million ounces of gold, 800 million ounces of silver, 50 billion pounds of copper. This is, one of the most exceptional camps on the planet. And the exciting part for me is the Golden Triangle is just getting started. We've got infrastructure into the area now. Ice is receding. We've got a government that is pro-mining and is helping companies. As long as we respect our First Nations partners and we respect water, we receive permits in a timely manner. So it's an excellent area that's well endowed. It's got some of the biggest and richest copper mines in the north, gold in the center, and where we are at the southern end of the triangle is one of the least explored areas. So what I've done here on the left-hand side of the page is I've zoomed into where our claims are. The 44 million ounces that we have in our resource estimate is identified here with these red markers. We are sandwiched in between Hecla and Fury's Homestake Ridge deposit. So we are in a district. Fury has about 900,000 ounces of gold, 18 million ounces of silver, and it's right on our western border. Again, these are the early innings of discovery. Goliath, one of our neighbors to the west, just in an inaugural drill program, just hit about 35 meters of 6-gram gold equivalent on our western border. So there's constantly new discoveries being made in the area. This is an area that's seeing a flurry of activity this summer with Hecla drilling on the east, Goliath to the west, Libero here in the center. And then, of course, we've had a very active drill campaign on our property this year. Again, here's some of the infrastructure in the area. So we've got a road that comes in from Alice Arm. We did a very strategic deal last year, December 7th, 2020. We purchased the surface rights, so we control the deepwater seaport into the area, which is very strategic. We also have this road that comes right onto our property. As you can see here from topography, unlike some of the other parts of the northern parts of the Golden Triangle that are on the sides of mountains, the topography is a lot less challenging here, leading to a far deeper work season. We've got power into the area, roads into the area, and of course we can barge up equipment through Alice Arm. Again, making the case for investors, because of the nature of the deposit, because of where it is, you've got maximum leverage to rising silver prices, to the safe jurisdiction. It's a high-grade deposit. We've got a very strong management team, but it's really the exploration potential that I want to talk about today. It's the 4.5 kilometer trend where we have 100 occurrences. And it's a question of within one of those occurrences, can we find another 50 million ounce silver deposit? Again, looking at our board of directors here, this is a team that has worked on some of the largest silver companies on the planet, companies like Coeur, Hecla. We've got a very talented technical team that has incubated companies that have led to takeovers. And that is something that we're trying to recreate here at Dolly Varden. Looking at our resource estimate, the bulk of our resource estimate is in the indicated category. In addition to the compliant resource estimate, as you can see here, we did some metallurgical testing and the recoveries are strong. They're in the high 80 percentile. This is looking at where the bulk of the ounces lie at the Dolly Varden project, which is the Torbrit mine. So at Torbrit, as you can see here in light pink, about 18 million ounces were pulled out of Torbrit at roughly 466 grams per ton. And as you see in a darker red color, there is a big part of the ore body that is still intact, about 25 million ounces indicated. And as our 2020 program had shown, there's a lot of room for expansion. We successfully hit in hole 244 last year, 300 grams of silver over 45 meters. And there's a lot of opportunity for expansion along strike, at depth. We're in the midst right now of a 10,000 meter drill program where we've completed about 8,500 meters. We haven't released any results from that drilling as of yet. So we anticipate as we get into October, November, December, right through to February, we're going to continue to be putting out a lot of results, and we are still drilling today. And the big goal here is, if you look at Torbrit and if you look at what's been produced and what's still left intact, this is a 53 million ounce silver deposit, 53 million ounces at production grades close to 500 grams per ton, resource grades at around 300 grams per ton. And this is what we're after in the exploration program this year. And again, because this is an older project, we're able to use some of the modern methods, factoring in things like LIDAR, looking at structure, looking at the strong potassium alteration, looking at sodium depletion. We've got a large signature here. And how we've allocated exploration meters and dollars this year is 50% around the Torbrit mine. So we're looking at expanding Torbrit along strike at depth. We're looking to infill. We're looking to gain more confidence around Torbrit. But the other 50% of the opportunity is what really excites me, and that is to try to find the next Torbrit. This is another view here. So we've got these basins, these mineral-filled basins, this horizon that goes on for 4.5 kilometers, and infilling in between mines in our resource estimate, like Torbrit, like new opportunities like Wolf and Northstar. And again, these are some of those 100 silver occurrences identified in black markers here. And so 50% of the exploration meters are going to go after these new targets. And if we look at some of the other big silver mines in the area, SK Creek is a great example where 200 million ounces of silver were produced at over 2,200 grams per ton. What started as a high-grade silver mine turned into a very, very rich gold deposit. So what we're starting to see on the western edge of the property is we're getting into gold zones. So some of the exploration focus this year, we hope to produce some metals other than silver. So we're looking for gold, looking for copper, in addition to our silver results. Again, it's a target-rich environment. And again, we got some sniffs in the 2020 program of some elevated gold and copper numbers. We had samples that were ranging up to 4% copper, and we'll be following up on those this season. Social license and the ability to permit and the ability to work with local communities is paramount. We're part of an organization called the BC Regional Mining Alliance. Other members of this organization include SCOT, SKINA, our First Nations partner, the Nisga'a, and the BC government. And this is an organization where we get together and we discuss the benefits to both the stakeholders, the shareholders, and I'm happy to report that a third of our workforce is from the Nisga'a Nation. To recap, we've got a pure high-grade silver resource, a lot of room for discovery expansion. We're in a safe, mining-friendly jurisdiction. We've got great leverage to rising silver prices. There is the M&A opportunities regionally. As you can see, we're in a district. We've had some competitive tension in the past. We've had takeover offers in the past, but we're also open to look beyond our region at accretive opportunities and having a healthy cash balance. There are opportunities that we're reviewing weekly. We love hearing from shareholders and love inquiries. This is our contact information, and look forward to taking questions at the end of this. So I'll put it back to you, Peter. Thank you.
Well, thank you very much for that, Sean. I certainly appreciate that presentation. And again, I want to remind everyone, if they have questions, to use the chat box and pose your questions to Sean for later on. Next up, we have Silver VIPR Minerals and Steve Cope, who will be presenting, and leave it to you, Steve.
Yeah, thank you, Peter. And again, I'd like to reiterate what a lot of the sentiment has been. This is a very exciting time in our sector. I think it's a great time to be looking at, investing in the quality, silver companies that are out there. There aren't very many, and I think, I will reiterate again what Sean just said, and this is, 5 of the companies that certainly should be, high on people's list of, what I would consider, 5 to 10 in the industry that are out there at the moment that have quality exposure in the right jurisdictions. And again, I'll present Silver VIPR right now, which again should check off all the boxes that investors are looking at from, investment in a junior explorer. I will be making some forward-looking statements today. I think I just made some already before we even got to this slide, but continuing on, obviously, we will be making forward-looking statements. I think there are 3 things you should be looking at when you invest in a junior explorer. 1, that it has a high-quality asset. 2, that it has lots of potential, and 3, that it has a strong management and shareholder group behind it. In our case, we certainly have all 3 of those. The project's the La Virginia project in eastern Sonora in Mexico. It's a project that we took over, brought back together. It was originally Minefinder's #1 exploration asset when they were bought by Pan American Silver for $1.5 billion. We saw that the project had lots of potential. Their work had been focused on one very small portion of the project, and that we would get involved and be able to make additional discoveries, which is exactly what we did at the El Ruby zone. As far as lots of potential, El Ruby is still just one very small portion of the project. We're going to be actually testing 2 targets here, quite quickly that are, again, never tested before. We're going to do a reconnaissance program on them, and that will be La Colmena and the Paradones targets up kind of northeast of El Ruby on the project. And then the other one, again, it's an ongoing theme I think you've seen across all these companies, but that you have a strong management shareholder group behind it, a management team that has a history of making success. A staple of ours, I should mention, our company sits within a group called the Belcara Management Group. So we have 3 public companies under our management: Oryx Minerals, Barcelli Minerals, and Silver VIPR. And a staple of all the Belcara Group companies is management owning over 20% of the company. We're very active in the market. We like to support the stocks, and we think there's no better place to invest our money than the companies that we're running. Still a very low share count here. This company was set up as a true IPO in 2017. We acquired this project in 2018, and we can, moving forward here, you'll see, again, why we were excited about the project. Just quickly, you can see our option agreement that was in place here. We acquired everything that was in red from Pan American for a 2% project-wide NSR. And then everything in blue, which was where all that historic work was done on the project, you can see we have this back-end loaded option agreement. Of note, that final $2.5 million payment, half of that can be paid in shares at our discretion. There's also, we've made that June 2021 payment as well on that slide. So again, it was a deal that was structured to, allow us to put the money in the ground where it belongs and really evaluate the project before we, make that one large kind of final payment. We've certainly, seen enough and discovered enough on the project that we would absolutely warrant that final payment. Here you can see the project is located east of Hermosillo towards the border between Chihuahua and Sonora up in the Sierra Madre Mountains. Take a paved highway to the local town of Nacori Chico, and from there it's about 30 to 40 minutes in on a well-kept gravel and dirt road. You can see an image there. That's El Ruby, the plateau. And I guess just while we're looking at that image, what's very important about that is that it's on this flat plateau, and that becomes very favorable for the open pit portion of our resource that's located at El Ruby. The rest of the project, as you can see, is very hilly, quite steep terrain, very nice for underground mining and using gravity to your benefit. But El Ruby itself, and what really has made this project is the open pit potential of that. And then moving forward, we'll be exploring and developing an underground portion to that resource at El Ruby. Here again, you can see, as we mentioned, El Ruby. One of the things that let us get into El Ruby that, I guess why they never tested it, they never even bothered to sample it in the past when Minefinders was on the project, is the use of these man-portable rigs. When they were exploring, they were using large track-mounted rigs. They were bulldozing in roads. It was fairly expensive exploration. I think in the time that they were exploring it to when we took over, technology kind of came a long ways with these man-portable rigs and how powerful and how accurate they could keep drilling and the size of the core. So we've been able to, go all over anywhere on the project with these man-portable rigs. They're very environmentally friendly. You can see all that lumber that we use for the pads. We reuse that pad to pad. When we're done drilling in a spot, we can throw down some grass seed, and other than the drill color, you can't even tell that we were ever drilling there. So very important. We're environmentally permitted to drill all over the project with Seminat in Mexico. It's a great place to work. This state that we're working in is the #1 gold producing state, and I believe #3 in silver in Mexico. Very rich history of mining in this part of Mexico. Another kind of cool image there, you can see the gold kind of through the microscope. That's been, something kind of unique for us in Mexico. You don't see a lot of visible gold in core. Silver mineralization is always, easy to see. But here at Ruby, obviously the gold has obviously always been a good sign when we get visible gold that we're going to have some pretty good assays. And we've hit some pretty spectacular ones over our time at Ruby. This image, it's missing another line. We don't know where that line will exist yet, but it's going to be very important moving forward later this year in the exploration work that we're going to be doing at El Ruby. All of our reported assays to date have been focused on the andesites. This has been our most favorable horizon for mineralization. It's where we discovered our western zone that are these 100-meter long broad zones that really made that open pit mineralization and the idea of modeling an open pit mine on this portion of the project important. But as we move forward, one of the models that we've kind of seen comparing this deposit to other deposits around the world is that oftentimes on the type of deposit that we think it is, the big win will come at the contact between that rhyolite package and the metasediment package below that. One of the big investors that took our last placement that took a strategic investment in the company was Crescat, and Quentin Hennig was really the one influential behind that, and he compared it to his times at Newmont. They called these actually gold carbonate base metal deposits, which from what we've been drilling in right now has nothing to do with all. You would never say that there's carbonates or base metal. We have had virtually little, very few base metals, but what happens is that contact between the rhyolites and the metasediments is where you really hit these spectacular bonanza grades and widths, because the metasediment package is far more favorable again for broader widths and mineralization. So we're going to be doing a large geophysics program here. It looks like now it'll be starting at the end of October. We've just got word that the Quantec has got all their permits to import their equipment into Mexico to run about a month-long 3D IP and magnetotellurics program on the project, and that'll be looking not only at identifying the structure all the way through the rhyolites, but identifying where that contact is, how deep it is, before we put some very deep holes into this portion of the project. While we're waiting for that work to be done at that time, that's when we're going to test some of those regional targets to get the rig, out of that area, so it's not messing with the geophysics program that's being done. That geophysics program will take about a month to complete. So that's when we're going to go up and do a reconnaissance program like we did when we, discovered El Ruby and hit the Perdones target, hit the La Colmena target, probably move it to the southern end of Macho Libre target, which sits south of El Ruby here. Kind of the northern end of Macho is where this picture is taken from. So we have, moving forward, we're going to have discovery potential on multiple targets, which is always, a great thing for shareholders and share price. And then, if we're successful and the model holds true on that metasediments, then we could really be in. I mean, these deposits around the world are, massive multi-million ounce high-grade gold deposits. The Kellyan deposit is an example of that. There's a few in Australia that compare. There's again, there's a number of these deposits around the world, and it's always been that contact that's important. And when, like I said, when Crescat and Quentin took a look at this, he looked at a lot of our Pathfinder elements that we're seeing up high here in the andesites, and it really, stood out to him as being one of these types of deposits. So we've always, our drill right now has been testing the upper rhyolites, and we're seeing that we're still in mineralization. We don't get the broad blowouts that you see in the andesites, but again, a good sign that this, deposit is going to keep going and going, and again, that model is holding true. Again, you can see, I talk about bonanza grades at the metasediment contact, but we've already hit some pretty spectacular grades up here high in the system as well. So I guess I'm kind of looking forward to if we do hit on that deep contact, what those grades could look like if they're even better than these ones. But we've certainly hit some very nice silver grades, some very nice gold grades. We've done metallurgy. All of this material is, highly recoverable. It leaches very well, which again is important for open pit heap leach mining on the open pit style of our resource. And then here you can see that resource. Some people look at that and say that that's low grade. Again, you want to compare apples to apples. And in this part of the world, the average open pit heap leach mine operates at an average grade of about 0.5 gram gold. They oftentimes have very low silver content. So, basically right now adding another 0.5 gram of gold equivalent in silver, that is also showing that it leaches fairly well for silver at over 70% in the low grade silver. So very nice open pit start, but we also have the high grade start. And, you can see here, those few blocks that are outside of our open pit, there wasn't enough tons there to start and do an open pit or an underground resource at El Ruby. But we had the guy run the numbers, and there, that was like 15 gram gold rock and over 300 gram silver rock that was sitting just below the pit there that you could scoop up with a shovel. And that's starting to give you an idea of the potential of what this thing can do at depth as we continue to move down and expand on the resource. This slide was kind of one of those slides that really showed us that we were in a different type of deposit here in Mexico. It is an epithermal deposit, but it's not the traditional epithermal deposit. If this was a traditional epithermal deposit, where we have these high-grade gold and silver up in the zone that you can see here in pink on this hole, and then 300 meters below it, we're still in high-grade gold and silver. But in neither case do we have high-grade base metals. In the traditional epithermal system, 300 meters down, we should be getting out of the gold and silver and really moving more into high base metals numbers, and that's not what we have. We are in an epithermal system, but there's deeper roots. There's something very, completely different happening here on the deposit. Mention that we are, our work has been going, all of our work right now has been testing the rhyolite package underneath what you can see here of this section of where the open pit and the previous drilling at El Ruby was. We should be coming out with a assay release here in the next couple of weeks that'll summarize up a lot of that rhyolite drilling. And then I think we have a few more holes that we'll be drilling along that line. And then like you said, we're going to be moving up to those exploration targets while we do the geophysics. But again, lots of room to expand from that first resource as we move to the south, to the bottom of that arroyo. That's about 300 meters there that you can see where there was no previous drilling. We had some drilling success down deep in that, or shallow at that bottom part of the arroyo there. Again, we think we're in a down drop block, so those holes didn't go deep enough based on some of the drilling we've done. And I believe we're going to be going back into those holes to expand them to test that theory as well. To the north, again, we believe we're in another down drop block to El Ruby. So we're going to wait for the geophysics to identify kind of the structure there on the back end of that before we start expanding to the north. But by no means have we cut this thing off along strike. We see the potential for this to run all the way up to Ruby North, which is 2 kilometers long, where we saw success in mineralization from our sampling programs as we get to the end of that arroyo. And we've actually sampled off of the arroyo, and the structure continues to run and is mineralized. Here you can see some of the targets. This doesn't have Peridonis on it, which would sit kind of south and east of La Colmena. But again, you can see where they sit relative to the first kind of magnetics program that we run on the project. What was interesting here was that large arrowhead shape, and that a lot of our initial geochem anomalies lined up on the edge of that kind of arrowhead shape, which we would interpret it as a buried intrusion because it's nothing that you see on surface. That shape certainly doesn't exist, but probably helped create that plateau that El Ruby sits on. I already went through the metallurgy. Again, you can see here very good recoveries, especially that low-grade silver recovering at 76%. That's extremely encouraging for the open pit portion, and really taking advantage of that kind of 0.5 gram gold equivalent silver grade that we have there. But gold recoveries across the board, 90 to 95%, again, very good and solid for that open pit mining and underground. I mentioned the group. Our last big success that most investors would know us for was Orco Silver, located in Durango, Mexico. That was a deposit we put the very first drill hole into. grew it to 350 million ounces of silver and sold it in a bidding war between Coeur and First Majestic. Grew it over 270 million ounces of it, sold in a bidding war for 350 million to Coeur Mining, ultimately winning out. That's really our model. Our model is to get involved somewhere along the exploration timeline. We will, whether something's never been drilled or still has a lot of potential, like we see here at El Ruby and La Virginia. But our model, we're very good explorers. We have a very strong group of senior geologists with, a great track record of success in the industry. But we're really looking for the big win for our shareholders to be that, transaction where we sell it to one of the mining companies. Just quickly, you can see some of our share structure, a number of the funds that own the company, but there's over 20 different funds that own the stock at the moment. We've had great institutional support. We've seen a lot of growing market with our US retail following growing. We've got official coverage from Red Cloud and Dave Talbot at the moment. Again, it's a very well-positioned company for success moving forward. And just in summary, we've got a high-quality asset. We're in a great jurisdiction, great management technical team, lots of potential, strong shareholder support, and we recently completed a placement for $6 million in June of 2021, so we're financed for exploration. With that, I will pass it back to Peter.
Thank you very much, Steve, for that. Enjoyed that. And our last presenter today will be Andrew Pollard for Blackrock Silver. And so I leave the mic to you, Andrew. And just one more time, I want to remind everyone to use the chat box for any questions that you might have for our presenters.
Thank you very much, Peter. I guess if this was an in-person event, being last would be a real honor, just given the fact that I know it would be a packed house as everyone would be sticking around for the open bar to follow. But given the lineup we've had today, I'm hoping that all of you here will stick around just to hear me. Certainly going to be making some forward-looking statements today. Nothing too futuristic here. Everything I'm going to be talking about is going to be in the next few weeks to the next 3 or 4 months, because we've got nothing but catalysts lined up over the next few months, leading to what I see as being the single biggest re-rate potential that we've had since we hit on our very first drill hole into our project last year. As you can see, the end of August last year was very, very good for us. We hit our very first drill hole. It happened to be the single best drill hole in all of Nevada last year, where we drilled 30 meters of 1 kilogram per ton silver equivalent. As Dickens would say, it was the best of times and the worst of times, simply because pretty much right after that, it was when gold and silver both started their retracement, and we had a lot of headwinds. We went from 7 cents in March 15th of last year to $1.60 in the span of about 4 months. And we were churning through just so much profit taking, and then obviously the tide's coming out on the industry a bit. Now, what we've done since that is we've raised over $35 million in the past 16 months or so, and we've been deploying pretty much all of that back into the ground. And this money, we used to have to rely on piecing together small private placements. I'd be working the spreadsheet and chasing down subdocs from small mom and pop investors. Since last August, since we hit, we've gone 100% institutional. We've raised about $30 million since then, and we've gotten it from the likes of Eric Sprott, Keith Neumeyer, and most recently and most importantly, First Majestic Silver, which was a huge shot across the bow to, I guess, the rest of the industry, to show them that we're very much in play. Now, where we are today is quite interesting. As you'll see, I've got Santa Claus on there, and after the week and few months that we've had, it certainly doesn't feel like Christmas. But I'm not day trading, and I don't think you'd be listening to this either if you were looking for a quick flip. What we're doing right now at our point in development is trying to add value via the drill bit, de-risking the project to the point where something is saleable that a mid-tier or major mining company is going to want to buy us out. And that's what, certainly we've done that in spades, at least in adding value so far. We've got 32 drill holes at the lab pending assay, and we've got a PEA expected sometime by Q1 of next year, which, as I said, will be the single biggest re-rate potential that we've had since we got started a little over 12 months ago. So what is this project? This is the queen of the silver camps. This is one of the most significant precious metals mining districts in all of the U.S. at least historically. This time 100 years ago, this district was the center of the mining universe before World War I. Everyone's probably heard of the Walker Lane district. Not many people have heard of the Tonopah Silver District, which we're in right now, simply because it's been hiding in plain sight until we were able to consolidate it and start drilling, picking up right where the historic miners left off. This district, historically, it produced nearly at 100-to-1 silver to gold ratio. So this is about as silver primary of a district as you can get. And our byproduct is gold, which ain't a bad byproduct. We're in Nevada, which, as many of you investors are probably investing in it for gold, but Nevada is a state because of the silver endowments, and it's very much a state because of the significance of the Tonopah discovery in 1900. Many of you have heard about the Comstock lode. Tonopah is right up there. It's the second largest historic silver district in all of Nevada. And frankly, given what we're drilling and showing right now, we think we can very much rewrite the history books. If you guys go on Amazon right now, there are countless books describing the significance of Tonopah within the context of the mining world. Now, what we're showing is, and I'll give you a reason as to why it's number 2, not number 1, but we're showing that these history books will need to be rewritten when all is said and done. So some of you might have seen me present a year ago here. Back then, we just got our hands on this project, and we were called Blackrock Gold at the time. We changed our name back in February of this year, it might have been March, on the back of the Fraser Institute rankings, which after getting probably an email a day from investors saying, why don't you change your name to Blackrock Silver? It was these Fraser Institute rankings that really put things in perspective. And what that perspective was, Nevada ranked the #1 destination in the world to be in the mining business, at least from an investor attractiveness index. But what I started doing was I looked at where all the other silver was produced globally. So on the right-hand side of your screen, you'll see the Fraser Institute rankings, those 2 columns. Nevada, #1. Now, if you look at the top 10 jurisdictions globally of silver, you got Mexico, Peru, Bolivia, Argentina, Chile, all these South American countries. And I realized that what we have going on in Nevada right now, based on what we're drilling, is absolutely one of a kind within the silver business, especially given the fact that we're just hitting silver and gold, and at high grades at that. As I said, we're not doing any financial engineering on our silver equivalents. We're not putting lead or zinc or copper, anything of that. It's 100-to-1 silver to gold, and we're halfway between Las Vegas and Reno, with the highway going right across our property, and we're drilling on both sides of it. So this was a true discovery story. The district itself back then would have been in effectively the middle of nowhere in the desert. And it was discovered by a rancher as part-time prospector and his mule that ran away. And effectively the story goes, he caught up to it and stumbled upon this big outcropping vein at surface, which led to some of the most significant discoveries in American history, both Tonopah, Goldfields, Bullfrog. It really revitalized the state at a point where 2/3 of their population had left right after the Comstock had petered out, and they were almost losing their seats in the Senate. Tonopah back in the day revitalized not only, Nevada itself, but it helped revitalize San Francisco, given the action that was going on there right after San Fran had been hit by a really debilitating earthquake. Now, the story of Tonopah itself can be told simply on this bar chart here. And now I don't want to, no need to look at the numbers too closely, but all you have to see is that hockey stick chart up. Now, these veins were discovered by that rancher, outcropping at surface. He started leasing out claims, and all of a sudden you had the last real gold rush in America right before World War I. Within a few years, they were producing 14 million silver equivalent ounces per year, right before World War I came and knocked the wind out of them. But what you'll see, the real nail in the coffin for the district was in 1923 when they unpegged the price of gold and silver. Silver price went from about $1 an ounce down to 35 cents an ounce in the span of a few years. And it sent everything in the district belly up. And what's interesting about the district is it's pretty much all private land. So, the secret sauce behind what we're doing isn't so much in the exploration or in finding drill targets. The secret sauce was getting our hands in this in the first place. What you'll see on the lower portion of your screen there is what the district looked like in 1912. All those different colors represent different operating publicly traded mining companies. As I said, these were all of this land down here was privately owned. And effectively what happened in the late 1920s was a lot of big companies started coming in and consolidating all of this. Now, the purple claim package on your screen at in the larger map there, that represented the holdings of a company called the Tonopah Extension Mining Company. It started gobbling up everything of significance on the western half of the district. And that's significant for two reasons. One is the discovery was made on the east side of district, and this is an east-west trending corridor of veins. So they started mining the veins from surface on the east side. All of that production, that hockey stick production I showed you in the last slide, happened in the east side of town, and everything moved westward. The west represented the blue sky. The west represented where the last commercially operating mines were active right up until metals prices tanked. And it pretty much represented, all the good bits represented that new purple claim parcel there. Now, the Tonopah Extension Mining Company went bankrupt in 1930 due to all of the debt it had taken out to fund development. Now, why did they take out debt? Because they saw a significant amount of potential in developing the assets well beyond what they were doing in the day, meaning they were planning not years, but a decade into the future in terms of mining. When metals prices tanked, they couldn't pay it back, and someone picked up this claim package in 1930 and held it ever since. You'll see that yellow line going across the property. That's the highway that connects Vegas to Reno. Unfortunately, the last remaining member of that family that picked this asset up in 1930 passed away about a year and a half ago. We're the first group to go back in to get a deal on this property and drill our first drill holes in here. Since then, we've become the most active silver exploration project in North America. Our first drill hole was the best drill hole drilled in Nevada last year. We've since done 85,000 meters of drilling at the project in the span of about 14 months, and we're going to be delivering a maiden resource estimate by roughly year's end or so. Our only limitation now is just on one, our imagination, and two, on how quickly the labs can keep up with what we're doing. But as I said before, we've got 32 drill holes at the lab. We've got 4 rigs turning, and if you ever drive that highway, you'll see our rigs on both sides drilling. Right now we're next to a Chevron. 2 weeks ago, we were next to Burger King. You're not going to find a better infrastructure in any mining project. In fact, if you did, it'd be it'd be very, very hard pressed to do. So what have we done in the last year? I said we've done a lot of drilling, but what does that hit? We've now hit 10 veins, ranging in size from about 425 meters up to 1.5 kilometers in strike. Now, in terms of grade, we've hit absolutely phenomenal numbers. We've hit about 80 significant intercepts, and we're using a cutoff grade of 200 grams per ton. So that's what we think would be mineable grades. We've hit up to 4.6 kilos, 26 grams gold, multiple intercepts over 2 kilograms pure silver. What you'll see here in this polygon yellow unit here, this is the area that we're drilling out right now exclusively to incorporate in the resource. Now, the reason we're trying to drill this out as quickly as possible is, one, it's going to allow us to backstop our valuation, meaning right now, we've gone so quickly that analysts haven't been able to keep up with what we're doing. So what we want to do is show the market that we truly have ounces in the ground at really good grades. Obviously, being on private land in America is a huge, huge advantage. But we're also going to be showing all this upside because, we've hit 10 veins so far. We're only going to be including about 5 or 6 of them in this resource, meaning we'll have built-in upside too. And what we're trying to show with this drilling is that the juice is going to be worth the squeeze for us to keep the pedal to the metal next year and look at going underground, driving our own exploration decline, and giving us access to both sides of our property so we can start turning all of the veins on our project into Swiss cheese from underground versus from having to drill 1,500 feet above surface. So this is the area here that we're drilling out for our resource. What you'll see is a tightly spaced corridor of veins. This was the last commercially operating mine in the district when things went belly up in 1930 and the company went into receivership. And effectively, what we did early on in our drilling was just go for a proof of concept. That proof of concept was simple. We believed, and all of the historic reports said, that they did not stop mining because they ran out of gold and silver. They stopped mining because of the business aspect of it. Well, we've now hit up to 1.5 kilometers of strike extensions on these veins where they stopped mining. If you laid this area end to end, you'd have about 5 kilometers of mineralized strike, and at some really, really good grades and widths. The biggest vein in this one is called the Merton vein. This is the one that's 1.5 kilometers in strike. Now, all of these veins in this area, if you average out all of their intercepts, they average at about 3 meters thick. So on Merton, you've got something 1.5 kilometers in strike, 3 meters thick. And if you see top to bottom here in terms of this high-grade mineralization, it goes about 4 football fields. This is absolutely wild. The ounce potential here itself in Merton has a potential to target well above 100 million ounces when we're all said and done with it. Now, we won't be able to include all of that in the resource, but the potential here is still quite large. And then the best part is we've got 9 other veins that we've hit. I mentioned that we've got that polygon unit, but the actual vein that put us on the map with our first drill hole was the Victor target. And the Victor target is where we hit that 29-meter intercept of 1 kilogram per ton on our first drill hole, in addition to 2 other thick vein zones. What I'm showing you is just trying to impress upon you that what we've got right here is something that is showing scale, it's showing size, it's showing grade, and we've got nothing but catalysts lined up starting in the next few weeks here, ending through the end of the year with our maiden resource estimate that I think people looking at this now can stand to potentially make some serious gains. And with that, I'll hand it back.
Thanks very much for that, Andrew. Appreciate that exciting presentation. So why don't we try and go through and ask a question or two for each of our presenters. Let's start with Sierra Madre Gold and Silver, Alex and Greg. Maybe you can tell us, you recently acquired La Tigra from Grupo Mexico. Can you tell us a little bit more about that and also about some recent confirmation drilling that you did and what those results imply for the outlook for Tepic?
Yeah, absolutely. I'll start with La Tigra. As Greg mentioned earlier, it's something he identified a number of years ago. Grupo acquired that project when they acquired Asarco and really haven't done much since then. At one point there was 5,000 miners at site, which is, they're not going to be there unless there's usually a bit of gold there. For us, it is visually quite appealing. You can see right into the veins. You can see the widths that they're mining from. But again, no modern mining techniques. So we've done the topography. We're currently trenching. We've done over 500 samples. And we're going to be drilling pretty quickly. So it's one of these projects that kind of fits in really well with that hub and spoke scenario. It's going to be really high grade, at least it was historically. So if we're looking at Tepic and La Tigra as kind of 2 points where we'll have a centralized hub, the mineralogy fits in quite well. So we're quite excited. I think this project has the potential to really surprise people in terms of what we'll be able to, deliver in terms of the drilling. And we're excited to get started with that. So we started baseline studies already. Environmental assessment for the drilling permits are in. So we're expecting drilling, to start, towards the end of this year. At Tepic, Peter, as you mentioned, we announced 20 drill holes. Those were confirmation holes. They were RC. We had a pretty good idea of what we were going to be drilling into. It is a historic resource. So we really wanted to get that really high level of comfort of the data that we had from the previous operators was valid. And we got 100% recovery. And I think we're within 99.8% grade, which is just excellent. So we'll be able to use 100% of the resource as the basis for the upcoming NI 43-101 resource report that we'll do. So that historic resource, the 10 million ounces or the 18 million ounces, depending on which cutoff you wanted to use, was over 3.5 kilometer strike length. And we're actually up and over 12 kilometers of strike. So we have some really good potential to kind of move forward. We are trenching. I think we're going to be trenching. We announced 2,600 meters, but it's going so well, we're just going to continue. And then from there, we're going to drill. We're permitted for 47 holes right now. We want to do a lot more. So again, we've applied for those permits, and if all goes well, we'll literally drill until we can't anymore, and then come out with an updated NI 43-101 number. And then from there, if things go well, then we can start moving directly into engineering studies and hopefully come out with a PEA towards the end of next year.
Okay, I just wanted to maybe ask here, when might we be able to look forward to an updated resource in that case after all that drilling?
Yeah, the goal was end of this year, but as Andrew mentioned earlier, the assay labs are a little bit slower than we would have liked. So we're okay with that. But Q1 of 2022 is my expectation, to be honest. That timing should work out well in terms of our drilling. They're not deep holes, so Peter, we can do one a day. We're going down anywhere 30 to 120 meters. So it's all relatively easy at surface. The RC, we were pumping out a hole a day. The diamond will take a little bit more, but since we're doing a combination of both with 2 drill rigs, it should happen relatively quickly.
Okay, well, thanks very much for that, Alex. I appreciate that. And we're going to jump over to Southern Silver now. Rob, just wondering if you can give us an idea. You summarized recent drilling at La Bocona. What do the results imply for that area? And well, let's see if we can jump to something else afterwards. So maybe you can address that.
Okay. Again, I'm really looking forward to seeing the updated resource in the Mina La Bocona area and to the south in the South Skarn. We tested a cumulative 850 meter strike length along the eastern side of the Cerro. We've got a number of high-grade assays that seem to be forming the basis for, or will form the basis for the mineral resource. Again, what I like about them is that we found in our metallurgy that our lead concentrate is the highest paying concentrate that we get out of the flotation circuit that we've tested. And when you see many of the results on that eastern side, they not only have generally higher average grades than certainly the average grade of the deposits that were identified in the west, but they also have a higher component of silver and lead mineralization. And so I think that's beneficial because when you start looking at NSR values for deposits, essentially what you're going to get paid by the smelter for your ore, that ends up being a good thing to have. High grade silver or higher percentage of silver and a higher percentage of lead in your polymetallic mineralization. So I'm looking forward to that. I'm looking forward to again having that higher silver bias and having and certainly locally in that Mina La Bocona area some very, very high grade mineralization which will help help the project move forward. It's also relatively shallow. And so within 200 to 300 meters of surface, and that can be mineralization that can get to a mill first. And so in terms of the sequencing that you think about for production scenarios, we may end up starting on the eastern side of the Cerro as opposed to on the what we were originally modeling and thinking, which was development obviously exclusively on the western side. So yeah, those are the things I'm looking forward to.
Okay, so just quickly, you mentioned, I think that you're looking towards a resource update in Q4 and then a PEA in Q1 next year. Did I get that right?
Yes, yeah. I mean, we are in the process of doing the mineral resource update. I'm anticipating being able to release something in the coming weeks. Hopefully by the end of the month, but maybe it'll be a week or two after that. As I think everybody on this panel sees that you have these plans to be able to do something, and then life gets in the way, and whether you drill extra drill holes, or the labs are backed up. So that's the plan right now, is within the coming weeks to have a mineral resource update that'll incorporate the eastern deposits into the full resource estimate, and then it'll be about 6 months after that. So probably towards the end of Q1 that we'll have a PEA done, and that will be all encompassing on the full deposit that we will have identified today.
Thanks very much again, Rob. I appreciate that. And we're going to jump over now to Dolly Varden. Sean, if maybe you can provide some detail on the current drill program at Torbit, and exactly sort of where are you drilling? What are you testing for?
Okay, yeah, great question, Peter. So we're on to the 24th hole of the drill program. 15 of those holes were around Torbit. So we've actually got a great video that we just put up on our website that's live from our core shack, where we walk our shareholders through what our core looks like. We show our 3D model. We show areas that we're infilling. So I would really recommend anybody who's interested to go check out that video that's up on our website. So the bulk of the drilling to date has been focused around Torbit, so 15 of the 24 holes. And then we've looked at 3 exploration areas, Medallion, Red Point, and Syndicate, where we've put about 3 holes into each area so far. So we're around 8,000 meters thus far. We've got another 2,000 meters that are budgeted. That should take us till the end of October. And so that's what we've done to date, Peter.
Okay. Can you tell us, I guess maybe what's the next sort of most interesting area that you're exploring?
Well, there's a big difference between what looks visually appealing and what the assays tell us. So, so much of what we're going to do next is going to be based on what we get from the labs here. But again, Torbit keeps delivering, and we've got these historic grades of roughly 300 grams. I've got the confidence that those might be understated. Some of that was relying on drilling that was done back in the 1960s. We can't see through rock, but I've got early indications that we're going to be surprised to the upside based on drilling that we did in 2020. And yeah.
Okay, super. One last thing, maybe you can talk a little bit about regional M&A and give us sort of your thoughts on, I guess things going on in that respect in the area, and what it might point to in terms of potential going forward.
Absolutely. So, the Triangle has seen like a flurry of activity in the last 5 years, ever since Bruce Jack got into production. We've seen Newcrest come into the area through a 70% acquisition of Red Chris. Newmont's been very active in the area. They had $500 million takeover of GT Gold here. So we've seen a flurry of activity. And then if we look at the southern end of the Triangle, where Dolly Varden is active, we were the only explorer in the area in 2020. And this year, there's been 5 companies that have been active with drill programs. And so we've got a maiden discovery and an inaugural drill program to the west of us in Goliath, with some economic grades over some very, very good widths. We've got this competitive tension with a lot of majors like Yamana that have come into the area through investments into companies like SCOT. So it seems like there's a mandate at the board level from the majors to invest in safe jurisdictions, to solidify development pipelines. And I think the Golden Triangle really offers everything you want to see, from grade to size to stable rule of law. And we're right in the center of that flurry of activity. and we want to leverage that into a maximum opportunity for our shareholders. Whether that means we are predator or prey, I'm not sure at this point. A lot of that is going to be on the back of how successful this year's drill program is, if we are going to go out and try to consolidate the area or be consolidated.
Again, thanks very much for that. I appreciate it, Sean. Let's jump over now to Silver VIPR. Steve, can you tell us a little bit about what kind of work is being done on the ground this summer to advance the project?
Yeah, I mean, we've been drilling steadily the entire year with one rig. It's been focused predominantly now on expanding Ruby at depth and along strike, especially to the south. Like I said, we're going to be testing some new targets here moving forward. One of them, the Peridonis target, was actually just identified while they were cutting the lines for that geophysics program. They settled onto this, pretty, decently wide at surface breccia structure, which is exactly what El Ruby's, main high-grade structure is, which, has piqued our interest. And we saw with the XRF gun right off the bat that it's mineralized, which is also always a good sign here, because a lot of these structures at surface on this deposit, they don't have the grade at surface where they're exposed. It tends to be, as you move deeper into and underground. So, we've been continuing to drill. Like I said, we've got this big 3D IP program coming up. It was, I think we've talked about how things don't always go to plan of when you're told to expect things to get done. This program, I think maybe last time we were on here, was supposed to be getting done in August. Again, with COVID, there's been permitting things, getting the equipment into Mexico, but they have finally got that permit in place. There's one job in Mexico ahead of us. So now it's happening at the end of October. We saw it again. I mean, we saw it in the past when we were preparing for a resource and had to wait for a LiDAR survey for over a year. So, and again, it was all related to getting equipment into the country and getting stuff done. But we're very much looking forward to that, the results of that 3D IP to really light up structures, at depth and give us that extra layer of information. But we're going to continue to drill throughout, explore on, like I said, El Ruby right now. Then we're moving the rig up to La Colmena, then to Peridonis, and then probably to the southern end of Macho Libre while we wait for that geophysics program to get done on Ruby.
Super. I mean, if are there areas, I guess, around El Ruby besides the ones that you've mentioned that you've kind of got your eye on that you'd think may be targets and then sort of, medium term future?
Yeah, I mean, there's a lot. I mean, again, you've got Ruby North, which we put a couple of holes into. It seemed to have more copper in it and had some sniffs. But again, there's lots of targets there that we haven't followed up on. El Molino, to the east of El Ruby, is a parallel system that again has kilometers of strike length potential in it. You've seen sniffs, down in the historic area of drilling that there is a parallel structure. La Colmena would sit in that same structure, and then there's a lot of other ones that our guys are constantly going up, and we've got an ongoing mapping and sampling geochem program happening. There's stuff at Macho Libre, which is only a kilometer to the south of El Ruby. Again, that's got 2 kilometers of strike length in itself that we've only tested a very small portion of it. It's a very target-rich environment, and most of it has never been tested. I mean, and before we got involved, the bulk of the project, when Minefinders had it, most of it wasn't even mapped and sampled. They focused on that area historically and ignored most of the project. And so, that's why we got involved, was because it was such a target-rich. We knew we were going to make, new discoveries on this project. The first one was El Ruby, but I fully expect to make, multiple additional discoveries on them as we go along.
Sounds like you're going to be kept busy for quite some time.
Yeah, and again, I mean, like similar to Dolly Varden is, are we going to be predator or prey? And I would love to, and I think it probably will be a combination of both. I think we'd like to add at least one additional asset into the company to have as a spin-out asset for when we get bought out by one of those major mining companies. We've always seen a lot of value in that for our shareholders. Is essentially a free dividend of a new company as you get bought and can spin out a project. And there's a number that we've been looking at and diving into fairly closely that we like. Obviously we won't do it unless the deal makes sense for us and our shareholders, but I think we would like to have at least one additional asset in the company in Mexico, and we'll see where we go. But again, I think there's going to be a flurry of M&A coming in the silver space, And again, there's not a lot of quality names out there that are in front of the majors. And I know we've done some site visits with majors already. We're very much on their radar. They're very interested in already, based on the resource that we have, but also the potential for it to grow.
All right. Well, thanks again, Steve. I appreciate that. And now for Blackrock, Andrew, you've recently put out some impressive +1 kilo results, silver equivalents in some drilling. And can you maybe address that and tell us a little bit more about that?
Yeah, I think since we started drilling, and I'm thinking about all the news releases we put out, I don't think we've had one news release where we haven't had at least 1 kilogram plus silver equivalent intercept. Our last news release from about a week or two ago, we had 6 of them, which was our highest concentration of 1 kilogram plus intercepts we've had to date. Now, what's really interesting is when we started drilling a year ago, we were doing that proof of concept. So we were literally just picking up right where the historic miners left off. Obviously, if we hit the vein there at good grade, good intercepts, we kept going, and then we did some big step outs. All the drilling we're doing right now is trying to show the continuity between the step outs that we've done, and that's what's going to be feeding the resource. So the fact that we're hitting such a high concentration of high grade hits, I mean, it shows that we've got the monster by the tail now and are just drilling right into the guts of this thing. And that's exactly what we want to be seeing. I mean, high grade's obviously better, but we don't need to hit it out of the park with every drill hole to get the resource that we want to get. And right now, I mean, we're almost done with our resource definition drilling program. We've got 4 rigs at site. That aspect of the program is going to be done in the next couple of weeks, at which point, it's just a matter of having these assays come out regularly, over the next few months and handing everything over to the consultants. And the consultants have already gotten started. So they're going to be modeling as they go, meaning, we don't need to wait for everything to come in for them to get started. So we're hoping that all of these high grade hits that we've had so far and everything that's pending at the lab, all of that gets thrown into the stew that's going to make our maiden resource. And it should be coming out sometime, close to Christmas too. So there you go with that other Santa Claus reference I had in there.
All right. You tripled your land position in the area. Can you tell us a little bit about that?
Yeah. Well, it's amazing that you can be in a silver jurisdiction like this. I mean, one of the most largest silver districts in North America, and find unstaked land. And what we've done on the back of our drilling, I mean, we didn't really rush out to do it, but the more and more drilling we got under our belts, the more we realized the importance of some of the structural trends that are happening in the area. And we just simply followed some of the key concepts that we've sort of gotten our fingers on, and staked about 20 square kilometers additional ground. So our original land holding was about 5 square kilometers. So yeah, we've tripled, if not quadrupled, our land holding, and we think we've got the extension to the district. Everyone thought the district just went east-west. Well, it turns out, or at least it's our thesis, that it goes east-west because it's following the margins of a caldera, so the blow-off top of a volcano. And we think that we can trace it actually around that circle, and that's what effectively the area we've staked. So we're already underway on doing some geophysics up there. We've got some very juicy targets. I think we'll be talking about those coming up over the next few weeks in a news release. But what we're showing right now is we've got this district proper, which we've showing significant expansion potential on, picking up right where the miners left off. And then we think we might have a new concept that may be a completely separate new Tonopah Silver District directly to the north. And yeah, we're waiting for some images to come back on that, but it's very exciting. Blue sky and, this resource to backstop our valuation.
Sure. We've talked a little bit about with the other presenters about M&A. Can you address that a little bit? Do you have any ideas?
We just presented down in Beaver Creek, the Precious Metal Summit, which was the first in-person conference that we've attended since we hit. I mean, really that anyone's attended since PDAC in March of 2019, which we hadn't put any drill holes into it. What I can say is it was pretty much all corporate attendees down there, meaning it wasn't the institutional investors. The ones that made the trips were the corporate development heads and CEOs of major, mid-tier, and development stage mining companies. And in the silver space, I mean, your whole narrative about there being so few companies, I mean, that's true. But there's even, fewer companies when most of the silver primary producers out there are having the same issues. Look at First Majestic, for example, or Hochschild or Fortuna. They're in these South or Central American countries which had long shutdowns. They've got necessarily maybe some rule of law or taxation issues, or there's just safety issues in general. And a lot of these companies may not necessarily be that command that M&A premium that being in Nevada off a highway and on private land may give us. So we think our ounces in the ground will be worth more than literally anywhere else on the planet. And in the silver space, I mean, First Majestic taking that little small toehold in us, not only did it show the market that we're in play, but that really, our data room, really sort of just went straight up in terms of inbound requests from majors and mid-tiers wanting to walk the ground, see what we're drilling. And I think, what we're trying to do to get this resource out as quickly as possible is because I'd be afraid that someone makes a takeout offer on us before we're able to at least crystallize the value of what we've done by at least getting these an ounce in the ground valuation and going from there. I think it's safe to say that we've got a target on our back right now, and we're just trying to add as much value as quickly as we can.
Well, thanks very much for that, Andrew. I think with that, we can perhaps wrap up. Again, I'd like to thank everyone who presented today, and I'd like to thank everyone who took the time as well to attend, and certainly look forward to doing this again sometime in the near future.